which it also said helped its gains. And finally,
Good morning.
motorcycle maker reported an unexpected drop in shipments in the fourth quarter. Deliveries fell by 4% in the period. Analysts were actually expecting a 22% increase. That was the consensus estimate. The quarter was disappointing pretty much across the board. Sales of $496 million also fell well short of the $749 million called for in the average analyst estimate. Their shares are slumping by 6%. Let's broaden it out once again now and dig deeper into the wider markets as investors remain skeptical despite the sharp tech rebound. David Miller's joining me now. He's the Chief Investment Officer at Catalyst Funds. And David, I was saying earlier to our Brian Sazzi, here we are. The S&P 500 is near a record, right? We've seen stocks sort of rise here. It doesn't feel like it, though, does it? I don't know. What do you like? The sentiment here, just like we were talking a lot about the vibe session or whatever, that people didn't feel good, even if the economic numbers looked good. Right now, it feels like we're in a little bit of a similar situation with the market. What do you think?
Yeah, I think there's a lot of moving pieces to that dynamic. Certainly, the market has kind of climbed a wall of worry over the past few years. It's actually, one of the most persistent rallies on like a 3-year basis or 4-year basis we've had in quite a while. However, I think there's another dynamic to this, which is what's going on with the dollar and dollar debasement. And if you look at the stock market, say the past 20 years or so, it's not actually up versus if you price it in gold or something of that nature. So there's certainly an argument that if the dollar loses value, just to keep pace, the stock market has to go up proportionally. I think that's part of what we're seeing.
Interesting. Okay, so do you feel like the reasons the stock market has gone up or not? I mean, there are fundamentals to support increases still, however, right?
Yeah, absolutely. I mean, if you look at overall earnings growth, they've been pretty good. I mean, certainly there's been concern around software news, but it looks like energy is having a bit of a comeback. So there certainly are some fundamental reasons for that. And I mean, gold is certainly up.
All right, let's get ready for the opening bell.
Inflation story.
Right. So the software sell-off, would that be something have you come in and bought some of those names?
So we haven't. So I mean, there are some real concerns about some of those software names. I think at the end of the day, AI is going to be a net positive for some software names, and others it's a huge net negative where they can actually be outright replaced.
Okay, don't need Valentine's Day sale.
We've gone into some ServiceNow, and ServiceNow
All
is one of
right.
those companies where I think they'll probably be a net beneficiary of AI, whereas
Wells Fargo's up a bit this morning.
it's pretty easy to replicate.
Actually, it's down a little bit. Well, it's up, technically.
Okay, so what's the difference between a Monday.com and a ServiceNow in terms of like why does ServiceNow have a bigger moat?
Boeing is higher. We put credit spread on yesterday on Boeing to finance some calls. I didn't buy the calls yet.
Companies that have large customer service operations. So I think that's
Boeing.
that ServiceNow has, whereas Monday.com is a relatively
Okay, Datadog was supposedly up 20% this morning. Datadog.
at least for say 80-90% of the use cases without that much.
Okay, this is one of the reasons why I haven't been doing iron condors. I'll sell credit spreads once I see what direction the markets are going to go. You can do credit spreads the day of earnings and still pick up a lot of implied volatility premium that's built up prior to earnings.
So we haven't rotated our portfolio a whole lot.
So,
A little bit of energy.
yeah, this is a good example. I mean, this thing jumped 20%.
But if you look at our portfolio more overall, I consider it to be more like durable compounders.
What does that mean?
What that means is more companies like Visa or a MasterCard.
Okay, this is Datadog, not Apple.
Strong notes that consistently grow their earnings with high margins.
Hope everyone had a good evening. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday. The days are just flying by. Just seems like every time we get started, it's Monday. We just start getting a trend, and then it's Friday already. All right, there goes Microsoft. Microsoft's on the move. Microsoft. New York FANG components look really good this morning. New York FANGs.
Technical effects of what happens when people get, positioned in a certain way and then have to make up for that. So how do you square those various things?
Sure. So I guess there's lots of things moving at the same time. So I'd say you have the deep currents, which are things like central bank buying or deficit spending on the U.S. federal government level. And those are very strong deep currents. And they likely will take gold higher in a big way in the next 3, 5, 10 years. But then you also have some of these things like the recent Fed appointment, which make it unclear. Are we headed for a stronger dollar or a weaker dollar? They're kind of saying two different things. It's not clear. It's clear what Trump kind of conceptually wants, but it's not clear how much Fed independence there really will or won't be. And increases in margin requirements, some of these violent moves like we had in gold or even more so in silver, I think will create a very volatile rally over the next 3 to 5 years. But it's going to be one where you have to wear your seatbelt.
Okay, Microsoft is ripping here. Microsoft is going.
A similar category.
Microsoft on the move. All right, software stocks were heavily oversold. It looks like people are picking up on that. Okay.
From crypto at one point was the real meme stock equivalent, whereas now you have crypto, but you also have meme stocks, you have gold, you have silver, you have a real bedification across the economy, and I think that has taken a lot of the capital flows.
Microsoft is going here.
That's a really interesting thesis. I mean, we see it also in the single stock movements, not even just meme stocks, but other types of stocks that normally you wouldn't think would move that much are moving a lot. Do you think there's also, because of the crypto washout, that has pushed a lot of money into some of those memes instead?
Yeah, well, I mean, I think memes have attracted a lot of money that might have otherwise gone to crypto.
Gotcha. So does that mean you don't want to be positioned in crypto?
I think crypto is a very binary story. It's very unclear what that future will look like. It'll either be much, much higher 10, 20 years from now, or it could be that Bitcoin was a fad and or it could get hacked, or people might just not have that appeal to it like they did previously. It's just too hard to tell, but I think it's a great investment.
Okay, we got 4 minutes to go. 4 minutes to go. Microsoft on nice follow through here. Nice pop on Microsoft.
I think that's definitely a good way to look at it.
I don't know if it's still that way, but maybe. All right. Thanks so much, David. Appreciate it. Coming up on Yahoo Finance is opening bid. Our executive editor, Brian Sadler, in such a rush to get to you. Can't
I'd be
get the
excited
title.
too when it comes to me. I'd be really pumped up about it.
We're pretty pumped up.
You are pumped up. We're gonna talk all things software. We're gonna go into some Bitcoin. Top of the show coming out with Super CEO. Excited to talk to him. See if he has this hack for me to get into zero inbox every single day of my life. I think he's the right one there.
I am so far from that.
Yeah, I've seen your email inbox, Julie. It can use a lot of help.
I really need that.
Believe it or not,
I'll
Julie.
be listening closely. All right, thanks, Sas. That does a morning brief. Opening bid is next.
Okay, first 15 minutes, as you know, the only thing I'm usually doing is taking profits off the table. I want to wait until 9:45, 10 o'clock to see if there's any trend or if we're going to start off with sideways chop. That's what it's been like for the last few weeks. We start off and we move in a choppy sideways pattern, sometimes with a little bit of bias one way or another, but we're just below 7,000. So a lot of people are anticipating, including myself, that we could pin in this area until options expire and we can move through, hopefully through 7,000. Okay, these commercials are getting stupider and stupider. Is that a Scrabble word, stupider?
Dr. Estelle is comforting and didn't rush me. And you can see me today. Booked.
You've got options.
And maybe TSM is part of the reason. Saw a big jump in sales. They report those numbers on a monthly basis. Give me the breakdown here on Taiwan Semi, because the AI trade is it continues to ramp to the upside here.
Yeah, it certainly does. We are seeing a nice pop for Taiwan Semi shares over in Taiwan overnight, and that comes off the back of a 37% jump in that revenue. So starting at January off to a good start for 2026 there. That is at 12.7.
Okay, Microsoft on the move. You can see Microsoft is definitely cruising higher. Okay, we got that reversal finally. I could sell some put credits. I already have MSFU shares. Little gun shy on selling puts, but I got a feeling if I were to look at open interest, there's a lot of puts being sold down below. Oh, you know what? Let's take a look at Chris, if you're listening. Take a look at Flow Patrol. Let's see what most active. Okay, we've got, how much we got? Oh, we're about to open here. Oh, we're just opening. Okay, open. Okay, Microsoft just came back down. Unusual options positions. Let's see. Bought to open. Okay, there goes the futures. Futures on the move. All right, I'll come back to this in a minute. Okay, I'll come back to that in a minute. Okay, little pop. Give it a few minutes for the markets to give us a true direction. If we get any kind of trend here, it would be nice. Let's see, what do I want to take off, if anything? I usually look at things that are up, positions that are up over 50% as potential profit taking overnight, up 50%. Okay, Netflix is trying to push higher, so maybe we get Netflix back into the 90s. There goes Tesla. Tesla's on the move. Tesla popping. Okay, Apple up. Netflix.
From its record highs, and even the small caps getting a little bit of a boost here this morning on a relatively muted day, despite some downbeat data that we got out of retail sales, which is lagging numbers. Remember that, but relatively muted open. But we're all in the green. The dollar's a little bit weaker. We've got crude oil up about a quarter of a percent. 10-year yield under 4.17% now. So some weakening.
Okay,
A little bit of a push into treasuries this morning. We got some auctions today. Too, about $58 billion with a 3-year auction at noon Central Time, 1 p.m. Eastern Time. So that might be a key catalyst today, along with those earnings. All right, let's get to our next guest and look for the first moves of the open. We're going to be joined by Diane King Hall, the co-host of Fast Market with me. Diane, we're talking some names that are moving post-earnings. Coca-Cola, we talked about this yesterday on our show. The bar was
okay,
really
Tesla
high.
looking good.
Mind-boggling how much the staple
Okay, let's go look. Microsoft, a little dip there. Microsoft, Tesla. Tesla on the move. Tesla's on the move. 3 white soldiers off the bottom. All right, S&P continues.
Revenue came in at 11.8 billion. That was weaker than expected. The street was looking for more than $12 billion. So, and they also issued a modest growth forecast. So that's weighing on shares right now. Off a little bit more than 8%, but they were indicated lower than this in the pre-market. So not doing as bad as the indications were in the pre-market. It seems like investors are focusing on the
Data dog looking good.
Consumer demand may be under a little bit of pressure here. When you look at how
Okay.
organic revenue growth,
NASDAQ looks good. Remember, we have a lot of software stocks that are oversold, way oversold, like Microsoft.
So that reinforces these concerns about slower consumer demand. There's some trends that analysts have been looking at, but
NVIDIA pulling back a little bit after being higher this morning. It's still up, trying to stay up a buck. NVIDIA. Okay, Boeing. Boeing, nice follow through. Okay, we have put credits on Boeing. Boeing.
There were some standouts in premium brands, and I think, this lines up with a theme that I know you're going to be talking to Mish Schneider coming up.
CRML. Okay, the critical metals, CRML. All right, coming off the 50-day, CRML overdone.
So they're willing to pay up for the perceived healthier or premium brands. And the
MP Materials also bouncing. USAR was fairly active yesterday. Look for a follow through on USAR. Critical metals.
Latin American volume was a little higher than that, but just by 2%. So does signal some stabilization after some recent softness that we saw in those markets. Europe is being flagged as an area of continued pressure for Coca-Cola. But again, where you're seeing some of the strength, more of the strength is in what's perceived as healthier. In fact, Coke Zero Sugar, you saw volume growth there, 13%, Tom.
Yep, maybe a little bit of selling, maybe some profit taking after that massive rally that we've seen in this name also, but it is off of those pre-market lows. At this point, next one we got up here, Diane, on semi. Stocks actually rallied. It's been pretty volatile since releasing those earnings. It seemed like it was a decent report, but maybe a little bit light on guidance here.
Yeah, indeed. And that was one of the things we saw the stock initially get dinged off the back of its results indicated in the pre-market. It was actually indicated under pressure. But right now, as you mentioned, it is higher today. So it's adding to its gains year to date. And so I guess investors are kind of shaking off the worries that they have about
Okay, USAR looking good. Tesla ripping here. All right, Tesla.
On earnings versus expectations, adjusted EPS was actually a beat at 64 cents per share. She was looking for 62 cents. Revenue coming in essentially in line with expectations at 1.53 billion. Now revenue did fall 11%. There was a bright spot in their smaller intelligent sensing unit. You saw year-over-year growth there, but you see these big declines in power solutions, down 11%. Analog and mixed signal down 9%. Intelligent sensing, although it's down, it was better than it had been previously, and better than what the expectations were. So there are the management tone in terms of their post earnings call where they said there's increasing signs of.
All right, so far so good, looking good.
They tried to kind of point to where the
S&P pulling back.
to some that essentially suggests
Okay, let's look at hedge flows. All right, hedge flows currently just kind of looks like a little stickiness right in this area, 68.70 resistance. We're starting to pull back a little bit. Okay, let's see what 0-day looks like. There's not a lot below this level. Let me zoom out. Okay, so it looks like support down here at 69.20.
It's true. And listen, they had strong results. I was talking to Jay Woods earlier about the Freedom Capital Markets. And, he talked about how investors have reacted despite strong results for Palantir. But Daiwa's upgraded it to a buy from neutral. So they're coming off the sidelines of this. But this is an interesting one in terms of where they see the price target. The price target they have is 180, which does obviously signal upside from here, but it's down from their prior price target. So overall, it does signal that they see some greater confidence in the growth story here for Palantir. But it's interesting to see, kind of that double-handed approach to this, upgrading it to a buy, but trimming their price target here on this one. They highlight the U.S. operations as a primary driver, and then they point out strength in both.
Okay, we're moving a bit lower here. We got support down below. Not looking for big moves.
The battle continues, Diane. Valuations versus that growth rate of 70% last quarter. So, battleground stock becoming the theme here in Palantir. All right. Thanks to Diane King Hall for joining me. She's the co-host of Fast Market with me. But coming up after the break, we're going to get a breakdown of a busy week for the eco data, the importance to the current market as stocks kind of gyrate around the flat line now. Opening bell. We'll be right back.
Okay, everything got slapped. Just got slapped. Okay, we see a lot of profit taking. Tesla, Microsoft. Okay, so you don't want to chase. You want to look for a trend after 9:45, 10 o'clock. We do know that software is oversold, so Watch it for more of that. Robinhood has earnings today. Robinhood. Netflix still holding up fairly well. I don't know what it is about that song. It really bugs me. Everything bugs me. Getting old when everything bugs you. Okay, Boeing off the high of the day. Boeing.
It should open up and should be interesting. But I just think it's this funny game of like $40 billion is a massive IPO. And yet it's a tiny sliver of what they're deciding.
Let's see what's going on. ARM Holdings. ARM Holdings still going. ARM Holdings.
Guys, I wanted to get to a story we brought at the top of the hour, of course.
ARM. Okay, let's check out ARM Holdings. Pushing into the Kirby. ARM Holdings.
Shoring up the contract, tightening things, and addressing many of the concerns of that Warner Brothers Discovery Board of Directors, so that the $2.8 billion break fee is now a separate payment. They eliminate a potential $1.5 billion financing costs with the debt exchange, and on from there. I want to bring in Jerry Cardinal. He's the Redbird Capital's partner, founder, and CIO, and of course, importantly, a partner with.
Okay, we're starting to bounce right now.
Continued bidding for Warner Brothers Discovery. Jerry, good to have you this morning. And let me just start over with the bidding itself. You have enhanced your offer. You've added this ticking fee. I just noted some of the other key parts of it, but you did not increase the overall dollar value for what you're offering Warner Brothers shareholders. Why not?
Well, look, what did we do today? Well, all we did today is continue to reinforce and perfect our
ARM Holdings continues.
Our offer that we submitted back December 4th, that the board still really hasn't addressed from a value or certainty standpoint. You know, what we've done is we've perfected it by taking off the table all of the, what I call more clerical items that they have been using to suggest that they're not going to engage with us. So we made it very clear that
Follow through day 4 on ARM Holdings.
Netflix, we will pay that immediately to Netflix. Take that off the table. That does not come out of what we're paying to my brother shareholders in our $30 a share all cash offer. We will backstop the exchange offer that they need to execute by the end of the year. And if that fails, we will backstop paying.
Move your stop up underneath today's low. All right, watching the S&P.
They have a short-term $15 billion bridge loan that need.
Lost your audio.
Jerry, we seem to have lost Jerry's audio.
NVIDIA down. All right, so the New York Fangs are mixed at the moment. We did have a nice bounce yesterday, so let's go through the list. All right, New York Fangs are taking a break inside the top 25% of yesterday's price action. Stochastic, MACD, RSI, all trying to turn, so we need to see this improve. Microsoft had a nice start. I would think that any moves to the upside, you're going to get some initial selling, some profit taking. First half an hour, first 45 minutes, that's what I would do if it was up big. Stochastics, MACD, everything's turning though. RSI is rising as well. Microsoft looks like a pretty good candidate. You can try MSFU, okay, for a swing setup. Okay, I would do that. This is only $30, so that decent amount of control over Microsoft if it does manage to move back towards the 21-day. The 9 EMA is right overhead. 50 days above that. So Microsoft definitely looks good for reversal. Everybody knows that software was way oversold. Oh man, I hate this new interface. IGV. Okay. IGV software. Okay. Could sell some premium on this. What would that go for? Let me see. Let me see what that looks like. IGV. IGV. All right. You can notice that all the New York Fangs, for the most part, are over on the left. Okay. That's telling you that puts are expensive, calls are cheap. Okay, all the New York FANG components on the left side of the screen. So that's telling you your advantage is looking for upside. Your calls are cheaper. If you buy puts, they're going to be more expensive. Okay, so a word for the wise. Let's see, IGV. Okay, that's way over here. IGV, look at that. 0.4%. Buying call spreads in IGV. I might do that. I might actually do that. IGV. It's a IGV. Is that leveraged? I think it's leveraged, right? IGV. No, it's iShares Expanded Tech Software Sector ETF. Okay, so if you think like I do that this is way overdone, this is one way to do it without buying individual names. For starters, that way you don't have a whole bunch of new positions that you have to manage. If this follows through in the next few days, we'll watch for stocks like Microsoft to build higher highs, higher lows. Okay, let's see what May looks like. May, June. I like June. I've been buying a lot of stuff in June, so I don't get surprised like I did on Friday. I got 500 shares of IWM assigned. Just a word to the wise: if you get assigned and you don't have money in your account, in the past that would have really freaked me out. But as you grow your accounts, just know that the brokerage account, for the most part, will assign you shares, even if you don't have money to cover it, and you have a chance to get out, hopefully at a credit, at a profit. So that's what I did Monday morning. Got up really early and put in a sell order. Managed to get out above 265. I got assigned at 265.02. Let's see. What do I want to do here? All right. So IGB. Okay. There's a lot of trades out at, let's see, 100.
Yeah, look, what we've done today is given the board a clear pathway to engage with us. Under Delaware law, they have a fiduciary responsibility to deliver the highest value and certainty to their shareholders and or engage in conversations that could lead to a superior offer. So we have done everything to make that very easy for them. We are in the position that we're in right now, which is, we've gone directly to shareholders and we're making our case to shareholders. Our deal is
okay. I bought the IGV 26 Delta, the 100 strike call. I think we could get back there by June, or at least a profit between here and there. If we can get 50% there, those calls will do very well. So IGV, I bought the 100. So 26 Delta. Okay.
Now that, if you remember the old days, David, where you had these Pac-Man preferreds that would gobble up the equity in these deals. Yeah. Discovery Global is the Pac-Man to Warner Brothers shareholders' equity here. On the studio and streaming deal, they went all cash $27.75. But the reality is it's not all cash because you have to underwrite Discovery Global. Now, what they're suggesting is that they put $17 billion of debt on that. That is over 4 times leverage. Versant, which is the ideal comp. You can say, everybody can say, don't look at Versant and everything else. It's the obvious comp. It is right there for everybody, and it's market tested. That debuted
I get it. But Jerry, they're going to come back, I'm guessing here what the Warner Brothers board might say. And it's possible they'll say the value of that spin is as much as $2 a share, even with the debt load on it. And in part, they might say some of the parts, CNN worth so much more than a multiple of 3.5 times $600 million in EBITDA. TNT worth so much more than that. And so they can easily make an argument it's worth, let's call it $2 a share or more, and therefore it's equivalent. And they say, sorry, guys, we're still not interested.
No, that's not how the math works, okay? They've already said in their most recent filing that,
No, David, that's not how the math works, dude. I like that. I like that.
And so, but the point is,
all right.
They cannot.
So I'm just going to scale into this. I'll do 5 at a time. Let's see how we do with IGB. See if I can build a position.
whatever recapitalization happens at Spinco adversely affects the cash that goes to Warner Brothers shareholders on studio and streaming.
No, absolutely. And in fact, they did point out in the latest proxy, if you were to take all the debt off, it would value the Netflix deal at 21-23. Now, I don't believe in any way that is going to happen.
Let's not even go there. If you just do it where Versant is, it drops it to 23.
Jerry, you have to keep bringing up Versant. I mean, it's painful, man. You know, it's the parent company. We're trying. 3.5
Okay, so I think Faber's had a bad night or something. He's like very argumentative. He's usually not that argumentative. Okay, so I just posted this in the trading room. Okay. Here's IGV. Look where it is, way over here. Okay, extremely oversold. Extremely oversold.
Get a little bit more of a breakdown to the downside. I'm looking at 69.10, and then to the upside, 70.10 to the upside as a major area of resistance. Those are all being based off of options flow from earlier this morning in the S&P 500 options. So kind of a rotation. I'm a little bit cautious here at these levels of time, just given the fact that we do have a lot of economic data coming up, as well as volatility still remaining for the most part elevated.
Yeah, and gold moving to the downside now, down about 0.5%. We're seeing silver pull back a little bit. You got your eye here on silver, KG. Is this trade over?
Okay, Bitcoin looking a little weak here. Bitcoin futures turning back up. Let's watch the futures here. Okay, hedge flows. So we know we got some resistance right in this area. The next level of resistance just above 7,000. Look at all this red overhead. That's telling you can see a fast move, higher volatility. Purple is more friendly. It's also support and resistance. Overhead, you can see purple up here. There's resistance overhead. The red zone, that's telling you there's a lot of longs in this area. This is telling you the dealer is short. Red indicates the dealer is short. Markets are long. So any move above this level could get pretty quick. Could jump pretty quick.
All right, thanks to Kevin Green, senior markets correspondent here, helping us break
Okay,
down
Apple pulling back from the
some of
high.
levels you should be watching, but now
Microsoft looking for a follow through.
Joining us now is George Tillis, and in studio, Dan Grant, senior specialist at retail trading at Charles Schwab here. Dan, I'm going to go to you first here. We're seeing a push into treasuries right now. I know that's one of the focuses that you like to kind of focus in on. We've seen that 10-year yield down to over 3-week lows here. Should we be seeing it that way? Because it feels like we're starting to see inflation maybe perk back up.
Yeah, we're seeing lower rates on the 30-year, the 10-year, the 5-year, 2-year notes all the way down at 340. 1-year notes all the way down at 340, and that's ahead of supply. Wednesday we'll have a 10-year note auction. Thursday we'll have a 30-year bond auction, and we've got all the economic numbers. We'll finally get some sort of indication on non-farm payrolls on Wednesday. We'll have the inflation number on Friday. The market's still kind of cautious about what it wants as far as Fed policy. The SOFR market, the secured overnight financing rate, is trying to price in two cuts between now and the end of the year, and Fed funds is only have one, and a very slight chance of 2 cuts between now and the other. I don't see it happening.
Yeah, and think about this, and I think you make a good point, is that if the market continues to act this way, where you've got flows into the risk-on assets, GDP growth is higher than anticipated, jobs market stabilize at least, it's not healthy by any stretch of the imagination. Hey, do rates need to come down? We'll kind of wait and see, I think. The new Fed chair is going to probably want rates to come down. The administration wants rates to come down, but who knows? You know what? Even in a solid rate environment, equity markets have historically done pretty well, Dan. Let's bring in George Tillis, senior markets correspondent, here to help us break down another area within equity markets here, George. And this has been a big winner over the last 12 months or so, and that's in the memory chip space. There's just not enough supply for the amount of demand out there. That helps margins, George. That helps pricing. And the backlogs just continue to grow from some of these big memory chip makers like Micron and STX and Western Digital, right?
Yeah, I mean, if you look at thematically speaking, these names have been just tremendous performers over the last year. I think what's happening, at least right now contextually, is we're seeing essentially sort of a weakening and topping market, essentially because of rotation.
All right.
Now we're actually seeing essentially rotation out of these high flyer names from a hardware standpoint. I'm going to throw Google in this mix as well. If you look at some of the weakness today in that name, that corresponds to essentially the strength we saw across the board in the
Riot moving back up. Riot. There goes the S&P on the move. Check your S&P. We could move through this area pretty quickly up towards 7,000.
Starting to see rotation back clearly, at least in the short term, into the software names overall, because some of these names have been decimated, associated with the competitive threats and aspects in that regard for OpenAI and technologies associated with competing with software. So I think, looking at the rotation we're seeing in the markets, unfortunately, unless we get widespread participation in the mega cap names, this market's going to have a tough time breaking out to all-time highs overall. It certainly can happen. I think one of the important ones that I've been watching, and this is, of course, clearly indicating strength still, is NVIDIA in the last 3 days after it came down and nearly broke the neckline of a head and shoulders pattern from a technical standpoint on Thursday of last week. It recovered and negated that breakdown on Friday. And since then, it's been holding up, I would say, quite well. So that's important, because it was coming down to test its 200-day moving average. But again, looking at some of the pickup we're seeing in Oracle and Microsoft in the software space, that's just natural rotation. But again, weakness in Amazon, if you will. Apple, trying to hold up, but nonetheless, again, Google's starting to roll over as well. So unless we see widespread participation in these mega caps, this is going to be a market that's stuck in the trading range, which we've really been in, especially the NASDAQ since late last year.
Yep. He said exactly what we were talking about yesterday. S&P 500. Okay, S&P.
Buy some Google bonds?
S&P.
Absolutely not. On that note, all right. Thanks, Dan Grant and George Tillis.
Where's my chart?
On the panel here. That's gonna
S&P.
wrap up the opening bell. Stick
There
around,
it is.
Morning Trade Live.
There it is. All right, so we've been in this range. Okay, I talked about this yesterday. Grinding higher. We're probably going to pin in this area, maybe. If we break out to the upside, that would be due to earnings, of course, in my opinion. We also have, CPI this week. Okay, so tomorrow we've got the unemployment rate. We've got the inflation rate. We've got core inflation. I've seen some numbers that are pretty interesting, that the Fed is way behind the curve and that inflation is actually coming down. That said, I did see very expensive eggs for whatever reason. I don't know if it had to do with the weather or what, but $13.99 for grass-fed, free-range chicken eggs, organic. I mean, $13.99. Give me a break. $1 an egg or more. Bread, milk, still pretty expensive. The staples. All right, watching Microsoft here. Microsoft is going. Microsoft looks good.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, not the same rate of change on EPS.
Follow the biggest headlines, live analysis.
Let it work. Let it work. If you're taking new positions, let it work. All right. Don't get shaken out the first 5-10 minutes of the trading day. We're coming into the 10 o'clock hour. I'm your host, Cousin Benny, coming to you from theclosingprint.com. Markets are bouncing. Looking pretty good here. Okay, let's go back to what I wanted to cover earlier. Unusual options trades. That was by the close yesterday. Okay, let's see here. Unusual options positions. Let's see. Anything that's sold to open. Communications. Puts. See that? See all these puts being sold here? That's probably a put credit right there. See that? 95.104. That's a put credit right there, it looks like. Okay, what's bought? Rig. Remember yesterday we talked about Rig. Okay, rig right there. Bought to open. The 7 put. Huh. Okay. The call. What is that? That's a straddle, looks like. Looks like a straddle. They bought the 7 put and the 7 call. Interesting. Okay, let's go see what rig looks like. Rig. Okay, let me just mark this up real quick. We're waiting for the markets to give us a trend today. Range.
Hello, everybody. Welcome to Morning Trade Live. I'm Sam Barnett, live from the floor of the New York Stock
Okay,
Exchange.
Sam, I'm going to try to get used to that squeaky voice of yours.
So here is a look at what is coming up. We'll examine what's next for small cap
Vinny, you're so
stocks and the
critical.
state of the rotation
Yeah, I
trend
think the older you get, the more critical you get. I remember my dad, you know, he would say stuff and I'd look at him like, where did that come from? And he would always say, I'm just getting old. Can't take this. Imagine him live. If he was living today, my father, oh my gosh. It'd be hard to live with. Just watching the markets right now. We just hit the high. Okay, we got a range here that we're looking at. Okay, what else do we want to look at? We want to look at, did I save that? Yeah, I saved that, right? Okay, the other thing we want to look at is junk bonds. Are junk bonds improving? Did we stop? Okay, we got a nice gap up and a little fade. Still bullish. We could see a higher high, higher low. As long as we stay above the 50-day, this is looking good. RSI is rising. The significance of the bond market should not be overlooked. Okay, the bond market's twice the size of the equity market. Global equity market, global bond, sovereign debt market is twice the size, more than twice the size of the equity market. So it needs to be paid attention to. In particular, junk bonds, the people who would trade this would not be trading. They would not be active. This would be considered a risk on signal. Doesn't look anything like this over here in September. Okay. No cascade lower. We had that last week. Now we're reversing. So at a minimum, this is neutral to bullish. Stochastics, MACD. If you just do these few things a couple of times a week, you should be fine as a investor, long-term investor. If you're in your late 20s, early 30s, and you got your first job, maybe it's your second job, you got a 401k that gets a company match. You put $1,000 a month or $1,000, whatever, $500 a month into your 401k, and they match it. Sometimes they'll match dollar for dollar up to a certain amount. Some companies, depending on who you work for, some do 50%. So you deposit 500, they give you 250. You've already made money on your deposit, and you're looking for the long term. So for the long term, you really don't want to look at anything below a daily. You want to look at the weekly, look for trends. Okay, so markets are still sitting here. I'm not disregarding the S&P at the moment. Okay, so weekly neutral. It would be more bullish if it starts to break to the upside. That would be good for equities. All right. The other thing is the Forex market. The Forex market dwarfs both the bond market and the equity market. Just trading in the trillions of dollars of currencies every day. Okay. So the dollar, we're watching the dollar. Is it moving lower again? Okay, 60. All right, so we're moving a bit lower on the dollar. Okay, so that should help boost gold, not pull it back. Gold's still consolidating. Silver, if you're trading in commodities, the Deutsche Bank Commodity Tracking Fund, we want this to be moving lower. You don't want commodities to be increasing in value. Okay. You want commodities to be pulling back. All right, let's take a look at commodities. Again, for the investor time frame, you want commodities to be moving back down into this range. All right, so get used to following these. This will help you out a great deal with your investing. Okay, you know that I took off some of my positions into strength over the previous couple of weeks, and just waiting for direction now to put money back to work. So this looks, we want this to pull back down into this area, okay? That's all you want to look for. Breath, let's take a look at breath, see how that's doing. Breath. Okay, so S&P 500. If you're thinking about going long today, you want to be buying dips. You can see that the S&P 500 is moving higher. Sorry, that's pretty loud. Is that good? Is that good? The background. Okay, that tends to be a little overpowering at times. Okay, so S&P 500, you can see more stocks are advancing than declining. Same thing with mid caps, a little less so, small caps, and NASDAQ. NASDAQ has a lot of work to do. It probably has the most opportunity. I would say it does have the most opportunity if you look at the sectors. So let's go take a look at sectors. Okay. All we're doing is following the money. Where am I? Okay, sectors. All right, IBB. All right, let me just zoom out a little bit here. IBB, IYR. Okay, real estate. Okay, real estate's on the move. Watch real estate. Transports. That includes shipping, maritime shipping. Stocks like FedEx, UPS. Semiconductors, we talked about that yesterday. You could trade semiconductors instead of individual. There goes the S&P. S&P popping here. S&P is popping. Biotechs, XES, oil and equipment services taking a break. Materials following through. That looks good, bullish. Communication services, that would be Meta, Google. All right, there goes Apple. Apple's on the move. Apple moving. Microsoft, ditto. Amazon. Okay, all of these are going. Okay, energy taking a break. Financials. Let me see what Chevron's doing. Chevron. Okay, Chevron. You know what? I'm going to take some Chevron profits off at the moment. If we get a multi-day consolidation in energy, I have June, right? Chevron. Okay, I can leave that off. I got June, so I'm okay. Chevron. Case volume increased by 1% in Q4 and pretty much flat when you're looking at year-over-year growth. Starting to see is their pricing. All right, what's financials look good. Okay, so the banks. Okay, let's see what JP Morgan looks like. JP Morgan is up near yesterday's highs. JP Morgan following through. JP Morgan banks look good. Banks look good. Banks. Software. IGV. Okay. Financials look good. Note the financials. Okay. Look at RSI. Look at MACD, stochastic. You see a little bit more volume, but if we break above the 50-day, most likely we'll do that this week. We'll see that follow through. We got industrials following through. Stocks like Caterpillar. Caterpillar broke out. Caterpillar broke out on Friday, followed through Caterpillar. Okay, so that looks good. Caterpillar. Tech, XLK, Tech. Consumer staples, flagging. Staples. Okay, utilities, fixed income might get a little bit of a bid. It's kind of like dead money. I mean, you get decent dividends, but you could put that into a dividend paying ETF like SPHD, which has been doing very well since the breakout in January. XPHD is still driving higher. Since January, we took some money out of this one and put it into SCHD. That's consolidating the past couple of days. Pays a nice dividend 4 times a year. SPHD pays every month, last week of the month. Okay, so if you like to do that, you can buy, 1,000 shares of this and get dividends the last week of the month and then move out of it, or just hold on to it like I have since 2014. This is the first time I've taken money out in a couple of years and put it into something else. And they're both performing very similarly. Okay. Okay, so that's those two. Utilities, healthcare, just consolidating. Consumer discretionary got oversold. Now it's turning back up. We've got XLY, XLP. This is a weekly time frame. So it's going to take a couple of weeks for this to turn back up. And retail's trying to push. So I've been trying to get into some Walmart. Let's see what Walmart's doing. Okay, Walmart's finally starting to show some consolidation. People stopped chasing it. TJ Maxx, Target, Dollar Tree, Ross Stores. Did I do TJ Maxx? TJ Maxx, Costco. All right, looks like money is definitely focused on tech. Tech has gotten to beat up the most. So you probably get the most bang for your buck if you're a swing trader looking at tech, semiconductors, software, IGV. IGV, big move on IGV. Look at the money coming into IGV. Also XSW, that's the S&P 500 software and services sector. Okay, so we should see Palantir bounce as well. Palantir. Okay, so there you go. Tech. If it's not tech today, you don't want to day trade anything outside of tech. Unless you get a good dip on something like Walmart. I don't think that's going to happen. All right, Tesla showed up this morning. All right. Showed up this morning, took its suit jacket off, rolled up its sleeves. Now Tesla's on the move. All right, we got to get through the, what is that, the 21 day? 21 day. We got to get through the 100 day and the 50 day overhead. So we got some spaghetti resistance areas. Okay, S&P is starting to stall a little bit. S&P, let's go take a look at Trace. Okay, so we hit a high. This just came in here. That wasn't there before. Okay, you see this? This is the way we started the day. That's the way we started the day. Okay, let me just take a snapshot of that. All right. Let me just note, okay, what time it is. All right, and now, okay, so this is all new. This is new, 0 day. Okay, so there's R2. That was what we noted this morning. R1, we made it through. Okay. Google looking good there. Thank you, dollar.
This place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee. giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now.
Okay, Apple just got rejected at the highs. S&P. Somebody's selling some premium here. Okay, 94 percentile with 12 million. At 69.95. Well, they got balls. They got balls. The dealer is long. Market's short right there. 70.25. Is that a 30-point wide? 30-point. What happened there? Is that a glitch? Okay, it looks like a non-zero day. Non-zero day at the open. Here's the open. Pay particular attention to the levels above 7,000. Okay, they're starting to build overhead. Okay, so that level 70.10. You could sell probably above 70.20. I don't think we're going to get past 70.10. All right, we're pulling back right now at the moment anyway. Tech, software, semiconductors, that's where I would be focused. Morning, Grover. CRML, USAR, MP.
Morning, Sam. Thank you for having me. I think this trade here has some legs. I think small caps, as you know, have underperformed.
Critical metals, looking for a follow through. Yeah, I agree with you.
Beginning of what could be a prolonged small cap cycle. So look for it to go on for a period of time. I mean, if you look at the Russell 2000 performance through last night on a one-year basis, it's outperforming the S&P 500, and it's a trend that we think can happen and continue for the next couple of years.
Okay, so you're not the first to say that, and I mean, you know, when we talk about the sustainability here, it seems like.
Okay, we'll come back to you. I forget her name.
On RevPAR, which is revenue
Okay.
for the industry metric, and issued solid 2026.
All right, just watching the S&P. Okay. So what it looks like we could see is some choppy price action up here, stall below the highs. Let's see what the markets look like right now.
So I guess that, you know, the street is sort of celebrating a lot in here. The RevPAR numbers, I think the pipeline, the loyalty. How do you describe the environment right now?
I think to state the obvious, there are some economic headwinds, there's some uncertainty, but we continue to see the consumer
Okay, let's see.
spending on travel and experiences, and that really reveals itself in the results that we reported this morning. I heard Carl's comments a moment ago about
Short-term, medium-term, long-term are all bullish.
and I think luxury was a real highlight.
Okay, new highs.
Quarter and the year.
Okay, I'll be with you. Gotta take a 2-minute break. I'll be right back.
Or actually declined slightly during the quarter. Is it government shutdown related? What's the story there?
Yeah. We mentioned this on the call. Had the government shutdown impact not happened, we would have been up about a point in the U.S. and Canada. I would say the U.S. business is sort of steady as she goes. We've guided to similar RevPAR volumes in 26, absent the impact of the government shutdown, which had fairly significant impact for about 43 days.
So is it a tale of two travelers now? Is it luxury versus everybody else?
Well, I mean, the K-shaped economy is certainly impacting the travel vertical. Thankfully, we've got about 10% of our global inventory and 10% of our global pipeline in the luxury tier. So we're seeing real benefit from that. But just 3 years ago, we started pushing into the mid-scale space, and we're seeing some real benefit from that more thrifty consumer as well.
Tony, there's been a lot of ink spilled about international inbound into the U.S. Negative last year. Disney referenced it the other day, looking for some headwinds at domestic parks. Are you seeing it? And if you are, like, what are the implications for things like the World Cup?
Yeah, thank you, Carl. It's an interesting question. We are seeing inbound international to the U.S. down. But if you look on a global basis, our cross-border travel across the entirety of the portfolio, is ahead of where we were in 2019. This weekend, I had a chance to spend some time with the senior leadership of FIFA, and it was all anecdotal, but the data they shared about the volume of ticket requests and the bookings they've seen, I think bodes quite well for what we'll see through the World Cup.
What about business spending, Tony? What do you see in terms of sentiment and appetite for business travel, events, which makes up such a big part of the business?
Yeah, I think of the three segments we compete in, Sarah, leisure was the clear leader in the quarter and for the year. Group followed that, and then we saw flattish business in business transient. If you look at the negotiations we're having for special corporate business, we expect to see rates up low to mid single digits, which I think is encouraging. But business transient is the softest of the three segments we compete in.
What about the loyalty numbers and the credit card? I mean, some analysts are really impressed with your credit card fee revenue going up, I think 35% or more in the year. What's
it's interesting. It consumed a lot of the call today because you have two factors. We modified the royalty rate that we take into the Marriott P&L, and that was the big pop you saw in today's discussion. We are in the midst, and we mentioned this a quarter ago, of renegotiating our credit card deals with JP Morgan Chase and American Express. We hope to have those deals done this year. There will be some upside from those deals, but we reminded the analysts this morning that those deals will come in on the base of the largest credit card programs. Temper the excitement about that, but getting those.
All right, Netflix still hanging out. Microsoft hanging out.
Tony, we always like to talk about.
Okay, looks like the S&P wants to go a little more. All right, so we got resistance up here at 70.10. Next level resistance is 70.10.
Well, we have been for a while, not growth for growth's sake, but we've made such a big bet on our loyalty platform, Bonvoy. And when I get questions about our growth strategy, it's really pretty simple to answer. I want to make sure I have the right product for you anywhere in the world for any trip purpose. And if I succeed in that objective, I keep you within that Bonvoy ecosystem. You don't need to look outside. That's why we got into Marriott Homes and Villas. That's why we launched the Ritz-Carlton Yacht Collection. I want you to find everything you need.
IWM, good trade there, Armando. IWM. All right, Tesla, IWM. IWM looks like it wants to keep going.
You talked, Carlos, about FIFA and the World Cup. I know Coke was just talking about it as well. The Olympics right now. I know you guys are a sponsor of the Mercedes team and F1, a rival team. Okay, but how big are these tentpole events?
I just gave you some. Here, it's right here. Look.
Yeah, one of the great phenomenons for our
Come here, kitty
business,
cat.
Sarah, is you're seeing more and more travel tied to these tentpole events. So we mentioned in the call this morning, we expect about 100 basis points of revenue.
All right, S&P looks like it wants to go.
In Europe,
IWM looks good.
Olympics. We expect similar
60-minute, we're above the 20 EMA.
you saw
Okay, SPY
a year or two ago the impact
above the 20 EMA, starting to break higher. The Qs have the most room to make up. That looks pretty good. Discounted values. Puts are expensive. Calls are cheap. Okay, IGV, the software sector, just turned the corner. Okay, this is day 2, basically. All right, so this looks good. Microsoft. Nice follow through on Microsoft. Pretty bullish day yesterday. Looking for a follow through. Palantir also turning back above its 20 EMA. Let's see if we can trend higher. In the back of my mind, I keep thinking I don't want to get too crazy here.
Telling lawmakers up on the Hill that, in fact, he did visit Epstein's Island. Now, this coming after Lutnick had earlier suggested he broke off all contact with Jeffrey Epstein around 2005. Documents revealed in the Epstein files indicated that, in fact, he had a much more extensive relationship with Jeffrey Epstein after that point.
God, I can't stand these these media outlets. Why don't they focus on what they're supposed to be focusing on? The financial markets. All right, S&P just pulled back. Okay, so watching here. All right, let me fill in my puts and calls. I haven't done anything this morning yet. S&P.
Appetite for bonds this morning. We've got the 10-year at 4.14. I believe that's a one-month low. The DXY is pulling back, obviously. We've seen some regional currency strength. We know the story there. What does this mean as far as some of these GDP estimates in the Fed now?
Well, what's interesting is markets are pricing in maybe 3 quarter cuts in 2026. That might be a little bit aggressive. Remember, this is
okay. S&P 500, SPX. Okay, we're a little elevated there. 69.70 on the put side. Let's see, 69.70. What are those going for? 69.70s are $10.
What drives purchasing, right? What drives purchasing of big ticket items? A lot of it has to do with feeling, the comfort and the safety.
Just filling in my puts and calls on my active trader.
And while we're not seeing unemployment rates climb higher, we're kind of stuck in this mud, if you will, the sticky little mud where there's not a lot of growth. There's, it's not a lot of firing. There's not a lot of hiring. It's just kind of stuck in the mud.
Okay,
Like I said.
we're all set there.
I think that's weighing on consumers a little bit.
Or Microsoft hanging in there. If Apple and Microsoft and the rest of these New York FANGs can push higher, that should help the S&P. It's 37% of the weight of the S&P 500 is in those stocks. So let's see. S&P 500 equal weight. What does the equal weight say? Equal weight says breakout. S&P equal weight says breakout.
Where's that inflection point, right? Where's that inflection point where they need to start stimulating growth because of a slowing job market? It's going to be hard for them to kind of hit that exact point. So I think, as anything, Sam, they're going to wait for more data to come out.
Okay, so that's breaking out. Bollinger Band's opening up. Our number of stocks above the 20-day, bullish and rising. Okay, that's what you're looking at right here. Is the number of stocks above the 20-day are rising. Number of stocks above the 50-day, same with the 50-day. That's bullish. Okay.
What's working, what's not working, and the state of this rotation trade that we've been talking about.
Yeah, before I got on the show, I kind of looked at the spread between performance in the chips versus the
S&P.
we've seen in multiple years.
I'm just kind of sitting here at the moment.
It could be a catch-up trade. I think that makes sense. I think that those are oversold conditions in software. We're looking at the RSI, and on Friday they got to a point where the RSI was around 14.15. We haven't seen levels like that since all the way back in 2002.
Okay. Tick cumulative is rising. Tick cumulative is rising. That's bullish.
What I do think is important, though, is to look at the fact that we haven't set any new all-time highs in Max really since October.
Tick cumulative significance there. Tick.
Since October, but we continue to do so. I think 13 of them in the equal eight
Are actually doing.
So yeah, the rotation trade, it's real, Sam, and it continues. And I wonder at some point, and this is my own personal guess, is whether or not you can get a new all-time high overall in the S&P 500, not necessarily in the Dow, but in the S&P 500. If you don't have communication services, you don't have tech participating. We're seeing that come back a little bit over these last couple of days, but I think you need to see a bigger thrust there.
Ben Emmons from FedWatch Advisors was out with a really interesting note this morning about sort of the short-term memory loss in these markets. And, what he was alluding to was how in recent weeks, borrowing was not acceptable. I mean, we've seen that in Oracle with some of the concerns around tapping the debt markets, that debt-to-equity ratio. But now, all of a sudden, you've got this headline around Alphabet, Google, billion bond sale, selling sterling and the Swiss franc denominated bonds for the first time. So they're looking at a lower cost of capital. Then you had this story about Oracle last week looking for more money. And
Microsoft.
the ratings agencies seem to be okay.
Okay, markets seem to be slowing down now. So the morning trade.
Across the bond market, I mean, you've seen
Looking for a trend now. Tick cumulative looks good. We're talking about the 60-minute time frame.
and then the yen strengthens, it doesn't weaken, which is the opposite of what the Takeichi trade is characterized by. What do you make of this shift to how the market
That's a 60-minute time frame.
right now, Joe? I don't know if you have any thoughts on that.
No, I do. Well, specifically, maybe not with the GGB, but specifically with Oracle versus Google, I think there's a difference in terms of balance sheets, right? You know, positions of strength versus weakness. Not to say that Oracle has a weak balance sheet, but the cash flow that Google has generated puts them in a position to where they can go and get really good strong yields.
Okay, looking better. All right. Puts are being sold. Calls are being bought.
I think companies now are recognizing that there's a separate market out there where they can generate those funds that they need without having to pay too high of a premium price. I mean, look, the takedown on those markets has been pretty fantastic. So
Okay, what else can we look at? All right, we looked at junk bonds. We looked at breadth. We looked at, that's the New York Stock Exchange. Let's go look at the NYSE. We got the equal weight higher. Okay. S&P equal weight. All right, this is another version, RSP, the Invesco RSP versus this. They're telling you the same thing. Okay. RSP. Can you actually trade RSP? Can we trade it? RSP. Oh, yeah, you can. All right. I've never traded RSP. I've never traded the equal weight index. All right, S&P is pushing a bit higher now. Okay, Mondo, you should be good.
Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated.
Okay, hedge flows. Okay, look at the hedge flows. Hedge flows. Hedge flows pushing higher. Okay, so we got this mark right here at 70, 10. S&P 500. I've decided that I'm going to stop looking at social media. Just makes me crazy. I watch what people are doing. I just shake my head. It's like, man, when we grew up, it was nothing like that. It was nothing like that. Best of times. Best of times. That's why I worry about my kids growing up in this crazy world. Lost a best friend to politics. It's like, dude, where are you coming from? He was from New Orleans. He moved out to California, and he changed so much. It was unbelievable. I've been to California. I lived in La Jolla for a while. Lived in San Diego for a while. Definitely beautiful. Hawaii. Lived in Hawaii for 3 years. That was nice. It's like a different world, Hawaii compared to here, or California compared to the East Coast. Has nothing to do with the trading. The markets, I'm watching the markets right here. We're right at resistance at the moment. S&P is at resistance. S&P. Okay, we do have a little resistance here. Overhead, there's a little bit of supply noted right there. You can see that what's called a liquidity grab. Okay, institutions will push it above the recent high over here. Push above that, get people to get long or take out stops up here and reverse it back. Still looking for higher highs and higher lows because tick cumulative says that institutions are buying more than they're selling. Net. Okay, bulls do need a bullish cross. Okay, here's VWAP below. A VWAP test is always possible, even in a bullish trend. We're above VWAP, so we want to think bullish today. Opening range, we're above the opening range high. That's the opening range high right here. Okay, so we want to stay above that. Is it a guarantee? It's never a guarantee, but you have a bias right now, a bullish bias for the most part. Junk bonds, breadth, everything's pointing in north at the moment. Okay, what else? Let's see, what else? IWM is looking good. That's a risk on signal. If IWM is rising, IWM. It's not catapulting higher like the last couple of days, but it still looks good, IWM. Okay. That's risk on, a risk on indicator.
In this year, sort of as it's a software name, but Palantir has sort of a unique distinction here in its ability to offer an operating system as well, and that helps deepen its foothold with clients. So yes, it is a part of the software sector that has been more broadly beaten down, but it does have sort of a unique qualifier that I think is important here.
Okay, watching here. Okay, I got to take another 2-minute break. I'll be right back. Sorry, I didn't realize I had you on mute. Anyway, hope everyone's having a good morning. We have a slight bullish bias. We got most of our risk on indicators are higher, junk bonds, tick cumulative, IWM, Bitcoin bouncing, Bitcoin with a bounce. Bitcoin is bouncing there off the low. What is Riot doing? Riot, okay, there goes IBIT. IBIT high of the day. What's Riot doing? Riot trying to stay above 15. Riot.
Let's start with the big three, which is, again, consumer discretionary, Amazon, Tesla higher. That's no doubt going to take that sector higher. Then we looked at information technology.
Okay, this is S&P, not IWM. Just a note. There you go.
Actually lower on the day. We've got Google Alphabet lower, and we've got Meta Platforms lower. So two of the three big dogs are higher, despite the fact that looking at it now, 8 of the 11 sectors in the S&P are higher. So still resting, kind of catching its breath. The S&P up 0.2%, but the equal weight's up almost 0.5%. So the overall market doing a little better than the Magnificent Seven, Sam.
Yeah, let's just break down some of the moves in the Mag 7. I mean, Nvidia's off, Meta's off, Apple's just on the line, can't make up its mind. You mentioned some of those that are higher. Interesting news out of Alphabet Google with respect to, obviously, the bond sales as well. I don't know how much of that has
Okay, Dow 30. Let's look at the Dow Industrial 30 stocks. Dow Industrials. Okay, industrials are breaking out. Dow Industrials breaking out.
Early in AI, Sam, all these firms had free cash flow to spend. Now they're starting to bump up against their caps of free cash flow. They're going to the debt market. And real interesting thing about Google Alphabet, number one, 100-year bond, and number two, doing a lot of it in British pound. I think that's the fascinating part. Why did they do that? Just to spread out some of the and diversify some of the
100-year bond? Are they really doing that?
two interesting points.
Oh, boy.
I would expect more of that actually in the future as a lot of these firms.
Okay, you guys, I don't know. I don't know what's worse.
To be sure, the international markets are performing a bit better than domestic. Domestic also had.
Okay, so we're grinding back up, trying to get back up to 70.06 futures. We are breaking out, though. Breaking out on the Dow Industrials. You can see where prices are. Okay, where's Boeing doing? Boeing. Little dip down to the 20 EMA. Boeing. Microsoft day 2. Second hour of the trading day. Okay, Microsoft building. Okay, so you don't want to buy the high of the day, but Microsoft looking really good. Next best entry will be if it pulls back at all. This could continue to keep a bid over the next several days as traders sell puts in a software name, sell puts and buy software. This is the IGV. This is the IGV. iShares Expanded Tech Software Sector ETF. They also have XSW, the S&P 500 Software and Services ETF. They both show the same thing. A bullish follow through, a bid. So while we never have a guarantee, the odds are much greater after a big sell-off. People are still scared to put money to work. I don't think institutions are part of that. And we get these nice bounces. We look for the evidence. The evidence is people, institutions, hedge funds, whatever, selling puts down below. Okay, let's go take a look at that. Okay. Let's see what's being sold here. Okay. Unusual options positions. Rig. What is Rig doing too? By the way, I wanted to check out Rig. Rig, RIG, RIG. Okay, Rig pulling back in a little bit. All right, so that was higher yesterday on the Valaris news, acquiring Valaris, offshore drilling contractor. Acquiring that would make them the largest, would make Rig the largest offshore drilling contractor. Debatable whether or not it'll get approved by Congress, but it might. Let's see, or the federal authorities, not Congress. Rig. Okay, so SSW. Riot trying to get above the 50 days. So we got 3 white soldiers overlapping bullish candles after a big spike to the downside. So that probably washed out a lot of weak hands, people who had maybe too much had to sell. We got like a triple bottom. Looks pretty good for Riot. What's Coinbase? Coinbase similar? Coinbase, not really. IBIT, IBIT. These look more like Bitcoin. BTC, USD. Okay, they still got a lot of work to do. So I wouldn't put too much in that area. Semiconductors, back above the 21-day, 921.50. You're all pointing up and to the right. You just got buyers showing up at the low of the day. Okay, at the 20 EMA. So we want to see the 20 EMA hold. What is Chevron doing? Chevron. Okay, look, it's testing the 20 EMA. So this needs to bounce. So the way I would use the 20 EMA here with Chevron, okay, I would watch this the next hour or so. If this manages to hold this and starts to bounce, your bullish, the next bullish candle would tell you to put a stop underneath 181 or so, 180, 180.50. Look for this to continue. Okay, SCHD. Okay, that's testing the 20 EMA. Same thing here. Okay, it's testing the 20 EMA on the 60-minute. A drop below this isn't anything to panic over, but if it starts to lose it and doesn't get back above the 20 EMA, then I would reduce my exposure maybe. If it's a long-term position for you, it'd be an opportunity to buy more, most likely. Microsoft, looking really good. Microsoft. Okay, I like this trade here. I'll probably start adding to my position on the next dip. IGV. Now that's looking better. IGV. S&P, no follow through yet. Chevron. Let's see what Palantir looks like. Palantir is up 0.2%. Palantir is inside of the wick of yesterday's candle. Palantir, software as a service. Okay. Materials. Okay, critical metals, CRML. Okay, critical metals, CRML. All right, a little gap down there. I don't know what that was. USAR. Fading. Try to get something going here. MP Materials. Okay, what about Oklo, etc.? Yesterday, Oracle was up quite a bit. Let's see what Oracle's doing. Oracle following through. Yay, Frano, we finally got 2 days in a row. Oracle. Finally, 2 bullish days in a row. Okay. Oracle. A lot of people talking about Oracle yesterday. I guess you could consider them software, right? Database, software, AI. AI. You need Oracle. You need a databasing. I remember this back in 2000. I had a brother-in-law that was trading Oracle. He worked for Oracle and he was trading it too, trading options. And the volatility was so incredible back in 2000. If you traded .com, you know what I'm talking about. You could have these stocks like Oracle or Cisco up $20 in a day and then drop $20 the next day. You had the barbers talking about the markets, very excited. What are you buying? What are you buying? You know, when your barber's talking about, you know, the whole saying, when your barber's talking about stocks, it's time to start reducing your exposure. Same thing with bartenders. Okay, watching the S&P, no follow through yet. No follow through yet. Let's see what Breath is doing. Trace. Okay, we got stopped at the high there. Still got a bullish bias though. The markets still have a bullish bias. Okay, Oracle looks really good. Oracle. All right, let's see what a 50% retracement looks like. I mean, I can eyeball it, but just Oracle. That's 344 up there. And we got this level down here.
He recently upgraded Spotify to a buy. Seems like the timing on that was pretty good there, Jason. Considering that
50% would be nice, right? 50% would be up there at 240.
When Spotify already has such a dominant market position, how as the leader does it not get complacent and keep bringing in new users? What do you think is that sort of special sauce?
Well, I think there's sort of two vectors to your answer. The first one is in international markets. A lot of them have not gotten acclimated to actually paying for music. So I sort of think of Spotify as on a two-tier track. In Western Europe and the United States, adoption is quite robust, and the algorithm has really raised price by bringing more value.
Okay, so Oracle's been down here.
Countries think about continued subscriber growth as people get used to paying for music.
Below for a while now.
Narrowly, how do they stay ahead of the competition? I think what we're seeing is sort of the very early stages of Spotify becoming, I think of it as a tailored sort of one-to-one audio experience, but not really interactive, meaning the consumer can't really tailor exactly what they want on the platform. And as we move into agentic AI, I think that's the direction of travel for Spotify, is to make it even more customized. You'll be able to just speak to your phone and say, play me my 5 favorite songs that I listened to last year, but not the same artist, but in the same genre, right? And AI will come up and offer something to you. That will drive engagement.
Yeah, I mean, that's sort of akin to the new feature they have where you can kind of type in your description of kind of what playlist you want. So how is it, they credited that, at least in part, with some of these subscriber gains, or at least stickiness of subscribers. Do you buy that? How big a deal do you think that is, and how successful do you think it is? Does it work real well yet?
Well, it's still early days. I think today you can type in, tomorrow you can speak into it, and then what's going to happen next is I think that they're going to turn all of their, I'll call them passive listeners, into content creators themselves, right? Which is what a lot of startups like Udio and Suno are doing. I can imagine a world where you can say, give me a country western song, that sounds like Jay-Z or something like that. And you begin to smash things together where you become almost a content creator yourself as opposed to a passive listener.
Well, and that speaks to there is AI-made music on the platform, and Spotify itself seems to be making that music. Hasn't there been a little bit of a backlash against that?
Well, there has. I mean, there's a couple layers to this. One, if you are a record label, you're very sensitive about what they call.
Okay, Oracle looks good. Oracle.
And then when it comes time for Spotify to pay the royalties.
Thank you, Mr. Tuccini. Robotic stocks up again.
Paid to the AI swap, right? So they're kicking the sort of AI swap off there to sort of protect their partners, which are the record labels. There's another vector of this, though, which is in an authorized way, could you actually allow one of your listeners to create music, right? And that's going to be sort of a new business.
Okay, so let's take a look at some of these names.
$5 a month, you could create your own content.
HSAI. HSAI. Okay, that looks good. 60-minute, very bullish. HSAI. Tesla, BOTS, BOTZ. This is an oldie but goodie. BOTS, we've been following this one for at least 10 years. BOTS. AIQ. Looks good. Koid, KOID. Looks good. FBOT, FBOT. Quantum, okay.
Yeah, I would say the beauty of a platform like this is you're sort of you don't really care.
HSI off the 60-minute.
The roster, I mean, the record labels clearly will care, but Spotify I think would be
Looks good.
whether it's Bad Bunny or someone else. They just are trying to drive overall engagement on the platform, and even if 5 years from now, most of the listening is sort of AI generated from consumers. I think Spotify would argue that's not a negative; it's a positive just because it keeps engagement up.
I don't know. I might argue it's a negative for humanity, but that's a whole other discussion that we can have, Jason. It's great to see you. Thanks for being with us.
Absolutely. Thank you.
And by the way, if you want to look more at prediction markets, you can go check out Yahoo Finance Prediction Markets Hub, empowered by Polymarket. That's it for Market Catalyst. I'm Julie Hyman. Thanks for watching. More Yahoo Finance.
Prices like State Farm use your coverage. Can I get help from an agent? Do it online?
30.35 July, 30.35 July, $1.30. 30.35 call. $1.30 filled.
It's got no sack springs and a refresh-free guarantee. Get better savings on better styles at Haverty's.
Okay. Believe it or not, Bloomberg has been actually less politically charged. Okay, HSAI. I bought some call verticals just to see if that works. S&P is still chomping around here. 70.10 resistance up there. Here's 70.10. Okay. Bloomberg has no audio. I don't know if you can hear that. All right, Chevron, Palantir pulling back a little bit. S&P. That's weird. Okay, so much for Bloomberg's audio. Okay, so S&P, the top of the range. We talked about this yesterday, that the possibility is we stop near 7,000 and just keep chopping in this area.
Retail sales, which was a disappointment. They gave us some breaking news from the New York Fed. A new report showing the nation's household debt balance has risen to $18.8 trillion. That's a jump of $191 billion in Q4. Balances.
Okay, so this is what we're looking at right now.
Mortgages, credit cards, HELOCs, and auto loans. Overall delinquency rates up a little bit, driven by mortgages and more so by student loan debt. Credit card, auto loan, and HELOC delinquency rates were pretty stable. The picture for those with student loan debt does continue to worsen. Outstanding debt now 1.7 trillion, while 9.6% of balances are 90 days or more delinquent. Got some interesting data this week from New York Fed coming off of yesterday.
Yeah, yesterday it was lower inflation expectations, delinquencies higher. It's something we watch, but
Okay, puts are actually catching a bid here.
and now is that there's
Puts starting to catch a bid.
the Fed rate cut. You know, when Kevin Warsh comes in as the next Fed chair, if he gets confirmed, and so the data, I would also point to actually the employment cost index, which is kind of an inflationary gauge around wages, which also came in a little bit light today. Still solid wage growth, but not as much as we saw the previous time around. So again, maybe buys them more room to cut.
Yeah,
Market
although
rallies.
CPI is right around the corner, and you saw JPM last night looking for 0.4, which would bring you back to a 3% annual rate. They think a lot of factors that suppressed inflation.
Okay, we need MACD to cross here if you're
And we
bullish.
talked about the calendar effect. New year, a lot of companies use that as a chance to hike their rates.
Yes, I mean that's a big wild card. Friday, inflation, tomorrow jobs, which is strange for more.
JP Morgan pulling back from the high. JP Morgan.
For your portfolio, let's bring in Neuberger Berman, Private Wealth Managing Director, Holly Newman-Croft. Always a pleasure. Welcome back. Great to see you both. Thank you. So there is a lot of economic data coming in and potential catalysts for this
Robinhood, we've got earnings tonight. I already have calls 115, 125 for July. I'm probably going to do puts close by in case this does drop off. Let's see, Robinhood. I don't think it's going to, so I think I'm going to be good with the calls. Okay, I'm going to make this a long iron condor rather than selling premium because these stocks jump a lot more than customarily seen in the markets. Okay, Robinhood. Oh, we got okay. We're earnings tomorrow. Okay, so no. That was last time. Sorry. So we have earnings tonight. That's correct. Earnings tonight. Robinhood. So let me do that. Let me buy some Friday puts for protection. Robinhood. Actually, you know what? I'll go out. Let's see which ones are cheaper. Same deltas. Let's go. Okay, Robinhood. Robinhood. Okay, so I have 115. So anywhere between here and 115, these calls out in July are going to do fine. Maybe I'll buy some puts in case this drops off. Let's see. 80s are a 23 delta. Okay. Buy a vertical 80.75. 80.75. Those are 95 cents. 23. All right. Okay, I already have calls. Robinhood earnings tonight. Already have July 115 call. Spread.
Lots of strong companies and lots of advantages for the investor.
Right. And to your point, non-U.S. equities, third best start to the year since the late 80s. You think this can go on for a while, I assume?
We are overweight emerging market equities driven by Brazil and India. We think active management is critical because the euphoria of AI moving everything up is over. It's a done story, and it's a much more critical eye to what companies have strong business plans.
Okay, so I bought
Expenditures that we're seeing
80.
Pathway to monetizing on them. We talked about this in the small cap space, right? Small cap had a fabulous year last year, driven 90% by non-earning companies. So now we've got to see which companies can actually make money and survive through this economic cycle. And we think active management is critical. So lots of room to grow, lots of strong companies and lots of advantages for the investor. We talked about this in the small cap space, right? Small cap had a fabulous year last year, driven 90% by non-earning companies. So now we've got to see which companies can actually make money and survive
the AI revolution that we are just in the beginning phases of.
One of my favorite charts of the week is the Russell versus the NDX over 1 year. If we had said a year
All right,
ago
that's a
that
23 delta.
outperformed the Nasdaq 100, I don't think many people would have believed us, right?
They might have turned the channel.
But that's what's happened.
This is what you were saying. Yeah, and I think that the concern around software, it's not a dead story, and there are a lot of good companies in the small cap space in emerging markets. What is critical is
Monitor.
companies that are really embedded in the ecosystems of their clients, so that if AI takes over a part of the business, it doesn't eliminate the need for all of the software. So one-hit wonders, one-part solutions, I'd worry a little bit about that, whereas comprehensive software solutions that become deeply embedded in their clients, they'll just navigate the change in the changing needs of their clients to survive.
Overall, are you betting on a strong, like a cyclical upswing this year? Because going in, that was sort of the theory, and now people are questioning it.
No, we don't see. We still see strong macroeconomic.
Okay, JP Morgan pulling back from the high. Palantir pulling back from the high. S&P fading back into the range, maybe.
Which is made up north of 50% of the performance of the S&P 500 each of the last 3 years. So we are not expecting a recession. We are monitoring the labor market. It's soft, but doesn't appear to fall off a cliff, low higher, low fire. I think the Fed will continue to monitor that as well. But the market and the economy has blossomed really in a higher interest rate, higher inflationary environment for many years. And the focus this
All right, hedge flows pulling back. So this, what it looks like is going to happen is this going to create a sine wave, and the market is going to ping pong between these levels.
Well, it's focused on the consumer, right? And the consumer makes up 2/3 of our GDP. So if we have a strong consumer, that should translate positively.
Junk. Yeah, junk looks fine.
Great to get your take, as always. Really appreciate it, especially on a busy week for data. Holly Newman-Croft from Neuberger Berman.
Thank you.
Let's get to a few of this morning's big earnings movers. For that, we'll turn to Seema Modi covering Datadog, Julia Borston on Spotify. Seema, we'll begin with you. Morning.
Good morning. Big movers this morning. And the first question, Carl.
Okay, junk bonds look good. I see dollar posting in the room. Okay, let's look at the Dow Industrials, INDU. Dow Industrials, a little bit off the highs, but looking good. Dow Industrials, 60-minute time frame. We're not going to go up every single day. Straight up, we're going to pull back some. So right now, you're looking for a better entry. Tech is doing well. Tech is doing well. IGV, software following through. Tick cumulative is still green.
Investor told me this move does underscore how investors are starting to differentiate, right, between the winners and losers, or in other words, the companies that are working with the large language models versus purely getting displaced by them. Yeah, something we were just talking about with Holly Newman-Croft. Yeah. Seema, thank you. We'll turn now to Spotify, another double-digit mover. Julia Borston with the story. Hi, Julia.
Hey, Sarah. Well, Spotify shares are popping on a top and line earnings beat as well as surging user growth. See, shares are now up about 17%. The company's monthly
Wow, Spotify looking good.
From the year ago quarter to 751 million. That's 6 million more than anticipated, while paid subscribers grew a better than expected 10% to 290 million. The company also guided to better than expected user growth despite hiking prices in the
Microsoft,
premium users. Spotify
IGV.
Benefit of AI for artists to both make music from scratch as well as monetize their existing catalog, and also to improve users' experience through the likes of AI DJ and playlist tools. Spotify shares are still down about 30% in the past 6 months, but Barclays writing, quote, the major narrative shift that has impacted valuation negatively in recent months is worries about the impact of AI-generated music. The note goes on to say, we believe Spotify is likely to be one of the
Okay, let's look at RSP.
because of its role as a content-agnostic distributor, saying we believe this is
RESPCT. That's what you need to me. Little bit respect. Just a little bit. Baby. Okay, so RSP. Okay, so we're rising RSP. This is the equal weight index. Microsoft, nice follow through. Netflix off the high. Right now, we're just seeing a little profit taking. Broadcom off the high. Oracle coming off the low. Oracle. Oracle. 2 days. Nice follow through. Oracle. Gapped up yesterday to start the week. Oracle. Okay, I got to take a 2-minute break. I'll be right back.
Look, there's a broad realization that you're going to have to invest ahead of the real realization of the opportunity, the real realization of the profits. And so that's why you're seeing a lot of these hyperscalers pour tremendous capital, hundreds of billions into their CapEx infrastructure associated with AI. And there will be support for others across the software ecosystem, as long as there is also that enterprise customer journey narrative going with it as well.
Yeah, that enterprise evidence is right, is what we're looking for. I'm going to ask you one of my favorite questions, given we're still early in the year. What happens in the rest of 2026 with the software sector?
Yeah, I'm going to go back to where I started, which is really this forming, norming, storming. You have a lot of AI forming right now, and I will tell you, we are not at the end of that formation. There are going to be gives and takes, and then that storming with traditional software. The winner there is going to be those that are really spending time understanding the evolution of their technology with their customers and how those customers are applying AI to their solutions. And then you'll have this normalization, and it could be a few years out, where there's a balance between AI infrastructure leaders and those software innovators, enterprise SaaS, who have really seized the opportunity to embed AI for their customer benefit.
Lauren Webster, can't wait to have you back on the show. Thank you very much indeed, Piper Sandler. We appreciate it. Coming up, Spotify reporting record user growth in its fourth quarter. What to discuss next? We're in these earnings, but Ed, what are you looking at?
Just a very quick look at TSMC's US listed shares. They're up almost 2%, 1.7%, but trading at a record high. The shares in Taiwan overnight traded at record highs. The revenue jumped 37% in January. Same story. AI spending marches on. TSMC dominates the market for chip manufacturing. This has been Bloomberg Tech.
Builders turn concepts into companies. Builders know today's solutions won't fix tomorrow's problems. We're not waiting for the future. We're building the future.
If you ever come face to face with a grizzly bear, the only real chance you have is to stay completely relaxed. And what better way to stay relaxed than Candy Crush Saga? Stay calm. Download Candy Crush Saga today.
ETHU. BITX.
Candy Crush Saga, what level are you on? 2000.
CIFU. CIFR.
Checking on Spotify shares, having a strong day, up 15%. At one point, having their biggest move on record after the company reported, record user growth in its fiscal fourth quarter and $835 million in operating income. Let's turn to Bloomberg's Ashley Carman, who broke down the numbers. And look, the mighty have fallen a lot coming into this number, Ashley. So the bounce back is perhaps not surprising when they're able to give some sort of ease to the investor base.
Yeah, and I think that was a lot of what this call was today, is just addressing concerns that AI, specifically AI using
music startups might, and these are supposed to launch this year. So people are concerned, are people going to start using AI to generate songs and then listen to those songs on other platforms, or are they going to keep coming to Spotify? And today, the co-CEOs were saying, they think they'll keep coming to Spotify.
So the stock at one point was up on track for its biggest jump ever. It's now up 15.5%. I think on track for its biggest jump in 7, almost 8 years. You write about in the report the impact of Wrapped. For those, although I don't imagine there's many that don't know what that is actually, just explain it. But like, why was that such a big factor?
So Wrapped is their annual interactive viral marketing campaign where people share their music and podcasts that they listened to the most this year. And every year, it is just a moment on the internet. People tend to activate their service to participate in Wrapped. So they always make this, but I believe on the call today they said this was their biggest Wrapped ever. So we can really see the results of that marketing campaign.
But are people advertising more with Spotify? Are they able to drive revenues not just by having more of us tune in and unearth our Spotify account every end of year?
So this is the one part of the earnings today that was a little bit gloomy. The ad-supported revenue actually dropped year over year, and this has been a part of the business that people are really wondering, when are we going to see you start making more money from advertising? Which is also an important question because when we're talking about them adding users, these are ad-supported users. Subscribers grew as well, but if you're going to keep adding ad-supported users, you also want to see the revenue in that department go up as well.
The most actually common on Spotify. Thank you very much. Paramount is trying to sweeten its Warner Brothers bid. The media giant saying it will cover a $2.8 billion termination fee that Warner Bros. Would pay Netflix if it terminates an already agreed upon deal. Bloomberg's Lucas Shaw, who leads the Screen Time team, is with us. This was interesting, right? So the headline's here, and it's a sweetener, an improvement on their deal, but actually the specifics are very interesting. They're not boosting the offer price. Go into detail, explain how we pick this.
Yeah, so they are addressing and making Paramount two of the concerns that Warner Brothers has had about their deal. One is this question of the breakup fee, right? So Warner Brothers had been debating between two main offers, between Netflix and Paramount. They picked Netflix, but if they walk away from Netflix to re-engage with Paramount, they have to pay Netflix a bunch of money. Paramount is now offering to cover that, and Warner Brothers have been very worried about it because they said that one of the reasons that the deal for Finland was Paramount wasn't covering Warner Brothers' downside on that, which would have come out of the money that they get. The other thing here is Warner Brothers have been really concerned about their ability to refinance their debt going forward. Paramount has now, or David Ellison, both first in swallowing Paramount and now trying to swallow Warner Brothers, has a history of trying to impose really onerous and covenants on what the company he's acquiring can do, which would have limited Warner Brothers in that respect. And now Paramount is saying, basically, we'll cover you on whatever costs are related to that debt financing. To your point, they still haven't actually raised the $30 a share offer. This does increase the total net value of the bid, and so we're waiting to see what the Warner Brothers board has to say about it.
What credence do investors give at the moment, Lucas, to that this would pass through regulators more easily? This whole ticking fee, the idea that if it goes past the quarter expected, they get a chunk of change in return if it's delayed. I mean,
Did they sleep with
that
you?
really just speaks to the bravado here.
Yeah, well, Paramount has been adamant all along that it stands a better chance of getting its deal approved, which on its face makes some sense. Netflix is a much larger company, a more powerful company. It's the number one player in streaming. Netflix, of course, has countered that they're very confident in getting their deal approved and raised issues with Paramount's offer because technically a larger share of television.
All right, so we're just kind of slipping lower.
But both sides are trying to plead their case. Paramount obviously is sort of coming from behind here, and what they are trying to do is inject enough doubt in the minds of shareholders that they will not vote for the Netflix deal next month.
Lucas, both sides trying to plead their case. There's been a lot of recent reports.
The call's not working here at the moment.
In the background, there's obviously been an interest in Washington, D.C. What else do we need to know about how this is going from a regulatory perspective, or at least interest from government as well?
I don't know, right?
Okay, fading, industrials fading, stocks fading from the highs. Dow Industrials. It's only 30 stocks.
kind of basic set of facts is that the DOJ is looking into both cases and has yet to say whether or not it's going to challenge either of them.
In terms of timing, is there anything pressuring? Is there any date, any number, any time frame that we look to for the next?
Yeah, the next big one is the shareholder vote. We're expecting Warner Brothers to approve the shareholders sometime probably in mid to late March, kind of at the latest early April. That's something of a deadline for Paramount because they need to convince a bunch of shareholders before then to change their mind. Otherwise, then they're really up to the whims of regulators because if it gets to shareholders and shareholders do approve that Netflix deal, there's not much Paramount can do besides hope that the government in the U.S. or Europe blocks the deal.
Mostly for sure. We appreciate you on the story. Meanwhile, coming up, we're going to talk about how the storied VC firm Andreessen Horowitz is helping drive the Trump administration's AI approach. That's next. This is Bloomberg Tech.
Builders turn concepts into companies. Builders know today's solutions won't fix tomorrow's problems.
Okay, we continue to move a bit lower. Puts are getting bid at the moment. Puts are bid. Okay, S&P. We're closer to the range high than we are to range low. We're at a doji right now, so you could get chopped up. What we'll be looking for are hedge flows. Hedge flows could get down here and start to turn back up. You got support right below. All right, so hedge flows, you got support just below where we are right now.
Really kind of the key trading area here in terms of our volume, 175 to 190, matches up quite closely with our range bound area. Further to the downside, right here stands out as well.
All right, we're daily VPOC, point of control. NVIDIA is right at it, so it's having some difficulty lifting off from this level. Microsoft pulling back a little bit from the high. All the New York FANGs are taking a break at the moment. It's 11:24 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Just watching the markets at the moment. Software, materials, industrials, financials are the areas to keep an eye on. Semiconductors, tech.
Short to me, and so I started looking, and it has weak technicals. All of the moving averages are on the side of the bears. Of course, as usual, I love my defined risk, and my defined risk zone is 21 to 25, and that includes the 200 SMA. So I really love it when my zones are clusters that include, and clusters 3 or more Fibonacci price relationships that come together. When they correlate with the 200 SMA or the 50 SMA, I really like this setup a lot better. This one includes the 200 SMA. So you put your stop just above 25, and if the trade doesn't work, it just doesn't work. What I have for you, and the earnings are unconfirmed right now for March 12th, but it is a run into earnings type play.
Okay, Rick.
Go
ahead, Tammy.
I got to give the trade real quick. It's a put butterfly with the strikes are 20, 17, and 15. If you buy 10 contracts at 70 cents, then you're risking 700 to make over 2,000. You can't lose money on the downside because it's a broken wing butterfly, and now it's actually at 56 cents. So you're getting this one on sale also.
All right, so on sale, Rick, as far as the technical setup here, do you see everything on the side of the bears here as we take a look at D-Wave's chart?
Well, this is a chart that has seen some difficulties here. Our downward trend line that you could draw connecting our highs is still pointing down. I think I would probably break it up more into 2 separate trends like this here. But just to kind of show the general trajectory of a downward activity is what we're illustrating here. But really, I had very similar lines drawn to Tammy. 20 was an old high right here and subsequent high, and then breakout point, low point here. We didn't quite hold on there.
We did establish a new low near 17 to match up with kind of that other area. So our relative low comes in around that point.
CLSK.
While this area here near about 14 represents that we saw an old gap area and subsequent lows. So that matches up pretty closely with that 15 area too. So
All
those are
right.
kind of the relevant points if you were interested in an example trade such as the one. See that our moving averages that we follow are trending downward here. We are remaining above our long-term 251 EMA after a downside test, but really for now we're seeing the faster ones outpacing the slower ones. If we have more activity where we see a strong close below that 251-day EMA again and we make new relative lows, that would not be a good sign for the bulls, especially because that would probably mean breaking through this longer-term, very moderate trend line going across these lows. RSI is out of the oversold area at least, but still pretty low, still below the 50 midline, still trending downward along with price. When we do look at volume, our volume profile areas that show the heavy trading activity, one is right here, lining up with this large volume node near about 15 to 19. Things start to pick up more notably again here once we get around 26 to 29.
All right, once we get to 26 or 29, right now we are at 21.11 for D-Wave Quantum. And again, they're unconfirmed earnings coming mid-March. But Tammy, we want to thank you for being with us for Big Three today for those defined risk trades. Tammy Marshall, analyst at Elliott Wave Trader, and the Fibonacci Princess. And of course, Rick Ducat, our lead market technician here on the network. Thank you for always breaking down the technicals for us. Coming up next, we are going to spotlight crypto amid the recent slide and how investors should be approaching the asset class. Stay with us.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data.
We're just kind of chopping around just below VWAP at the moment.
Trade Live breaks down the macro moves driving the price action from Fed policy to global growth.
Okay, so I'd be watching tech, semiconductors, software, hardware, cloud. All right, diamonds are starting to bounce now. The Dow Industrials are starting to bounce. The New York Fangs are mixed, off the best levels of the session. Microsoft, Amazon, Tesla. We are in the top part of the range on the S&P, as we pointed out. Okay, so we're closer to the top of the range. Could stall up here. Worst case scenario is we pull back. Best case scenario is we break out, obviously. But I think what's going to happen is we're going to consolidate in this area, at least for now. RSI is above 50. We've had 2 days trying to accumulate shares. We had 5 distribution days prior to this week. MACD stochastics looks okay. And we got the equal weight, RSP, ECT, respect. All right, RESP is pushing higher. That's not my imagination. That's pushing higher. Okay, so yeah, we do have a few stocks that pull back a little bit. Wouldn't be the first time we see the indices, get a little ahead of itself, take a break, let the moving averages catch up. Intraday, however, we do see hedge flows turning back down, so we'll look for that to turn back up. Just about the time you buy puts, we'll get this hedge flow to turn back up. You got support down below, right in this area. Okay, so that's what we're watching right now.
How we allocate these resources effectively. And look, we've been a very focused and very efficient company at spending what we've raised in putting it into compute, into training some of the world's best video models out there, and hiring. For the impact that we've had as a company, for the kind of customers and enterprises that we serve, we're a very small team. And so right now we are scaling that. We are hiring across the board, more researchers, more great talent. And of course, the whole on compute, which is fundamental if we want to get to the next stage of what we think will come.
The kind of customers you serve. Well, who is that then? As we still typecast you as an AI video generation company, but you're not. You're a robotics company, you're an avatar company, you're a world company. So who do you serve?
Yeah, of course. That's a good question. So,
S&P 500 continues to fade a bit from here. S&P. All right, flat VWAP. MACD is trying to cross upward. MACD is trying to cross. Bulls need a bullish cross, obviously. Need volume to pick up.
I think the question is answered, and the answer is yes. It's kind of a pretty obvious yes to these days. And so we're the best company and the best solution for marketers, media, Hollywood entertainment. We've been doing this for quite some time. And so I think we've won there and going to continue to grow. There's a lot of expansion that we have to do in the industry there. Now, the models can simulate the world. So we started to simulate not only media and entertainment, but we started to simulate how the world works. And And so another way of thinking about it is we have some of the best tools to create media and videos for humans to watch. We now started to create videos and media for robots to watch, and for those robots to learn from that data, which is fascinating.
It is fascinating. It also has different impacts on different people. And when you say it helps an industry, it's kind of in the eye of the beholder. Talk to us about how you think about, as a leader of your business, the implications this has for the labor market, for what it means more broadly, for humans watching content that wasn't made by people and the reality of them.
Yeah, look, that's a question that we've tried to grapple for a long time in terms of how do we make sure that companies and industries react accordingly to what's coming, what's happening. And I think my take after seeing the industry for quite some time is I think the industry is adapting pretty well, to be honest. If you look at advertising agencies, if you look at Hollywood, it's pretty obvious these days that every studio has an AI department, an AI function, an AI chief, and the organization has started to rethink themselves in an AI for native world. And that has allowed themselves to really find new jobs, new types of things that they weren't able to do before. So in a way, that's taking some of the tasks and things we've seen in the past, kind of that will go away, and that's natural. I think that we've slowly realized that that's the case. At the same time, we've seen more jobs being put out there with new descriptions of things that even a year ago would have been unthinkable of. And I think that reaction is now becoming obvious, not only for media, for Hollywood, but for gaming companies and for many other industries, even for software engineers. I think it's kind of pretty obvious these days where you start to see that you can automate and simplify a lot of the entry level tasks and jobs. And so that's where I think we'll continue to see growth industry-wise in media and entertainment.
Christopher, we find that there's a lot of interest in Runway, right? As a company, how the models are being deployed and used, commercialization. This was a big round. The valuation's interesting. A lot of the questions we get to you about your future and whether you plan to go public. So I'd ask you to kind of be candid about that, the benefits and negatives of being a public company and why you might consider doing that.
It's not something we would not consider at some point. I think right now, given the breadth and research innovation that we conduct at the company, I think we're in a much better position thinking about being private for a bit more time. I think there's trade-offs to being a public company in terms of how you report, how you think about your growth, the kind of things that you need to focus on. Right now, for me, it is an area of unique frontier research, and being a private company allows you to do that frontier research in a much more with much more freedom. And so it's something we wouldn't necessarily not consider, but right now, given the growth that we see, we'll probably remain a private company for quite some time to retain our independence.
You can feel the volume is just, although it's okay, I guess. Market's not moving very much at the moment.
That's an interesting question. Actually, we kind of feel the assumption there. I would start to assume, I would suggest everyone probably starts to assume that most of the content that you see out is going to be generated. And in that case, what we should be kind of watermarking and protecting isn't necessarily the generated content, is the real content, the content that we've seen and we recorded from a camera. And then inversely, it'll be the problem because, yes, more content will start becoming the norm, more AI content will start becoming the norm of the content we interact with. Specifically when you can also do it in real time, which is going to be a fascinating new avenue of like gaming and non-linear experiences. I think the world is adjusting to that. There's definitely a cultural and social adjustment period, but from what I've seen, I think it's happening faster than ever before, and just prepare because it's going to get even more crazy.
Runway CEO, it's great to have you back. We appreciate it.
Of course, thank you guys.
Coming up, ahead of a landmark addiction trial, Meta ran thousands of commercials to promote its safety work with teens. Details on that next. This is Real Tech.
I worked at a casino for 6 years, and if there's one thing I learned is that all the casinos are real. No matter how much you bet, if you play long enough, you're gonna lose all the money.
Just call it a scam.
That's why when I want to play, I go for better casino instead. You can win up to $150. It's completely free to play, and it can cash out instantly, right into their bank account. Touchdown is the easiest way to make 5K.
Jerry is trying to get on the road for a long weekend camping trip. Gary is just sitting down to enjoy his perfect crafted sandwich. Oh no, Gary and Jerry just received a last-minute meeting invite. Thankfully, Otter has the team covered, with an AI meeting assistant to take notes, generate a summary, and capture action items. So Jerry can go camping, and Gary can enjoy his lunch break. Regame your schedule. Try now for free. Visit otter.ai or download the app.
Hang on, don't put that hole in your wall. If you want to mount your TV, check this out. Mounting a TV the old way, total headache. That's why we invented Smart TV. With our patented no-stud design, anyone can mount any TV up to 100 inches and 150 pounds. You can even do it yourself. Smart has gone absolutely viral across social media, with millions of views and thousands of 5-star reviews. Customers everywhere are calling it a total game changer. Get yours today at PaintSmart.com.
Is it just you're just drinking wine feel like an all or nothing commitment? Like if I just want one glass of wine, I have to open an entire bottle of wine, which I then put in the fridge, find a week later, turn into some weird vinegary science experiment that I end up pouring down the drain, which I do not like. So that's why we founded Medley. Medley is an organic, no sugar, low sulfite wine, and it holds 4 bottles of wine. And the best part is from your first glass, it lasts up to 45 days. You want to drink good wine, no timeline? Check us out.
Introducing Victor Allen Coffee. Enjoy better tasting coffee for less money. Crafted to drink coffee. Easy. Coffee your way all day. Now available at Amazon.
Let's happily market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Bragthum.
And I'm Romain Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Nothing going on. Momentum is flat. Apple pulling back a bit. Apple.
This is about timing and proximity to events, but what do we need to know in our reporting?
Yeah, so the trial is sort of the backdrop of this whole thing that started yesterday in Los Angeles.
MACD is turning up. Watch MACD.
Allegations here that Meta and YouTube and others have created these products to addict young people, you know, the infinite scrolling, the algorithms, things like that. And so these advertisements that Meta's been running for a while.
Okay, so you're looking at Intel. Intel. Down 5%. Consolidation. S&P, watch the MACD. S&P, MACD is turning up. Okay, MACD is turning up.
There's going to be this landmark trial, and in fact, there's going to be trials for Meta around child safety and teen safety throughout the year. And so, if you think about there's this steady drumbeat of headlines and news and coverage about that issue, you certainly want to have your viewpoint out there as well. And so, I think that's why we see them promoting these teen accounts that they rolled out about 2 years ago, and really trying to your point, Caroline, show parents that hey, all these things you're reading in the press, like we are addressing them.
Okay, MACD turning up. S&P is starting to rise. Okay, what I anticipated would be hedge flows turning back up, a very large sine wave, back and forth. Resistance overhead, the purple zone, resistance. Support just below. Okay, S&P is starting to take off to the upside now.
University School of Law and co-director of the school's Center for High Tech Law. Eric, as I mentioned, it's Meta, it's Google, it's also Snap and TikTok facing legal focus throughout the year, correct?
Yeah, there's a trial taking place right now, putting all 4 of them on trial. There's also a federal case that's putting them on.
That's a game changer for names like Salesforce. Salesforce has basically been a
Okay, looking for MACD to continue. For any longs that you might be thinking about, S&P. Just got rejected at VWAP.
Eric, I don't want to sound like a jerk on this front, but should investors just view the very future of a company like Salesforce, Workday, ServiceNow? Are they in limbo because of what you're seeing coming out of the likes of an Anthropic or an OpenAI?
All right, stocks chopping.
From my perspective, absolutely, they're in limbo and they're no touch in terms of investment. Like the best I think they can hope for is to slow the melting ice cube. And so they will wave hands and they will talk about how they are going to incorporate AI to become more productive themselves as a business. But their whole fundamental reason for existence, it was built in an era pre-AI. And therefore, like that business model is under assault from AI. You're just able to be a lot more productive today. Like for example, I'm growing, EMJX, which is going to be my second generation, version of a crypto treasury with hedging and risk intelligence framework. I've got a core group of probably 10, a dozen engineers, and I want to build $1 billion business. In the past, it would have been preposterous to imagine building that size business with that size team. You would have had to, envision adding hundreds of engineers, hundreds of, product people, and so forth. And the game has changed. It is actually feasible now, and therefore, that's just one small company. Now multiply that across the U.S. economy, the global economy, and it's shocking how much more productive we're going to be. And so therefore, how much fewer jobs we'll need, how much fewer the legacy software tools and seats will need.
And as while we're trying to figure out where there might be some form of short-term bottom in software stocks.
All right, we just got rejected at VWAP. Now we're pushing a bit lower. So it looks like this is going to be into the evening session. Looks like lower highs. MACD turning down abruptly.
And as we're going to get a great read, when we have Robinhood earnings coming up, we have Coinbase earnings coming up this week. These stocks have been hammered, and they have really all had a great run up last year, in part because of this belief in crypto. I'm just unsure how these fourth quarter results are going to look. And then more important perhaps than that, how do these companies guide for the first quarter with crypto well off the highs?
Yeah, and I think that what Wall Street is seeing is that with Robinhood especially, Robinhood has diversified itself so much beyond crypto that yes, crypto is part of the Robinhood story for sure, but you are seeing other businesses that are expected to offset the weakness in crypto. So you're looking at their trading volumes that are up, the prediction markets, that's their fastest growing segment. So
hedge flows turning back down.
Robinhood's going to be reporting this afternoon, and what I'm going to be watching for is that enough to offset?
Okay, we continue to look like we're going to fade a bit into the 12 o'clock hour. All right, I need to take a few minutes break while we're watching the markets oscillate just below VWAP. I'm your host, Kuzavittin, coming to you from the closingprint.com. It is 11:52 on the East Coast. All right, need to take about a 10-minute break. I need to make some phone calls. Markets are trying to bounce at the moment.
When you look
literally in the trenches working on a Bitcoin treasury. Why are you doing so? What is motivating you to create this?
Well, the kind of volatility we've seen in the last 4 months, I don't think the Generation 1 treasuries have an honest answer of how to deal with that other than say, oh, just wait 15 years and then everything's going to work itself out. I think the market is hungry for a treasury that does have a more sophisticated detection system and hedging system to kind of allow you to be bullish on Bitcoin and Ethereum, but to do so in a less volatile way that doesn't see as steep drawdowns as we've seen in some of the players that are just sort of, sitting back and hoping for the best in the long term. So, it's always a good time to start a company that solves a problem. Google was started in the middle of the .com winter, and so hopefully, time will prove out that, this was just the right time to be starting, my Gen 2 treasury, the MJX.
Well, good luck. Good luck on building that out, Eric. Keep us posted here. I appreciate it. And as always, good to see you as well. We will talk to you both soon. All right, yours truly is in the zone today, coming in hot in about 20 minutes with a chat with Marriott CEO Anthony Capuano. Earnings came out this morning, and it's almost spring break. No better time than to talk to Anthony right now. We'll see you soon.
Oh, now this thing won't happen. Now I'm getting the lay of the land.
Well, it's could be a big test for a young homeowner turning into their parents.
There's an overflow lot somewhere in the vicinity. If the garage is full, they go to the auxiliary. He said if the garage is full, they're going to the overflow. I heard him. I was right here.
Let's just stand quiet.
I bet you guys have driven some great cars, huh?
Progressive can't protect you from becoming your parents, but we can protect your home and auto when you bundle with us.
I think you might have brought the wrong car. We have the red convertible.
Meet wildgrain.com. We're passionate about delivering insanely delicious pastries, slow fermented sourdough bread, and hand-cut fresh pasta directly to your door. Build a box today and get free croissants for life. Wildgrain.com.
progress in 10 seconds. LTZ.
Welcome to Market Catalyst. I'm Julie Hyman. We are 30 minutes into the U.S. trading day, and here's what we're watching today. First, we'll discuss the state of the U.S. consumer as retail sales data shows no growth for the holiday season. Plus, we'll bring you the top takeaways from CVS earnings after I caught up with the company's chief financial officer. And we'll discuss the future of streaming as Spotify posts record user growth, and we'll also look at the artist's point for success in 2026. All that and more coming up on Market Catalyst. But let's dive right into what's going on in the markets today. What we have is a little bit of a modest gain in the market. So right now the Dow is trading higher by about 350 points or so. The S&P 500 is attempting to make a new record. It's up just about 51%. The Nasdaq is a little change. Getting back to the S&P 500 for a moment and that push towards a record. I'm just going to put up a 5-day chart here. So we're not quite at that level, but we're watching a potential record close here today. So that's something if we see an extension of the gains. Obviously, we had the sell-off last week and then followed by a few days of gains. In terms of how that's translating into the sectors that are on the move, consumer discretionary, the best performing group today, a bit ironic considering that retail sales report came in with no change versus 0.4% increase expected for December. So holiday spending, the read-through is maybe looked a little bit more tepid at that point than had been anticipated. Utilities gaining as well. Energy, which has been the big winner on the year, is down today. Looking at what's going on in large cap tech, we've seen an interesting trade there. Now, Google, as we know, Alphabet, just rolled out a 100-year bond sale in all kinds of different currencies. And we are seeing the shares actually under a little bit of pressure after that. As we know, Alphabet's planning to spend $200 billion on CapEx this year. Elsewhere, within large cap tech, it is a little bit more mixed. But I want to go back over here and take a look at some of the trending tickers today because it's interesting the earnings movers that we have been watching today. We're going to dig more into some of these in a moment. Spotify, for example, which is up almost 17%, its best gain in about a year on the back of its strong subscriber numbers and margins. We're going to dig more into this with an analyst a little bit later on. Coca-Cola down a little bit more than 1% after it came out with a forecast, the lower end of which was disappointing to analysts. S&P Global, the big data and index company, those shares down 8% after a disappointing forecast, and it's pulling down shares of other kinds of market data providers, FactSet and MSCI, for example, Moody's as well. We'll get into some of the other movers as the day goes on, but as we have reminded you before, when it's earnings season, you get a lot of these big individual swings, even if on the index level, you're not always seeing as much change as when you're looking at it relatively minor gain in the S&P 500. Well, earlier this morning, we got retail sales data for December. The Census Bureau saying sales were flat year over year. In recent quarters, we've heard CEOs and CFOs say consumers are more choiceful, cutting back, focusing more on essentials. We've also heard a lot about the so-called K-shaped economy. That's where a larger share of total spending is driven by the wealthiest Americans. So we want to take a closer look at the state of the U.S. consumer. And joining me now, Ali Furman, PwC U.S. Consumer Markets Industry Leader, and Yahoo Finance Senior Reporter, Brock DePalma, who focuses in, zeroes in on all things consumer for us. Thank you both for being here very much. Ali, I got to start on these retail sales. And I've seen some speculation, well, sales, promotions by retailers keep coming earlier and earlier. So maybe people spend all the money in November, and then they were done with all their holiday shopping by December. It's not a realistic way to think about it. What do you think?
I think that the data coming in this morning is very interesting. When we look at year-over-year data, what we're seeing is actually a stronger than expected holiday season. Holiday spend was up 6.4% year over year across all generations, and that includes all payment types. So we're talking credit card, debit, buy now, pay later, even SNAP is included in our numbers. So when you break that down to your point about K-curve economy, it does validate that we are in a K-curve economy. The high income cohort, 125K household income or higher, spent 29% more on holiday year over year. Where the mid and low income cohorts actually pulled back about 4%. And their share also changed. It went down about 2.2 to 5%. And the high income share increased, share of total holiday spend, by about 7%. So we do see that divergence. So although it's a story about growth year over year, there's certainly a bifurcation between income cohorts. And to your point, we know the low and middle income cohort are spending more of their wallets on essentials, cost of living expenses, leaving less left over for holiday.
I mean, and this is what we've been hearing from companies also. We were talking earlier about Coca-Cola and all of these consumer products retailers that are trying to tweak their offerings, tweak their pricing, figure out what the sweet spot is. It keeps people buying their products, but at the same time doesn't wither away their margins.
Yeah, and what we were talking about was this key lingo word in the industry was price pack architecture. Everyone's trying to switch around to so many cans or include within the Coca-Cola pack. And that's what we heard from Coca-Cola CEO when I was on the phone with him this morning. He ultimately said that they're playing into this, that the low-income consumer is playing into value, even going to more dollar stores in order to get the best bang for their buck. But as we've heard from many different C-suite executives, is that the K-shaped economy is continuing, and also value is super important. Take a listen to what people have been telling us so far this season.
60% of our consumers' average household income is over $100,000 a year, and they're still spending in this tough economy.
The middle, lower income consumer quite stable, same as last quarter, but still very stretched in their budgets, trying to be choiceful and cautious on how they spend their money.
1 out of 3 units now that we move are everyday essentials. And what we find there is that the more the customers can rely on us for everyday essentials and the lower ASP items, they choose to do more of their downstream shopping with us.
And what's so interesting is just consumers really focusing in on essentials, as you noted, but also these companies trying to tackle, okay, we have higher costs, higher prices, maybe because of those tariffs that are finally going through, and we want consumers ultimately buy more still in this environment where they're still choiceful and cautious, or the words we've been hearing over and over again.
Well, I guess the question is, Allie, what's going to change this?
Oh, that's a great question. So what could ease this K-curve economy? Yeah, so a few things, right? We could see inflation that's been pretty persistent subside a bit. That could help. The housing market could improve. We did see some slight improvement in the back half of calendar 25. That continues or improves further. That could help. We also are seeing this disconnect between GDP growth and GDP projected growth and wage growth. If that gap closes, that could also be helpful, right? We're not seeing super high unemployment, but we're seeing higher than usual underemployment. So people that have part-time jobs are having trouble getting full-time jobs, and people that don't yet have jobs, it's a little harder in this environment to get a job. And a lot of those are younger generations of consumers under 30, and that's our future consumer. So if that improves, which it might, because you have disruptions out there like weight loss drugs, I talk about that all the time, right? New brands, new products, new industries could be created through this physiological disruption.
I was looking at some of the figures around wage growth versus consumer inflation, headline consumer inflation, and wage growth over the past couple of years has actually come back and is outpacing inflation. There you see what happens with the pandemic. But I think a couple of things are going on. One, the perception is still that inflation is hot, and it is hot in certain items. And secondly, the overall price increase, the total price increase, is still eating into the share of spend on various items, right? So, I mean, it is not just, I guess what I'm saying is it's not just that inflation has to ease. Like something more fundamental, it seems, has to change perhaps with psyche. We saw PepsiCo low prices, right? Oh yeah, we did. But then we see a company like Hershey kind of ride along with inflation and have a lot of success, but they're also shifting their portfolio significantly towards more snacks that correlate to wellness, right? They're riding that trend. Like popcorn? Yeah, like exactly. Pyro Foodie is one of them. Necessary Evil they recently acquired. So, Dots pretzels, right? So some of those are performing really well in the current environment. And they don't include cocoa, which has been so inflationary, which has been pushing up prices. Right, exactly. Yeah. The other thing that you have to really focus in on is we are still seeing a resilient consumer. There is a significant say versus do gap, particularly these younger generations. I mean, when we first surveyed in the summer about holiday, Gen Z told us they were going to pull back 23%. Well, fast forward to the actuals, they spent 21% more year over year, right? So to your point, there's a perception out there that everything, prices are high and inflation has a significant impact, but then what consumers actually do is often very different than the sentiment.
And what was so interesting too on that same younger consumer was that Chipotle CEO actually said on the call that 18 to 24-year-olds have been pulling back, and this quarter they gamified the process, gamified the ability on their apps for making freebies and getting different rewards by doing different things, and that brought back in that younger generation. So it's all about like trying to get that consumer where they're at and what they want to engage with brand.
I'm also curious what money they're spending. In other words, do they have this cash? Are they using buy now, pay later? Are they using credit cards? Because if they're not getting jobs at the rate that they want, are mom and dad who are invested in the stock market helping fund some of this?
Yeah.
I can speak to this a little bit. So a few interesting points. Number one, credit card delinquency rates of people 30 and under are about 10%. The national average is 3%. So we do see this generation having higher credit card delinquency than other generations. Number two, this is a Gen Z in particular. They're a paradoxical generation. They're the most cost conscious we've ever seen any generation be, but yet they're willing to splurge on things that provide joy, give them social status, speak to self-improvement, and they also splurge on experiences. So, they have some money and they're willing to spend it on those types of things. The other point, they only made up about 5.6% of total holiday spend share, whereas a generation like baby boomers made up 34% share, just to give you some dimensionalization there. But so they don't have a ton of purchasing power now. Their average age is 22. By 2030, they're expected to have $2 trillion in purchasing power in the U.S., 12 trillion globally. Where is that coming from? Well, they're going to grow up and they're going to make more money. But also, there's expected to be a significant transfer of generational wealth to the generation, right?
Yeah. And also, what's so interesting that I've been following is the effect of this one big beautiful tax bill that's coming out and the implications that can have for stimulus into the economy. Bank of America predicting that this would be a $135 to $140 billion of consumer stimulus around tax season. And so what are the implications there? They think that middle and higher income households are going to benefit more, but McDonald's sort of hoping on the fact that the lower income consumer will also benefit as well.
Well, but that also speaks to the point about how lumpy the spending cycle is. I was just reading some research from Tom Simons over at Jefferies. He's an economist there, and he was reacting to the retail sales report and said, particularly the lower income consumer needs those events, right? Whether it be holiday or back to school or tax return season, to sort of get them out there and spending a little bit. So, we'll see what that looks like across the income cohort when people start getting those refunds.
We're seeing that in the data as well around what I would call either holidays or cultural moments. It's a similar thread from Halloween to Super Bowl to Valentine's Day. Increased spending year over year due to increased participation. So these holidays are becoming more inclusive. For Valentine's Day, people are gifting not just their romantic partners or romantic interests, but their pets, their children, a chosen family, right? So we expect participation to go from 52 to 55% year over year. Super Bowl was a significant increase in who participated. They did most of the time.
All right, hedge flows turning up. Looking for a big sine wave in the purple line all the way back up to the highs. If that happens, we could see this move back to the top of the range. Okay, we're moving through VWAP right now.
guy named Eddie Bauer. There was actually an Eddie Bauer. But you know, it just seems like after the, you know, everybody during the pandemic was buying outdoor gear because they didn't have anywhere else to go except outside. And so they did really well, and then that demand kind of dried up to some degree.
Yeah, and what I would say on this is not the first time that we've seen a retailer file for bankruptcy this year.
Sure.
We saw Saks Global also file for bankruptcy earlier this year, and what the company ultimately said, is that there's these changes that are happening so fast within the category, not just within like the outdoor market and so many other.
All right, 12:15. Let's change channels here and see what's going on.
I'll just add that we are seeing winners and losers in this environment. You mentioned dollar stores, big
stocks that are breaking out, whether they're in industrials or they're in materials, or you're finding names in healthcare. You're finding names that are not susceptible to the things that have plagued the software industry and can't be replicated by a chatbot or an LLM. And just they're going up, and there are so many of them, like thousands of stocks advancing, not all making new highs, but this is the chart that tells the story. And the R in RSP, for people that haven't been around as long as Jimmy, Joe, Steph, and I, that comes from Ridex. They were the only company that had an equal weight index product. And I guess when Invesco bought it, they kept it, the R there. But like, that's how long this has been a trackable index. And not enough people are paying attention. When we talk about the broadening, it's not a one-day thing. This has been going on now for weeks and will probably stretch into months and quarters.
So let's talk about a couple other things. Okay, gold was lower the last I checked. We can show it just to give you an idea where it's currently trading, because Wells Fargo says it's going a lot higher. That they expect the rally to continue. Pullbacks or buys. Can we throw that up? Let's look at the chart, please. They raised their price target to 6,100 to 63,000 bucks at least higher from here. 11 to 1,300 $100 higher for gold. Bitcoin was back below 70K. Michael Saylor, strategy, says credit risk around that name's overblown. He's going to keep buying it, quote unquote, forever. Robinhood.
Equal weight sectors looking good, starting to outperform in real estate and technology.
Robinhood hasn't really traded well either. Back that out. Give me a year to date, guys, please. Coinbase has been in the news too. So there's your move lower year to date, down 24%. What do you think?
First of all, for Robinhood tonight, I think a lot of people, myself included, look at this company and automatically think crypto. And that, look, that's correct. I understand the decline we're seeing is related to that. But the overall exposure in their revenue that they have to crypto continues to decline. And it's now at single digits at 9%. So there's more to the story with Robinhood. You have to hear that story tonight. You have to hear about how they are diversifying the overall model. I'm not going to dismiss that the stock itself has pulled back precipitously from October. It's a prove me moment this evening for Robinhood, but let's not just make it totally about crypto.
No, but it is what it is. I mean,
there's a stigma. There's a stigma related to it for sure, and obviously it's been negative as it relates to what the impact on the stock price is. But there is more to the fundamental story for this company.
let's talk about something that we've been leading with a lot, or certainly getting to higher in the program for the last, gosh, feels like months, and that's software, which is getting a bounce today. And it's noteworthy. And JP Morgan today mentions that they believe the balance of risks is increasingly skewed towards a rebound, especially in what they deem to be quality segments like cyber, which is well loved on this program. They look at AI resilient companies. They like Microsoft. They like Palo Alto. They like ServiceNow. ServiceNow hasn't traded well. Not for that matter, Microsoft hasn't either.
S&P equal weight rising. S&P breaking higher now.
And then there is Synopsys, which Stephanie Link has a strong buy on.
Yes.
Because you just bought one.
I did. It's a new position though. So I started small. The stock's down 6% year to date. It's down 19% in the past year. These guys make mission critical software for the semiconductor companies. And the more complex chips get, the more they need Synopsys.
Tesla breaking out to new highs. Tesla, let's take a look at the 60-minute.
space. Their backlog is about $11.4 billion. So I like it. I'm just using the weakness and the bad days in software to be adding to it, and I'll continue to do so.
Okay, you know who else likes software? Retail. Retail likes software. Because Vanda research today says there's been record buying from retail. Million rolling net retail inflows into the IGV surged to a record as of the close yesterday, more than double the prior peak seen during the late 2024 drawdown. So retail looks at this and says enough's enough. There's your chart of buying. Josh, you have a thought on that? David Palantir, which is a very popular retail name, upgraded to a buy at Daiwa. The target does come down a bit, but nonetheless, they are bullish there.
Well, I was out buying the dip in some of my software names, so I obviously don't disagree. I think this has gotten completely carried away. I understand that in today's day and age, these kind of like trading memes catch on like wildfire, and it's not just retail, institutions, hedge funds, everybody gets the memo and reacts. But the interesting thing about retail is in prior eras, you would look at something like that inflow chart and say, oh, that's the dumb money. No, the retail traders are hip to the game. They understand that in an overreaction, you go against what the screen is telling you. And not always, but in a lot of cases, we have V-shaped recoveries. Now, I don't think we'll get a V-shaped recovery for software. I think, unfortunately, these companies will continue to re-rate lower, even though their results are great for the most part, because people just don't believe that they're all going to make it through the AI revolution. So I'm glad that I added to some of my favorite software names. I am not actively out there hunting for new opportunities in the space, and I think unfortunately the rebounds are going to roll, and that these names will stay in a downtrend. They're guilty until proven innocent, and I don't know when they'll be proven innocent. Could be a long time before people really believe that these companies are all going to make it.
Fair points. Hard to argue with any of that. Quick thought from you before I move to something else.
Agreed. I'm very comfortable moving the software exposure down to 5 names. I think stability.
All right, so NVIDIA turning back up too, NVIDIA. All right, Tesla looks pretty good. Tesla moving above its 20 EMA. Okay, that looks good.
All right, show me shares, please, of Qualcomm, QCOM. Now, we can look at that on an intraday, please. Resume sell at Morgan Stanley. Not doing anything. So give me a little longer look now, if you would, please. Resume sell at Morgan Stanley. Memory headwinds will create handset shortfall. Resume coverage at underweight. 132 is the price target, so they're looking for a little downside there. Executed well, they say, under challenging circumstances, but may have maximized earnings power for now. Jimmy owns Qualcomm. He's already gone through one water.
I might have to double
He's
fist
almost
here.
done with his second. Liz, help me out.
I might have to double fist.
All right. So take this.
Yeah, I mean, they have done well under the circumstances, and the big circumstance that is not in their control is getting access to memory chips. And we've talked about this for a long time, several weeks now, about Texas Instruments, Micron, every one of those companies saying, listen, we're taking all of our production of memory and we're sending it to data centers. That has meant that there are supply chain shortages for Qualcomm. I do think that that's a temporary set of circumstances, and in the meantime, the actual products that Qualcomm is developing, whether it's for handsets, but more importantly, for automotive, for Internet of Things, for data centers, that these are applications that the customer wants. So as soon as we can get more memory supply, and even if it's at a higher price, Qualcomm should be able to raise their prices to adjust for it. But there is a time period here, and I don't think this is a moment where you have to rush out and buy Qualcomm. I don't think it's a sell either. I think that's way too dramatic. I think it's way too cheap to sell it here, but it's going to take some time for those supply chain issues to work themselves out.
Okay. Now, we did mention memory as part of this call, so let's look at Micron. Target goes to 500 MU. Thank you. 376.
All right, Tesla looking good here.
That was the target at Deutsche, and blew past that, obviously. Now they go to 500.
Tesla looking good.
Like later than the other AI names, but it is in the midst of what was a deleveraging process over the last several weeks, people taking down positioning. The stock itself still resides at 377, about $55 above the 50-day moving average.
Tesla looks good.
Fall here. However, I tend to love to see that
Excuse me.
because I think the fundamentals
Tesla, let me just see.
strong.
Those calls are Tesla. Those calls are for next Friday. Okay.
More than 14%. So they had a record MAUs, monthly active users, for the fourth quarter. We talked about coming in. If you pull the stock back now, you'll see what I was talking about yesterday. The stock's traded terribly, right? You sounded like you almost, it was like right on the doorstep of getting kicked out on the curb from the ETF, but it had just enough momentum in somewhere to stay in. I don't know what you make of this move today, but it's quite a move relative to what it's done recently.
So for the rules that we're applying, we're looking at quality, we're looking at momentum. Quality has never, ever been the question for this company, and it's supported in this earnings report with stabilizing and improving margins, double-digit revenue growth, and you mentioned the active users, which are at an all-time high. It was the momentum that was the challenge. And
Robinhood, we've got earnings tonight. What I did with Robinhood, I posted earlier. Just type HOOD in the search box above, and you'll see what I posted earlier this morning. Or you can scroll back to about 10 o'clock or so. Robinhood, I have the July 115, 125. The last time I did this, I took the same month expiration. This time, I'm going to take the Friday puts because I have the 115, 125 call vertical for July. I'm looking for Robinhood to continue trending off the low. If for some reason short term it does pull back a little bit, I have the 75.80 put credit. So if it drops down towards 80, I can make about $400 per contract. Maybe 5. Okay, depends. So that's short-term protection, but I am looking for Robinhood to continue. Okay, off the low. Here's the 60-minute, 20 EMA. So we're making higher highs and higher lows. Okay, so I have the 80, 75 put, 80, 75. So if this drops down into this zone and does a double bottom and holds this area, those puts will make some cash that will insulate my call side. The call side's back in July. So if it does for some reason pull back to here, look for a double bottom and a follow through. I'm anticipating that Robinhood's going to be fine though. Okay, so after the close, okay, last time around, consensus was revenue was 1.32 billion. Consensus was 63 cents. They came in, they beat expectations. And what's most profound to me, utilizing earnings whispers, is if all 4 metrics are green. They beat the best estimate, top expectation. Earnings growth 258%, revenue growth 100%. So these are all good numbers, and we're trading at a discount. Okay, so last time around was 61 cents of revenue, 1.27 billion for the third quarter. The company beat expectations by 7%, as you see over there on the right. And they've been getting into the prediction markets too. So I think that might add to the revenue, if I'm correct. Is Robinhood Yes, Robinhood offers prediction markets through its Robinhood derivatives platform as of February 26. Service provides over 1,000 contracts covering sports, cultural events, and economic indicators. Economics, users can trade contracts on the U.S. Federal Reserve rate, GDP growth, etc. Politics, you can bet on that. So they coming into earnings, they'll get a little boost from this probably because it just started in February. As of February. Okay, so earnings are tonight. Okay, VWAP is flattened out. So what I'm anticipating is that, and so has MACD. What I'm expecting is prices are just going to sit here and chop people up. So don't bet heavy. Don't bet heavy. What I've seen lately is don't bet heavy until the end of the day, like the last hour when dealers start to close their positions. They have to hedge the positions, and you can see using Trace, we can see where the hedging is going on above and below. So at some point, they're going to have to close these positions on the 0 day. On 0 day. We got some support down here, and we're cruising a little bit higher. So we got a little bit up here at 69.95. I don't see us getting above 7,000. Longer dated positions, you can see 7,010. They're selling 7,010. They're selling 7,010 calls, longer dated. So they're not expecting prices to get above that. They being people out there aside from the dealers. This dealer is long here and short here. Short at 7,000, long at 70.10. Okay, there could be some credit spreads in here. For now, though, we're just doing not much of nothing, not much of anything here. Okay. Micron. Boeing taking a break today, coming off the low, turning back up.
What all of those have in common, whether we're talking about a consumer staple stock, or we're talking about something that moves earth, or is involved in mining or agriculture or data center build-outs, they are heavy asset companies with low obsolescence risk. So Halo is heavy assets, low obsolescence, and that is the through line.
Robotics, HSAI, robotics, HSAI, continuation. We hit a high last hour. We're trying to push through that now. 60-minute, 20 EMA is turned up. That's what you want to watch for.
You obviously can't see a situation where Claude is going to produce a tractor. And so that's the separating line between what I think is going to work this year and what's probably not going to work and is currently not working. And it's a really simple litmus test, Judge. It's a really simple question. A ticker comes across your desk, you're researching it, you're looking at it. The earnings is one thing. That's math. The sentiment is really tough. How do you get the multiple right? What people are going to be willing to pay? Apply my test. Does this company have heavy assets, and what is its obsolescence risk relative to the $700 billion some odd dollars in capex that are being spent by the AI complex? And if the answer is no, they can't replace this, and the assets are meaningful, maybe it's a utility, maybe it's an industrial, maybe it's a staple, but chances are you have a stock that could actually work in the year of our Lord 2026. Everybody gets that? Everybody with you on the desk?
We got you. The chart's not worth chasing. The chart's to get constructive on. And messy charts, Estee Lauder is one of those on the list, which...
Okay, we got, this is looking pretty good, HSAI.
Let's hear about this one, Steph.
Well, I thought the quarter was actually very good. They beat on earnings, revenues, margins.
Okay, higher highs, higher lows on HSAI.
Conservatively, but they did inch up organic growth. The people were expecting a lot higher of a number, but down 21% after a company beats and does raise the organic piece, just not by as much as people wanted. That to me presented an opportunity. I really am excited that China has actually accelerated. Their growth was 12%. That was really very good, offset by US, which was flat. Everybody wants the US to see a recovery because the two regions are 50% of their revenue. So you need the US to pick up momentum. I think they will. I think beauty Beauty Reimagined. This is the strategy that this CEO, and he's fairly new, has in place. And I think they are seeing some momentum. You'll have fits and starts each quarter, but I thought down 20% was a gift.
All right. Let's get the headlines now with Courtney Reagan. Hey, Courtney.
Hi, Scott. A federal judge in Michigan rejected the Trump administration's attempt to tame the state's voter rolls. Now, the case was one of more than 24 lawsuits recently brought by the federal government seeking state and local voter registration data. Administration officials say they need the records to keep elections secure amid unsubstantiated claims that undocumented immigrants have been voting illegally. Former Representative Tom Malinowski conceded the special Democratic primary in New Jersey to progressive activist Analila Mejia today and congratulated her on the upset win. Less than 900 votes separated the two in the race to replace New Jersey Governor Mikey Sherrill in the House. And Canada's Prime Minister Mark Carney says he spoke with President Trump today about his threat to block the opening of a bridge connecting Detroit and Ontario. Carney said the situation would be settled, but didn't give details. It comes after President Trump said he wouldn't allow the Gordon Howe International Bridge to open until the U.S. is compensated by Canada. Scott, back over to you.
All right, Court. Thank you. Courtney Reagan. Coming up, going global, investors rushing into opportunities outside the U.S. We will find out where they stand on that trade and where people are looking. We'll tell you next.
All right. Hope everyone's having a good day. Sure is a nice day outside. I took a little walk earlier when I stepped off for about 15 minutes. Made some phone calls while I was walking. So gorgeous outside. Okay. Okay, HSAI taking off to the upside, looking good. Yeah, that looks good. That looks really good. Okay, TerraWolf. See some people talking about TerraWolf. WLF. Yeah.
For cheaper stocks goes global. Nothing new. The only difference is that, as they say, last spring it was sell America. Now Wall Street's hot trade is buy everywhere else. So less about selling the U.S. because obviously we're at record highs on the Dow and the equal weight, et cetera. But there's a lot of interest elsewhere. Flows into international funds are huge. The Brazil ETF is up 21% year to date.
year to date. Stephanie Link's been trying to tell everybody about it. She's been in it, and she's happy today.
Yeah, Terra Wolf looks pretty good.
Brazil, it's very favorable demographics, just like India, which I still like, but I don't know. They also have favorable monetary.
Okay, Terra Wolf. Wolf looks good.
Making progress over the last couple of quarters. Most people think that Brazil is a basic material.
Terra Wolf looks good.
And it is, but it's also a power play. They have the power that everybody in this world wants and doesn't have. And so I think they're going to be a very big beneficiary of AI, and I don't think people really appreciate that aspect to it.
Wolf from yesterday, good. Yeah, it's breaking out today. Breaking out today. Blue dot scan too.
Reasoning why you're seeing interest once again. And understand, you've had this dramatic shift in sentiment where for years you had investors in the financial services community looking at the emerging markets at an underweight positioning. And now you've had this paradigm shift. So it is the fall in the US dollar. Earnings growth in 2025 in the emerging markets actually outpaced the US. So the US is doing somewhere around 14%. You see the emerging markets doing 29%. You also get the exposure to technology as well. If we could show EIS as I speak, that is Israel. I talked about it a lot last year. Israel is the second leading exporter of technology. That's trading near an all-time high. You can also throw up EWY as I speak. That gets you exposure to Samsung, Taiwan Semi in Asia. Remember, the AI supply chain is domiciled there as well. And then not an emerging market, but developed international is really strong as well. You could look at the EWJ, and you'll see the strength that's represented right now in Japan. There's opportunities to go outside the U.S. for the very first time in years. The same factors that we were talking about at the beginning of the show. RSP, we didn't really talk about small caps, but those are sectors where the industries that are represented there are also represented in international and emerging market. Which sectors am I talking about? Industrials, financials, energy, material. They are heavily expressed relative to the U.S. market in international development.
Did you do any channel checks on your recent trip?
Boy, that's going. Wait, do you remember what that reference you just made is? Do you remember where that came from? I'm not going to embarrass myself. Yeah, I'm not going to embarrass myself. You've got to work for it.
JC, I don't know, but
dude,
just answer.
He gets the prep.
It was JC. That worked out well.
Yeah.
What about that?
I actually did win the 2016 trading competition on JCPenney. My problem was going back into it in 2017. Your question on channel checks?
We're good. Santoli's next.
All right. Wolf looks good. Wolf. Wolfie. All right. So where's Boeing is okay. Boeing coming back up. All right. Okay, that looks good. All right. Tesla. We like the Tesla 60-minute. Okay. So it's not going to go straight up every hour, but it does look good. Broadcom just can't seem to get any kind of tailwind. HSAI. I'm going to put HSAI here for now. HSAI is breaking out. HSAI breaking out. Mr. Ticini. Did I already post this? Sorry if I did. Tesla. No, I didn't. All right, good. Looks good. I do like what I'm seeing, but I'm not jumping in feet first and throwing a bunch of money at the markets. I really want to see some follow through. And we've already started Monday off very well. S&P's on the move here. And a lot of stocks, especially from the software space. Software got way oversold. So your advantage there is you're closer to the low than you are to prospective highs. So if you look at IGV, right, IGV coming off the low. Okay, so we just crossed over yesterday. Is this a guarantee that the software sector is going to continue to push higher? No, but it gives you a great risk reward because you can put a stop under last hour's candle, or you can wait for tomorrow. You could put it under 85. The 20 MA is down there, or you could wait until it catches up with the 20 MA. Regardless, if you look at other stocks in the group like Microsoft doing the same thing, okay, Microsoft got a little ahead of itself, but this is par for the course. You get above the 20 MA, you get a shift. Okay, here's the HSAI. You get a shift. HSAI moves above the 20 MA. What does it do? Takes off to the upside. Okay, comes back to the 20 MA. Once it reverses and the volume picks up, you know it's time to get in. Put a stop underneath today's low. And boom, there you go. S&P on the move. All right, all the New York Fangs are starting to pick up some bids here. Let's see what the Dow Industrials look like. I know Russell is short the Dow. Okay, that's hanging in there. Russell, did you close your short, or you still got the short on diamonds? Okay. Palantir, software as a service. Okay, it did fade back to the 20 MA. So this is a good example. So let's say this holds here, and the next 60-minute candle is a push higher. You put a stop underneath 140, and you go from there. Okay, whatever the 60-minute tells you, pay attention. When you're below the 20 MA and prices and 20 MA is dropping, you want to stay short or out of the position. When it starts to turn back up, the 20 MA turns up and to the right. Watch for bounces or pullbacks to the 20 MA for best entry. Once it moves above the 20 MA, that's your first alert. Fades back to it. Let's see if we get a follow through in the next 60-minute candle. S&P is on the move. Let's look at the spiders. Okay, spiders. Okay, we've been sitting here for the last couple of days, just moving sideways below recent highs. So 60-minute, you can see, is a range-bound condition. All right, so you don't want to be buying calls at the absolute high of the day, and you don't want to be buying puts at the absolutely low down here. You want to be buying calls down here and potentially puts up here if we get rejected. Watch your 60-minute. All right, so Tesla's another example. Tesla moved above the 20 EMA. Okay, past couple of days, it's been respecting the 20 EMA. So once above the 20 EMA, I'm thinking bullish. Pullbacks to the 20 EMA, I'm looking for bullish candles. Or if this takes off to the upside and can get above the 20 EMA, that's the daily reference point. The dotted red line is the daily 20 EMA for reference. Now we're looking for a bullish candle. I won't do anything here. I already have Tesla, but if we push above, we get a bullish candle. You can put a stop underneath either today's low down here at 416, or you can put it under this last 60-minute candle if you want to scalp it, short-term swing until tomorrow. Looks pretty good so far. It's breaking a downtrend, apparently. RSI is rising. MACD stochastics look okay. Daily looks okay. Okay, we've got 3 white soldiers after a 3-candle reversal. 3-candle reversal, big bearish day. You get a doji. The next bullish day creates a 3-candle reversal called a morning star doji. Very powerful reversal pattern, especially when it's followed by 3 white soldiers. 3 bullish days in a row. Volume picks up. MACD stochastics turning. Is it 100%? No, it's never 100%. But you got a good risk reward here if Tesla continues to move higher. Watch your 60-minute. Okay, so next 60-minute, and you can watch your 1-minute chart. Okay, this is turning back up. Okay, looks good. Looking good. Okay. Coupons. Anybody seen Beetle? Beetle, have you been around? You're doing okay? It just occurred to me that I haven't seen you in the room lately. Beagle, Randy.
Welcome back. Want to highlight an upcoming event for CNBC Pro Live. Wealth for Women is happening on May 28th at the NASDAQ market site in New York. It's all about financial strategies for women who are investing for themselves and for others, featuring our top contributors, including our very own Stephanie Link. For more, you can scan the QR code on your screen or visit cnbcevents.com/wealth for women. We are back with the setup next.
Oh, cool. Cool. Good to see you, man. Good to see you. All right. S&P looks like it wants to go some more here. S&P. We're above VWAP. Okay, the high of the day. We're probably going to run into a resistance up here. That red band overhead is resistance. Okay. So if you have calls from the low, you're making good money. Don't be greedy. Take a little bit off into strength. Okay, that's resistance up there. Yeah, Randy, I just hadn't seen you in a while. I'm not always in the trading room. So this is supply. Okay, resistance. If we get there, looking good. S&P still pushing. Falling off the low. Palantir pushing higher. Bitcoin. Okay, we're coming up to the 1 o'clock hour.
Guidance for the full fiscal year. That'll recalibrate everything going forward for 2027 as well, higher.
All right, so we've had a pretty good start to the week. Following a surge back above the 50-day on Friday, MACD on the daily is about to cross over. We've got momentum bullish. Volume is tapering off a little bit. We'd like to see higher volume on any move to the upside on the daily time frame. So a retest of the highs would be pretty cool. We got stops up here. All right. And there's people selling premium overhead as well. Okay, we can see the premium overhead, longer dated positions. Okay, if we look at net open interest, we can see all of this volume up here, up to 70, 50. I think that's a JP Morgan collar, right? The short JP Morgan collar. The dealer is long when it's facing to the right. That's the dealer long. That means the market's short. And we got all this purple. You see all this purple overhead? That's resistance. Okay, so still a pretty sluggish day. We're already seeing hedge flows starting to taper off a little bit. I'd like to see a little bit more upside. We're running into resistance. We're running into resistance just overhead. We did break the downtrend. MACD's already turning again. All right, so these moves, these legs to the upside don't have much momentum. You can see the MACD turns up for a few minutes, and then it turns right back down. Got resistance overhead. So looking to other stocks for more, for higher risk, better risk reward, I should say. And that being the software sector, semiconductors, industrials, and materials. So let's look at those. Okay, here's Tesla. Tesla technically is discretionary, but it's also industrial, right? So XLI, industrials, higher highs, higher lows throughout the day. Industrials look really good. Let's look at the 60-minute. 60-minute. Okay, so stocks like Caterpillar at the highs, John Deere at the highs, 3M at the highs. There's a Danaher turning off the low. S&P pulling back. So energy, the XLI looks good. Materials on the move. All right, so it's pretty clear where you should be investing, where you should be trading. If you're trading in something like utilities, that's taken off to the upside. Okay, so I shut my mouth. Utilities are getting a bid. Okay, so the Fed's going to drop rates, right? They need to drop rates. That's, debatable. I'm just saying they need to drop rates in order to get ahead of the interest payments that the country has to pay. Okay, if AI kicks in like everyone's expecting, gross revenues from the internal revenue, right? Gross revenues have to be higher than the interest payments that we're paying on the debt, right? We expand on increasing debt. We take debt, we expand industries. That's just been the way capitalism's been set up. So we need to have our interest payments lower than the income that the Federal Reserve is taking in, the Treasury. So they need to lower rates. So long explanation, but the point is that these fixed income investors will start buying utilities when they think they can get a better yield from utilities. Okay, healthcare. Okay, trying to bounce. Consumer discretionary. The two biggest components of discretionary are Amazon and Tesla. Amazon just kind of sitting here, doji, spinning top after last week. And Tesla, of course, is trying to continue. Three white soldiers after a three candle reversal pattern. Morningstar doji, very powerful pattern. I'd like to see this volume at least as much as yesterday or even higher by the end of the day. I don't know that we'll get it, but if it does happen to increase to above yesterday's volume, that'll be a clue that we'll see a follow through, right? So, all right, this looks okay, but it looks a little timid now. We had a nice little run up and a nice little run back. Now these little timid candles on the way back doesn't say a whole lot. Volume tapering off a bit. And on the 60-minute, we're right at the 20 EMA on the daily. Okay. Okay, so that's the middle of the Bollinger Bands. The 20 EMA is right there. Middle of the Bollinger Bands. Okay, so we want to be above the midline of the Bollinger Bands. Okay, so that would become more bullish. And then you got the 50-day overhead. So we got some things we need to take care of. That said, we've got a nice move off the 200-day moving average. That dotted gold colored line actually looks kind of poopy brown. But yeah, that's a nice move. Volume's okay. MACD stochastic's turning. In a perfect world, stochastic RSI, MACD all turning up and volume increasing. Price should go. As a function of price, these will turn. The stochastic right there is telling you the odds are for closes in the upper half of the daily range. So what does that mean to me, Vinny? Okay. If stochastic is turning up, that's telling you by design, this indicator by design is telling you look for closes on average in the upper half of the daily range. So if we've already hit the low of the day earlier, If Tesla made the low already and stochastics is turning up, that's telling you that if you bought down here, the likelihood that we're going to close in the upper half of the daily range is pretty significant. It's not a 100% guarantee, but in this world of trading, it's a pretty good system to follow. That was designed by, what's his name, Frank Lane, Stochastic. I forget from time to time. I can't remember these guys. The creator of Stochastic. He was a cotton trader. George Lane. Okay, he used to do Chicago futures, especially cotton. And the whole idea of using stochastic, is that, he wanted to know if he was buying today at the low, at the open, what's the likelihood that we're going to close in the upper half of the daily range? So that's why he designed this indicator. Okay. Occasionally you have these little pullbacks. Markets are erratic, illogical at times, but overall this works. If you look at it on a 14-day basis, this is designed for 14 days with a 3-day crossover. So if you bought the low of the day this morning, likelihood is we won't close at the low of the day. So Tesla looks good. Tesla. And it's 1 o'clock. It's 1 o'clock. So let's see. Okay, Renko looks pretty good too. Renko. All white bars. Could make them green if you don't like white. 50 days overhead. Okay, let's look at point and figure. If you don't know point and figure, I'm going to tell you about point and figure. It's pretty simple. This is what I learned, how I learned to trade back in ancient times when an abacus was the way to calculate. And a slide rule. Okay, point and figure. Okay, so the column of X's is buying. The column of O's are selling. The only way you get a bullish condition or a follow through as you continue to create X's. All right. So you see a green X there. So that means we just filled this spot at 424. Okay. So it looks like $4 increments here. 416, 420, 424, 428. So if we fill 428, we'll have another buy signal. That green X is a buy signal coming off the low today. And if we fill in, if we get all the way up to this red descending trend line, which is automatically generated, if we get up there, we'll get our next blue uptrend. Okay. The boxes each month from January into September, 1 digit, so 1 through 9 can populate these boxes. Once you get to 10, it's kind of hard to fit a 10 in the box, or 11 or 12. So they go to A, B, C. You can see over here, here's B over here. So that's November. Where is C? C right there. Okay, C right there. When we broke this uptrend, our downtrend in December, we ran up, came back down. In January, we consolidated, started drifting lower. We had a downtrend. Now we're just trying to reverse the downtrend. And if we break higher in the month of February, nothing will change here. If we break higher in March, you'll get a 3. So that's good. So that's how you use point and figure. Easy way to delineate price action. Instead of trying to figure out $20.25 or $20.50, when you have a $20 box price closes, you put an X. $21, you put an X. $22, you put an X. Very easy to follow a trend using point and figure. You don't get shaken out that way too, as well. Anyway, watching VWAP here, retest the VWAP again. So point and figure, the good thing about point and figure is at the end of the day, you can see what has traded. And if you have the next box higher, you can put an X in it. Your next box lower, you can put an X in it, a 0 in it, and you know what the trend is. Intraday price action really not that relevant on a point and figure chart, unless you're doing a 60-minute, which kind of defeats the purpose. If you missed what I was saying, it's recorded, so just look at the recording later. At around 1 o'clock, I talk about point and figure. It's really very simple. All right, GDP looks like really GP is expenditures. If inflation comes down and the labor market remains stable, no further cuts are needed. Okay. All right, so it looks like we're just going to chop people up. We're not making any progress here on the S&P. Our HSAI looking really strong here. Pointed out by Mr. Turcini in the room. Okay, here's the 60-minute. 60-minute. All right, we just took out the previous two hourly candles. Straight up, basically, on HSAI. Okay, I have the 30-35 call spread on HSAI. I bought that earlier. That's currently up $30 per contract. $150 to me. I only have five of these for now. I'll probably add to these. I'll probably go to 10 at some point. A good thing about using the 60-minute, I often talk about this, is that the biggest issue a lot of traders have is how, where do I take profits? Should I keep swinging? Let's use Chevron as an example. Chevron, we bought back in January on the 3rd. The 3rd was the weekend capture of Maduro. On the 5th, we gapped up. We initiated a position there, small position. It's only like 5 call spreads at the time. It dipped, and when it dipped, I added to it once we got back above the 20 EMA. So now I have 10 call spreads, 155, 160. As we started to move higher, we kept using the 20 EMA as our stop. Eventually, we got to 180, 185 call vertical, and you can see that we dipped this morning, and now we're turning back up. So the 180, 185s are still good. Very good example of using this as a trailing stop. One candle below isn't enough. It needs to be the cascade or several candles below to take your stop. Now Chevron's turning back up, so that looks good. Looks like we're going to follow through in Chevron.
Transitioning from this intensive capex moment to a moment where it might translate into more hiring and kind of stronger GDP, and who knows what that means for rates with wars.
Well, I think right now we're not likely to see that turnaround in terms of job growth rebounding or re-accelerating.
So that keeps you in a trade a lot longer. You can see if you look at the daily time frame, most people would say, "Oh, this is way too expensive up here," which at this point, yes, it is a bit expensive, but if you consult your 60-minute, it can quickly tell you where your stop would be. So if I took along at 181 or 182, my stop would be $1 lower, which is not that much for a $180 stock. All right. So, and it keeps trending. So as many traders or many successful investors will tell you, or traders, keep the trend, keep raising your stops, go with the trend. You only take it off once you break your trailing stop. Let your stock trend and cut your losses quickly. Okay, so HSAI. Big move on HSAI. Wow, this is really cooking here. Is there news on HSAI? Okay, so S&P not giving us much. HSAI. Where are you? Price action. There it is. Okay, HSAI. Okay, let's see if there's news here. HSAI, robotaxis winning Investor confidence on building business models, profitability, market talk. HSAI Group to hold extraordinary general meeting on March the 3rd. What does that mean? Extraordinary general meeting. Extraordinary general meeting? That's interesting. All right, so this is a Chinese stock. Just keep in mind that these things do act erratic at times.
We're just hearing about the pressure on the consumer. So it's hard to imagine that some people aren't going to bulk and say, you know, a phone that's 15% higher in price. I mean, it's going up, what, $150, something in that neighborhood? I mean, that's a big, meaningful chunk.
Yeah, no, it is, and we assume that
Pony AI and Horizon Robotics. Okay, Pony. 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 Pony AI. Okay, that's trying to get above the 50-day. So if it gets above the 50-day, Pony looks like it could work. Okay, we continue to fade S&P. I realize we're fading at the moment. Hedge flows turning back down again. So it looks like we're going to get chopped up. Looks like we'll come back down here. Watch hedge flows for a reversal a little bit lower here and turn back up. So I'm looking for the last hour of the trading day for any sort of bigger moves than we've already seen today. Reason being, dealers have to close their hedges for the day, flatten their books. So we'll see how they close and see how that affects price action, if at all. All right, Disney. Okay, that looks all right. Chevron.
They had that 8-week losing streak earlier on. So have they put that behind them now?
I mean, I think this is what I wrote today.
HYMC. What is HYMC? HYMC. Highcroft Mining. Okay, that's turning back up. HYMC. I just heard an audio alert. HYMC. Highcroft Mining. I don't know what they do other than maybe they have some exposure to critical metals. There's no. Oh, okay. Here we go. Highcroft Mining is U.S.-based gold and silver producer operating in the Highcroft mine located in the world-class mining region of northern Nevada. Features one of the largest gold-silver deposits in the world with a low capital, low-cost process and a 34-year mine life. Ooh, that sounds good. HYMC. Okay, that's rising. Yeah, I'm not into metals at this point. We'll see how far this goes. I'm expecting that silver and gold could consolidate more. Okay, so I'm not interested in doing anything with gold. After this big run-up, I'm not really keen on taking a position. So what I'd be looking for is some sort of cup forming. Maybe even down to the 200-day. I doubt it gets there, but maybe at 30%, 318, 382, 618, 382, Fibonacci. Momentum is clearly still pretty bearish. Silver. So I'm more interested in what's going on with materials like XLB. That's cruising higher, XLB. So Newmont Mining, materials, critical metals. Nothing there, critical metals. USAR, that looked like it was trying to do something. Still consolidating. MP Materials looks a little better. MP. S&P pulling back more. S&P pulling back more. Okay. So S&P pulling back a bit more here. Hedge flows. All right, so watch for an inflection somewhere in this area for hedge flows. If you're buying puts at the low of the day, just know that it's a possibility that we could bounce right here in this general vicinity. I don't mean on this particular candle. Okay. SPX. All right, so we are moving a bit lower. S&P. Bulls need that. Bulls need the MACD to cross. Moving in the wrong direction, MACD. Okay, selling. Coming in. Okay, we're starting to push a bit higher. Again, end of day, this could get a little rally. If we push back a little bit more down to the downside, we could see a little reflective bounce back to VWAP as dealers unwind their hedges later this evening after 3 o'clock. So watch for that action later. Okay. Bitcoin is still grinding along. Bitcoin, BTC, USD, Bitcoin. Okay, still basing over here on the right, Bitcoin. All right, S&P is dropping off here pretty quickly. Okay. Okay, Bitcoin, watch the S&P now. I don't know why this keeps doing this. I don't like that.
I expect we'll be buying Bitcoin every quarter forever. If Bitcoin falls 90% for the next 4 years, we'll refinance the debt.
Refinance where, Michael?
We'll just roll it forward. I mean, again.
But you think banks would lend to you at that point?
Yeah, because the volatility of Bitcoin is such that there's always going to be.
Sailor talking.
You're at 68,000 right now. Literally has to fall to 8,000, then we just refinance the debt. If you think it's going to zero, then we'll deal with that. But I don't think it's going to zero. I don't think it's going to 8,000.
All right, so we had a previous low over here. Okay, previous low coming up pretty quickly. Okay. Okay, keep an eye on hedge flows. That's what we're going to do. Flow, they're selling call. Okay, maybe they're buying here. Let's see, sell calls, 6,000. Buy calls above the ask, buying a 6,000 call. Huh, interesting. February 20th. Okay, we want to see both of these lines, blue and orange, both to move higher. Okay, blue and orange lines need to rise. So there was a big trade right there. Let's see, size-wise, S&P at 114. What time was it? 118. So we had a big trade there on the SPY. Buy puts, sell calls just a couple of minutes ago. Sell calls overhead. Now this is hedging. Apple trying to bounce. We need Microsoft to bounce, Nvidia to bounce. All the New York FANGs are kind of pulling back a little bit. HSAI still pushing higher. S&P dropping a bit more.
Typically, we did see a pretty enormous short squeeze last Friday after Bitcoin had reached that 60K level. That's usually a pretty good sign that things are starting to bottom out. The shorts get too aggressive.
S&P. Okay, it looks like we might bounce in this area. Got a doji for now. Okay, hedge flows. All right, so calls are being bought and puts are being sold as both of these lines move higher for now. Let's see how this plays out. Okay, so we need both of those orange and blue lines to rise. That creates positive gamma. We are at the low of the day. Don't buy puts at the low of the day, as a rule.
Despite volatility in the crypto markets, the industry is actually still pretty healthy. So we get to see any major exchanges or lending platforms actually go to default. So again, the price obviously hasn't been great, but from an industry health perspective, things are actually put in there okay. So because of that, we don't think that we're going to break these levels that we did temporarily break in prior cycles.
I do wonder though, I look at some of the big actors who are early in crypto. I'm thinking like Novogratz, the Winklevoss. Novogratz, his company now does AI data.
All right, so we're just drifting a bit lower now.
Staff laid off and it is called Gemini Space Station. Does that tell you that those who are early to get into the game are the ones now thinking beyond it?
Okay, puts are bid at the moment. Currently, puts are bid. Okay, hedge flows. Note the lower high and a potential for a lower low. We had a lower low from this morning into about 11:30 or so. Now we're pushing a bit lower as well. Palantir. Okay, these stocks pulling back a little bit. Tesla. Tesla. Okay, so we're right at the 20 EMA. Tesla on the daily. Daily 20 EMA. Let's see what 2050 cross looks like. We need to get a little bit higher. Needed to get that 20 to turn up like it did over here. Back in December, we had a 20 EMA. It was doing the same thing. Turned back up. Buying the low. Did very well. So it looks like a big range, right? For the most part. More or less. Okay. Okay, so we're somewhere in here like this. So about moving back up into the middle of the range, back to fair value for Tesla. Fair value on a technical basis. That's not talking about fundamentals and PE and all that other stuff. Okay, so Tesla headed back up. Boeing back to got rejected as VWAP. Back to the 20 EMA, starting to bounce now. Shorts are starting to cover. All right, looks like we're going to bounce here, S&P. Okay, there you go.
The shares are still down about 20% to start the year, though. We'll break down the results and what it's telling us ahead. And as we head to break, check out shares of BP under pressure after suspending their share buyback plan. They're trading down about 6%. To quote, accelerate strengthening. On the flip side, Hasbro up about that much. New earnings beat and announcing $1 billion share buyback. Those shares are now at their highest level in more than 4 years. But not even this world is immune from AI disruption. Here's what the CEO told Money Movers about what AI could mean for the business.
In the short run, it's a huge productivity gain. We think there could be about 1 million man hours or people hours worth of savings this year that we're just going to be able to redeploy into higher value work in the business. In the midterm, it's revolutionizing how we design product and how we concept product. In our toy business alone, we're seeing an 80% reduction in the time it takes us to go from something that's hitting the drawing board to something that we 3D print and fully render in real life. For the long term, I think AI is going to create whole new product categories and whole new collectibles.
Okay, S&P. All right, so we got pretty close to where this low was. We had a little wick down there. The bodies of these candles right there, we came right down to that. MACD needs to cross again to get a move back to the top of the range up here. You can clearly see a range for the day. So selling puts down here, selling calls earlier overhead, selling puts down here. Makes sense for now. Let's see where they take this into the last couple hours of the trading day. We got 2 hours and 35 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, February 10th. Okay.
RGTZ.
Okay. What are we doing? What are we going to do, huh? We're going to go lower. We're going to go higher. What? We're going to drop through this range. Okay, so look at the daily over there on the right to see what the prospects are. Prospects are, oh yeah, we could pull back and still be, obviously still be in this range. Okay, 21 day, 50 day. Okay, we're trying to bounce. Daily. Basically, we're just in a big range. Okay. Okay, so this range for the last couple of weeks. Okay, has price action bouncing around in this area. Okay, so basically we're inside of this. Okay, so not much you can do. Not much you can do at this point, unless we break to the upside or we pull back to the 50-day. RSI MACD trying to turn up. Boeing pulling back a bit. Boeing.
The shares are only down less than 2%. And it's the last quarter before longtime chair and CEO James Quincy steps down. The shares are up about 77% since he took over nearly 9 years ago. On the street about the consumer.
There is a little bifurcation in the consumer behavior. Those at the higher end are spending on premium. Those at the lower end are looking for affordability and lower price points. But we have the ability with our beverage portfolio.
S&P, that's the earlier low that we're pushing below right now. MACD has turned lower.
The shares hit a record high last Friday, but are lagging Pepsi to start the year, up 9% versus 16% for Pepsi. Pepsi is coming off its third straight year of losses, though, for the first time on record, and it's down 7%, while Coke is up 20%. Another mover of the day, Spotify, which is soaring after earnings. Let's bring in Julian Wilson with more.
Okay, we just took out some stops most likely down there. Okay, so do we continue? I keep looking at this daily over here and saying, this could go anyway. I'm not really willing to bet on it, so I'm going to focus on what's actually working. Industrials. Okay, that's at the high of the day, just taking a break right now. Industrials, materials. Okay, everything is taking a break. It's only 1:30 on the East Coast. XLC, communications, that turned the corner. IGV, software. Okay, that is fading a bit. Software looking for a higher high and higher low. If it loses the 20 MA, then you would stop out. Microsoft. Okay, that's fading back.
Now, even with today's gains, Spotify shares are still down about 30% in the past 6 months. Barclays writing, quote, the major narrative shift that has impacted valuation negatively in recent months is worries about the impact of AI-generated music.
All right, what's GE doing? I haven't looked at GE in a couple of days. GE. Okay, so it's still got the 20 EMA, GE. We need to hold above the 20 EMA and push a bit higher, GE. Consolidating, all right, so that's okay. HSAI. Okay, Riot, RIOT. Okay, that got rejected at the 50-day, Riot.
Their IP, the opportunity to give people, you know, the way to use that IP as fodder for AI and then to get paid for that.
Indeed. I think it's another great case study, Julia, as we see how the technology is deployed. Thank you so much, Julia Borston. Let's get to Seema Modi now for the CNBC News Update. Seema.
Kelly, FBI Director Kash Patel just releasing images on social media of a potential suspect in the disappearance of Nancy Guthrie, the 84-year-old mother of Today Show host Savannah Guthrie. According to Patel, these images show an armed individual appearing to tamper with the camera at Guthrie's door the morning of her disappearance. She has now been missing for 10 days. Alaska Senator Lisa Murkowski today becoming the first Republican to come out against the SAVE Act, a sweeping election reform bill backed by President Trump that would require proof of citizenship to vote. Murkowski says the bill will only force state election officials to scramble to follow new rules while already deep into their election strategy. And a National Governors Association reportedly notified.
Okay, so we continue to fade below the earlier morning low. What we don't want to see is a bearish engulfing candle. A pullback to the 90 EMA is possible. The 21-day is shown. Okay. ACWI she's talking about? Really? RSP. Okay, so although the market is pulling back, we can't deny that. Does this look really that bad? This is the equal weight index. S&P equal weight. Doesn't look bad to me. Dow Jones, DIA. Okay, that did, that's like Gravestone Doji, so Russell is short DIA. He's got puts. Okay, the Qs. Doji right below the 50-day. So 95% of price action contained inside the Bollinger Bands, 95 to 96% by design. Prefer, if you're bullish, prefer to be above the 50-day, not below the 50-day like we're seeing at the moment. Qs, okay, IWM came off the high of the day, was earlier, pretty decent run up. That's pulled back now. Okay, what's VIX doing? VIX, did it ever get back down to? Yeah, it did. It got down to 17. VIX 17 is trying to do something here. If you want to have a hedge, if you think the market's going to pull back into this range, we're at the range highs. If we pull back into the range, we could lose about 50 points on the S&P. Too early to tell. Looks like we're trying to see. It looks like some shorts are covering here now. Let's see what they do here. S&P. MACD. Notice the MACD is still facing lower on the 3-minute. I have a 3-minute here. Let's go to the 5-minute. A little bit more to look at. MACD's crossed lower. Okay, we're still showing weakness. Okay, we're still moving lower. Vol triggers down below. You can see that down there at the bottom of the screen. Vol trigger. Estimated 1-day move is down here. Even considering today's move from the open. We just went negative. We are down 12 handles on the daily.
Welcome back. International markets are extending those gains from last year, driven by strong performance in emerging markets, a weaker dollar, some developed strength as well. Korea, Brazil, Japan all outperforming the S&P year to date. The Nikkei closing at a record high today. The moves follow a big outperformance by international markets in 2025. And my next guest says you can stay there as the momentum continues with one area in particular. Let's bring in
Netflix. Netflix still hanging out in the 80s, lower 80s. Microsoft did pull back.
It is an example of you could still have a lot of that technology theme played out somewhere else outside of the United States, but with entry points valuation wise that are heavily discounted to the United States.
The Korean market's PE is it 14 forward PE?
That's right. It's in the teens.
I mean, if Japan's at 25 and we're at what, 22?
Right.
And that's after we've seen these monster moves with SK Hynix and the rest of it.
And Samsung, exactly. Wow. Right. So they are the shovels for a lot of the AI trade, but they're not trading at the same valuations that we see here from technology companies.
So that would be an area. I mean, I'm not trying to single them out, too much, but people want to be with the winners. And if you think they can keep winning, do you just get?
Looks like we might bounce here.
Yeah, I mean, you could dip your toe
S&P.
on EM that already would include the winners, and maybe if you have no exposure, that's a great starting place. If you do already.
Okay, so what do we got? We got 2 hours 23 minutes. 2 hours 23 minutes left to go. Looks like we're trying to bounce here. Where did my? Oh, okay.
There just was no momentum, no money flowing into those markets, and it's only been about a year and a half, 2 years since that momentum has gone towards it. So
Okay, resistance overhead.
How many times here in the United States we thought it was done because valuation came back to historical averages? So the story is just beginning in those markets.
Even for Japan.
Even for Japan, I think there's a lot more upside because now there is this rotation that is happening into those markets that was not happening in the past.
Are people taking money out of the Mag 7? It's a lot of money that has been in that trade for a long time. Do you think that's where some of this cash will continue to come from?
I think it will. I think, we talked about this in the past. I'm not necessarily thinking
Apple trying to turn a bit higher.
These are going to all of a sudden not work earnings-wise. Is more that a lot of that is already baked in the valuation. So all they need is to miss a little bit their expectations for money to start chasing areas where there's a better entry point.
Yeah, and where else would you be looking? So there's the Mag 7, again, down 2% this week, fractionally lower again today. I mean, investors in these stocks are getting a little frustrated.
Yeah, one way to think about it is within the U.S., companies that cannot be replaced by AI, that was a lot of the meltdown reason. So for instance, financials, industrials, they benefit from a lower interest rate environment, reacceleration of growth, and their earnings are delivering. Those look to me more appealing than the ones that at any given moment people could be worried that they're going to be replaced by AI rather than enhanced.
Which is, I forget who's had the phrase, maybe Jim Reed at Deutsche Bank, the tech is eating itself. The area of the market that has been the most successful has now created a product that is cannibalizing it to some extent. I mean, you could agree with that or not, but it's interesting that you say investors are looking for safety in traditionally more cyclical parts of the market, maybe now just because they're going to do well, but also because they're just viewed as less disrupted by technology.
Atoms look safer than bits right now here in the United States.
Well said. Do you worry about the economic cycle when we see things like the soft retail sales report, things like that?
I think that if you look, for instance, the manufacturing ISM numbers, if anything, there is signs that there is some reacceleration. It's more of like rolling recoveries in different aspects of the economy, which frankly for the market's okay as long as earnings continue to deliver, and they have.
All right, we're starting to turn back up now. Okay, let's see what Trace is saying. Okay, so you can see a clear lower high, lower low on that hedge line. Lower highs, lower lows. So the trend has been down. No surprise there. You don't need hedge flows to show you that, but I just want to highlight it. Looking for If you're looking for bullish action for shorts to be covering, you need to see the orange and blue lines both moving higher, which they are right now, creating positive gamma. So we know what the dealers are doing. They're buying calls, selling puts. They have to have computers that do this for them. It's just like crazy, back and forth. Okay, I'm going to take a 2-minute break. I will be right back.
Going forward, if these companies continue to deliver earnings, I think there will be some winners still there. So you would pick maybe, would you pick the broad ETF, for instance, as kind of bottom fishing, or you would just have to know, like, this is a company with high conviction that's not going to be. Yeah, hence why I think industrials and financials look more appealing, is that you don't need to necessarily find the exact one that will continue to outperform some earnings, because a lot was already baked in those valuations. All right, Andres, thanks. Appreciate it. Andres Garcia and Maya with Zoe Financial. Coming up, U.S. and Chinese markets are having very different reactions as they roll out their latest and greatest AI models. And Schwab is another example of a name getting punished here today. We'll look at why, what it means for investors next. And as we head to break, here's another look at the market's losing steam. The Dow has pared its 380-point gain. It's only up 55 right now. NASDAQ down 0.25%. The 10-year right around 415. Western Digital is actually the worst performer in the NASDAQ 100 today. We're back after this.
EVMN.
Welcome back to the exchange. Call it a tale of two AI responses.
While new AI models tend to wreak havoc or cause jitters in some pockets of the market, today we have an example of the opposite effect in the Chinese space, acting as catalysts for broad rallies. Deirdre Bosa has more on this and what it means to investors and what it means about the race in these two countries, Deirdre.
Yes, it kind of comes down to capex and a number of things. I'll get into that. But as you said, the market just gave us a perfect example of the split on the U.S. side. Brokerages, they're selling off after a startup called Tues launched an AI-powered tax planning tool. Again, this is not going to replace Schwab anytime soon, but it is a real product doing in minutes what advisors charge thousands of dollars for. And that is all the market needs right now to reprice an entire sector. Over the last few weeks, we've seen it happen in gaming, legal services. The software sector as a whole is getting decimated because every AI breakthrough here is being seen as a threat. So here's the paradox. In China, breakthroughs are being priced exactly the opposite, as an opportunity. A new image and video model from ByteDance just a few days ago actually fueled a rally in media and gaming stocks. A similar announcement from Google a week earlier led to a sell-off in gaming names here. Now, part of the reason why this may be is a huge delta in spending. American big tech is on track to spend well over $500 billion on the AI build-out this year, while China's top public tech companies, they're on track to spend just a fraction of that, $70 billion. And yet, they are still shipping competitive models and they're going global. So the market, Kelly, is asking a very simple question here. What if you don't need to spend that much? And we may be about to find out what happens because at least 5 major model releases from Chinese labs are expected before Lunar New Year, which is just a week away, February 17th. Everyone over in China is trying to have its own DeepSeek moment, and they're getting closer. They're catching up with their frontier models that our AI giants are building.
These new models that we hear about, do we know? I apologize if you said I missed it. Are they using NVIDIA chips? Are they definitely not? Are they using Huawei chips? Because it feels like NVIDIA can be deep-seeked if they're building models using kind of cheaper technology that is proprietary or that they don't need to, kind of pay up for NVIDIA for. I could see that collapsing once again, the AI trade. It seems like it's been more resilient to that lately.
We did a whole piece on this, a deep dive on YouTube. It's called our Tech Check Take on the Chinese hardware sort of playbook, and they're copying that DeepSeek playbook. So yes, everyone wants to use NVIDIA chips, even if they're older generations, but there was this model called GLM, Kelly, that they say was built entirely on Huawei chips. So it's not there yet, but they're getting closer and closer. So my guess is it's probably a mix. Yes, you need American advanced chips, but the Chinese government is putting everything behind their chip ambitions to try and catch up. So it's happening on the hardware front, it's happening on the model front, and Chinese New Year is like it's like the CES
All right.
of China for AI.
We'll continue to move lower, eh?
I have no idea, but I guess you can use it, have some time to experiment with it. Kind of like Bitcoin network effects.
Okay, puts are being bought now, dropping off. This is so erratic today. Okay, we just roll right over hedge flows. Looks like 69.40. Next level, 69.40.
Especially when it comes to financial services. But again, the point isn't that the startup is going to displace Schwab. It's that it shows that these tools are becoming easier to use. They're becoming easier for
Oracle. Okay, I got to get this. 1 second. Got to get this. All right, we've got 2 hours, 11 minutes to go in this trading day. Not that big a deal. I mean, we've had 2 big days under our belt, Friday and Monday. Okay, so a little bit of give back, 2 steps forward, 1 step back. We all want to see price action just continue to move higher every single day. Unrealistic. Have to get used to it, I guess, at some point. IRE, no follow through yet. IRE. All right, so Bitcoin, that's pulled back a little bit. Bitcoin, BTC, USD. All right, Bitcoin. Bitcoin. All right, so Bitcoin is still stuck down here. Sailor was just on saying that he's not really worried about if it goes to 68,000. He's going to have to refinance. Okay, even if we go to 68,000, we'll just refinance. And Becky Quick is like, well, who's going to lend to you? It's not a problem. Yeah, we need to start seeing some higher highs here. Bitcoin. Okay, so I'm not going to put any money to work in that direction anytime soon until we start to see some proof that maybe we can make a higher high. That said, what is working is materials at the highs. Okay, you should be focused on these materials, the industrial sector, the financials. That just got rejected. All right, what's JP Morgan doing? JP Morgan, okay, off day today. All right, Boeing is pulling back. Boeing. All right. So materials, communications, XLC. Communications. That'd be Meta, Google, Netflix, Disney. Netflix is a little bit off the high of the day. Google, trying to hang out at 320. Google. Few off days. It's below the 50-day. That needs to be rectified and pushed to the upside. Google. Okay, Microsoft. Okay, just getting started. Doesn't mean it's going to go up every single day. We could still pull back. Microsoft. All right, so Microsoft could, pull back a little bit first and then follow through, or even pull back a little bit more down to here, do a double bottom, and then follow through. There's all kind of variables here on Microsoft, but it is way oversold. All right, S&P. What are we doing here? We're trying to hold low. So Microsoft and software stocks, I'd be focused on those two. Get your best entry. Don't chase. All right, so we're already pulling back today. Looking for a bounce. Okay. Same thing here as we just showed you with Microsoft. Most likely we'll see. Maybe we'll get a follow through tomorrow. Well, hard to say. But if we do pull back a little bit tomorrow, look for that kind of action. RSI is coming from oversold. Volume looks good. So whoever's buying the last couple of days in this zone right here, whoever's buying here, that's them. So I imagine they would stop out. I don't think that's going to happen, but if we come back down to lows, a lot of puts are being sold down here. So the people who are buying all of this down here, what's that? 100 million shares trading hands in the last 3 days? 100 million shares of IGV. Once we get above this level right here, okay, once we get above this, that's when things get crazy. As Bill Burr would say, get crazy. Okay, so once we get above this level here, okay, that's what we're dealing with. Okay, so we got a Kirby over here. Okay, Kirby, which is an area where we traded less, fewer people traded in here. And on this cascade lower, when it dropped below the 200-day a few weeks ago, there was fewer people trading in here. So that creates an area where basically a vacuum where prices can run back up with least resistance. So where do you think institutions are buying? Down here. So does it happen today, tomorrow? Maybe. Still got a little bit of time left in the day. 2 hours and 6 minutes, but more than likely we'll cruise a bit higher eventually over the next several weeks. So you have to be patient. Okay, if you started today, probably looking at a stop below the 60-minute 20 EMA. Let's go take a look at that. 60-minute 20 EMA. So that would be your stop. If we drop below it and close below it, okay, this morning we saw Chevron do something very similar. Chevron, okay, came down below the 20 EMA, closed back above it, and now it's trying to grind a bit higher. Looks like a little ascending triangle pattern actually on the 60-minute. Okay, so we've made quite a move so far. Okay, so there's your highs, your lows, 60-minute. Looking for that to turn, continue to move higher. Okay, Chevron. So energy stocks. All right, so we had materials doing well. Communications doing well. Oops, communications doing well. XLC. So I'd be focusing on these sectors. Communications back above the 50-day. Energy, okay, consolidating at the high. So there are going to be some stocks that don't follow through, like Valero flagging. Phillips 66 going to be heavy into the Venezuela crude. That's a heavy crude that needs to be processed by somebody like Phillips. So that's consolidating at the highs. Halliburton, energy stocks, that's pulling back. APA, not going to be up every single day. Diamondback Energy, EOG. Okay, these look okay. Baker Hughes, BKR, Baker Hughes, ExxonMobil, trending. Capital, I want to say Capital, ConocoPhillips, COP, ConocoPhillips. All right, so these look okay. So moving on to, we said financials are off today. Industrials look okay. Okay, we go an opposite direction now. Opposite direction. Okay, a short covering. Watch what the dealers do here. Watch the dealers.
Pounding the table on Cisco. Tim, while you're here, I do want to just show the intraday of the Dow. We went from, what was it, 300-point gain earlier on to now turning negative. I knew it had been the best performer of the majors. I don't know if it's the comments at 1 p.m. from the Fed officials. We did start to see a kind of steady.
We're already back to positive there, Kelly Evans.
What I would describe as their hawkishness, maybe I'm oversimplifying it. Do you think that's
All right, so we're right at the open. Dow Jones right at the open here. DIA, equivalent of SPY for the S&P. Dow Industrials, Diamonds. Okay, we're oversold, looking for a turn back up. Watching the S&P right now.
All right, Tim Seymour, thank you very much. Appreciate it today. And that's it for us here on the exchange. I'll join Brian Sullivan for Power Lunch right after this break.
2 days up, 1 day consolidation. That's what we're dealing with right now. 1 day of consolidation.
Bonds, money market funds, and more. Get with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Getting signs of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Good afternoon and welcome to the Watch List. I'm Diane King Hall. Coming up on 2 p.m. Eastern here at the New York Stock Exchange. Let's get into it with our roadmap. Here's what's coming up on today's show. It is Technical Tuesday, so we'll dive
Okay, just watching the diamonds here. See what happens.
and a couple individual names like Toll Brothers.
S&P 500 spiders. All right, we're just hanging out at the highs. Okay, spinning top. Could go either way tomorrow. That said, we do have the New York Stock Exchange. When you're in doubt, you always want to check the New York Stock Exchange. We are making new highs. We're the third day outside the upper Bollinger Band. Can we pull back in? That's always a possibility, but we're bullish. We're not like super bearish. We're not trending lower. We'd be concerned if the markets look like this. That's not the case. Okay, so if the markets look like that, we'd be very concerned. We're not. We're in the opposite. We're doing the opposite here. Okay. S&P looks like it wants to go.
Let's take a look at some of the other price action across asset classes, whether we're talking about fixed income, commodities, etc. Wait for that board to populate.
Okay, we're looking for the evening dealers close positions. We still got 2 hours left to go. Let's see if we get any kind of bounce here. Okay, VWAP is overhead. A move back to VWAP wouldn't be out of the question. 69.70 calls maybe.
Bitcoin, once again, under some pressure right now. Not as volatile as recently, but still a little bit of a downdraft there, off by 2.5%.
So between the Dow or the New York Stock Exchange at highs and junk bonds above the 50-day, that's fading a little bit from the 21-day. Still neutral bullish. If you look at the weekly time frame, we talked about this earlier. Okay, we're in a range. So we're going to go above and below. This is just chopping people up at the moment. Junk bonds, New York Stock Exchange, breath. Let's see what breath looks like this time of day. Breath. Okay, these are still inflecting upwards. Big caps, small caps trying to turn up. RSI, the NASDAQ turning up. Not feeling any kind of momentum or volume. MACD is trying to turn up. MACD is turned up. So we could get a little bit of a leg higher, a little bear flag maybe. I don't know. Not feeling a lot of action here. We got a little volume. Volume picked up a bit there.
on the day. So a big day for Marriott hotels despite an earnings per share miss.
Okay, all right.
Okay, what's Tesla doing? Tesla trying to turn back up. Apple trying to bounce. Microsoft, a little short covering on Microsoft.
But there wasn't a big reaction in terms of the market reaction today. So it feels like it's really all about tomorrow, what's in front of us in terms of the jobs report. What are you looking ahead to?
Here's why tomorrow's job report is so important.
Tonight we've got Robinhood. Don't forget Robinhood. Okay, Invitation Homes. Real estate's been looking a little bit better. Invitation Homes, I believe they do rentals. They rent homes, right? INVH. INVH. Invitation Homes.
Higher than expected, and Jolt came in at 6.54 million, way lower than expected. So four different looks that gave us a look at a week.
INVH.
Expectations for 67,000 jobs and 4.4.
Invitation Homes. They report February 18th. Okay. Leasing. They lease single family homes. So I don't know if they do it as you're their client. You rent your home. They do the, I don't know, maintenance, whatever. Okay. All right. The markets are just sitting here, chopping people up. This is the horizontal there. That's the previous low. Trying to get back above. Daily doesn't show much, but the markets are generally bullish, neutral bullish. Breath looks okay. Not as good as it was on Friday or yesterday, but it looks good. Still making higher highs, higher lows. S&P. Let's go see what the XII is doing. XII, Arca Institutional Index. Okay, this is giving us two green sticks. Big range, basically. All right, let me go to 10 months. Okay, big range. You can see the range here. All right, we'll save it as 10 months. The momentum in the bottom panel, flat, nothing there. Just got to have patience. Okay, Robinhood tonight. Robinhood earnings tonight. Okay, I do have the 80-75 put spread. Okay, for downside protection. Those expire on Friday. So if we get a drop tomorrow, maximum profits down at 75. That's that spread is about $400 per contract maximum profit. Putting up, I think it was $90 per spread. So 4-to-1 if it drops, and that's by, expires on Friday. The calls that I have are 115, 120, and those are for July. So we're looking for follow through. RSI is already oversold. MACD stochastics turning up. I would think Robinhood has come back off the lows enough. It's got the prediction markets now that it's starting to make money on. Starting in February. We're only a few days into the month, but they started that in February. Palantir is still pulling back. Palantir.
So we're still seeing a lot of money coming into basic tickers like AGG, like the ag. We even now have a new total market ETF, TOT, that includes both fixed and floating rate securities. And then I think one of the trends that's here to stay is international bonds. We saw emerging market equities up 10% this year. Yeah. So we're seeing some more interest in emerging market bonds. EMB, for example, has almost 6% income, but about a third of the volatility of emerging market stocks. Okay. So let me ask you about that, because that is something that we've been paying attention to, are the flows into emerging markets. Is investment in, for instance, you think about Japan or in Europe, the UK gilt market, what does that look like? What do the flows look like so far this
for a lot of U.S. investors, it's harder to access, but we've seen more ETFs are now allowing that sort of access. So I think we're seeing most people wanting to do it in a currency hedged format. So even though there's been some dollar weakness, we're seeing more people coming back to maybe hedged exposures, European high yield, European IG. And I think that's a great way to get some income outside the U.S.
So with the expectation for rate cuts on the table for this year, especially now that we have a decision on, the next Fed chair, what do you think, how should everyday investors think about bonds again, especially when you think about the years, I mean, not last year aside, of, not paying as much attention to them or not putting as much focus, because you said, you notice a pattern of flows shifting from equities, moving into fixed income, shifting out of cash.
I think one of the easiest thing that everyday investors could do when rates start to come down is to build a bond ladder. So term out some of those maturities. We have a series of ETFs, the I bonds, that enable people to build bond ladders pretty efficiently.
Mm-hmm.
So I think that's an easy strategy to do. When most people maybe get started with a CD ladder, you can only go out maybe 18 months. Here you can build a ladder out to 10 years pretty easily. So that's, I think, an easy way for everyday investors to get started with bonds.
But how far out should you even go? Because I think about, you don't really want to get that long, right?
Yeah, I think we would still favor the belly of the curve, so it's that 3 to 7 year sweet spot. I think it depends on your time horizon. But I think the nice thing about adding some longer maturity bonds is it provides that ballast to the equity market. And if we continue to see equity market gyrations, maybe you want a little bit longer fixed income in there.
Okay, I'm curious to know what you're watching in terms of trends for active bond ETFs, because we've been paying attention more to active ETFs, right? But there's still a smaller portion when you think about the, whole globe of ETFs, right? How much more should we see that increasing? Excuse how I'm framing that.
No, I think you're absolutely right, Diane. So we're seeing more and more asset managers come to market with products. About 40% of bond ETF flows last year were into active ETFs. So I think you'll probably see more new launches, conversions, and even maybe share classes coming on. But I think, once again, focus on what is the exposure, what are the fees, and how tax efficient the strategy is. But I think it's a trend here to stay because people like having that active management style.
How well do they perform compared to passive?
I think it depends on the asset class, but I think we do see on average some active managers do add alpha, but then it can be very cyclical. Like they can all get it at the same time and give it up. But I think having somebody, especially in some of the areas that aren't easily indexable, so think securitized asset class, floating rate, and even global markets, I think those are the areas where you can find good active managers.
I want to go back to the point about rate cuts. If rate cuts are coming, when should investors think about locking in yields?
Yeah, I think lock them in today. So what we're anticipating is overnight rates at 3.5 to 3.75. We think that gets down to about 3% by the end of the year. So that's implying 2 rate cuts.
Okay, S&P, just sitting here doing nothing.
I would recommend, deploy that cash, get it off the sidelines, and I think just slowly allocating it in can really help people balance out their portfolios.
Okay, is cash king though? I'm sorry,
it has been. We're still seeing a lot of interest, a lot of flows into ESCO, which is our T-bills ETF. It just hit $70 billion. So I think there's a lot of money that still wants to sit in cash just for the safety of it.
And then let me ask you, I want to go back to where our conversation started. We started with a conversation about retail sales, but we've got key economic data coming in. We've got the jobs report. It's not as delayed as the last time. We had a government shutdown, just days this time. And then we've got CPI coming at the end of the week. What's your perspective in terms of expectations for those?
Yeah, I think there's going to be kind of a tug of war on those two numbers. So we are thinking maybe a little softer on the jobs report, just as it's been a low fire environment. I think CPI is slated to come in around 2.6% year over year, which is still running a little hot at the Fed's target. So you could see them, keeping rates on hold if that inflation number comes in a bit higher.
Okay, all right. We'll leave our conversation there for today. It's always a pleasure talking to you, Karen.
Thank you so much.
Thank you for joining us today here on the watch list. That's Karen Vera-Perry. She is head of U.S. iShares Fixed Income Strategy, BlackRock. Coming up, we've got Options Corner. Tom White joins us to highlight unusual options activity from the day and how investors are looking to trade on recent news. But Alphabet, Google in focus, Estee Lauder, and Apple also on our radar. We'll be right back.
Okay, now trying to put in, looks like a little inverted head and shoulders. Okay, 1 minute chart, higher low, looking for a push higher. Need to see that hedge flow turn up. Okay, so the dealers are going to have to close positions after 3 o'clock. We still got 45 minutes or so. S&P. All right, just watching this hedge flow here. Okay, sorry, starting to turn up. Starting to turn up. Turn up.
AFJK may rest in 10 seconds.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all,
No follow through. No follow through yet.
it's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com. Welcome back to the Watch List. Time now for Options Corner, where we analyze unusual options trades seen throughout the day. For that, let's welcome in Tom White, co-host of Fast Market Schwab Network. Similar to Kevin, I feel like I just talked to you, Tom. Also, you've been super busy today.
Yeah.
All right, let's get into this with Alphabet Google. So we've had news we've been watching on Alphabet Google all day today with regard to that, long-term century bond that they're going
No
out
follow
for.
through.
But you found a bearish trade for Alphabet. Take us through that.
Boring afternoon. They're just kind of sitting here doing nothing.
About 8% from those recent all-time highs that we had, and this comes after news on the earnings, right, where they raised capex spend this year to 175 to 185 billion dollars. That was much more than the street anticipated, and a lot more than the 125 million that they spent in 2025. So that kind of started this rollover. Then you throw on top of it this $20 billion in funding that they're trying to raise. And it's not only here domestically, it's over in the UK and Switzerland also, where they're offering those 100-year bonds. And that's got a little bit of fear, I think, in today's market with investors, because we saw what happened when Oracle started raising capital also. They were punishing the stock. Now, Google Alphabet's a little bit different. They grew revenue 17% last quarter. That was the fourth straight quarter of improving growth rates as far as the revenue goes. Cloud growth was nearly 48%, so kind of blowing away their competitors in that space also. So really good report. They've got a rock solid balance sheet. They got nearly $100 billion.
Oh gosh, this is so
assets on their balance sheet. So
disappointing. No follow through, nothing. Just kind of sitting here doing nothing. All right, might take a 5-minute break. I'll be back. Market's not going anywhere.
Did see some unusual option activity in here. Maybe somebody, looking for something speculative to the downside. This was out in the March 13th weekly cycle. So about 31 days to expiration, where a trader came in, bought 10,000 of the 320 strike puts. These are just slightly out of the money to the down, or basically at the money to the downside. They paid an average debit of about $12.10, so paying a pretty hefty option premium. So the break even where this trader starts to profit is below just under $308 per share over the next month. That's only about 3.5% below current share price. So taking an outlook here, giving themselves a little bit of duration. I don't think it's somebody that's maybe hedging a long stock position that's been doing really well over the last 12 months. It's probably somebody speculating to the downside because they paid so much for these puts, over $12 per put. But yeah, somebody taking a stance here that we might see some more weakness in Google Alphabet over the next 31 days.
Okay, let's talk about this one you found in Estee Lauder. Those shares moving higher today, but you found a neutral to bullish trade. Tell us about this one.
Yeah, stock's up over 3% today. Down, still down about 11% so far this month. So digging into some losses, but it's still up nearly 50% over the last year. So I think traders trying to figure this one out post earnings. We had a sell-off post earnings just last week. HSBC came out and downgraded the stock today to a hold from a buy. They put a price target at 106, up from 105, so they raised the price target just a little bit. They said that Estee Lauder's modest organic sales upgrade in that quarter that they just released underwhelmed investors. Company organic sales growth is expected to slip in Q3, the analyst stated. And they said China, tougher China comps with easier U.S. comps offsetting one another at this point. So not a good outlook in this name, but the stock is rebounding today. We've seen Ulta, one of its competitors, at record highs recently. But we did see some neutral to bullish activity in here as far as the option market goes. Typically, we don't see big, massive orders in Estee Lauder, so this one kind of stuck out to me. This was out in the June monthly options, so about 128 days to expiration. A trader sold about 6,700 of the 85 strike puts. They took in a credit per put of about $3.40 on these. So the break even where this trader starts to lose money is below 81.60 over the next basically 4 months or so. That's about 20% below the current share price. So maybe taking advantage of the weakness post earnings to sell these out of the money cash secured puts, where if the stock falls below the 85 level, maybe this trader is willing to buy those shares at that 81.60 break even level if they're still short the puts and the stock falls. Or it's somebody that just wants to collect about $2.2 million in
Trying to turn back up.
on a 6,700 lot. So kind of a twofold trade where maybe a little bit of reassurance that it's not going to go below 85 and they just get to keep that option premium that they're selling.
Okay, all right. And then the last one on your list today, you found a bullish trade for Apple. And this one that's had some consternation for some investors around it. Some are believers, some are like, it's going to be pretty range bound this year. What'd you find here?
Yeah, it is one of those bifurcating stocks because the valuation on a historical basis is really high, right? But their new cycle with the iPhone 17 did really well. They got 2.5 billion iPhones out there. AI, they're not spending as much as a lot of the competitors in the tech space because they're going to rely maybe on Google Alphabet to upgrade their Siri. That's due later on this spring. So we'll wait and see on that. But stocks just down a little bit today, up 5% so far this month and up about 20% from year-ago levels. But it has started to consolidate here a little bit. Bernstein did come out with a note this morning, raise their price target to 340 from 325, outperform rating, citing that strong iPhone 17 cycle and better than expected revenue and profits for the company. They raised their estimates for fiscal year 26 and 27 also. I think one of the key things, and maybe why it's been consolidating recently, Diane, is the fact that the pricing for the inputs on some of their smartphones are expected to really ramp up this year. We've already seen it on the memory side, but if that comes into play, does that hurt Apple's margins moving forward? So kind of a push and pull here, but we did see some bullish activity in here also. And this was out in the April monthly option, so about 66 days to expiration, where a trader bought 4,500 of the 275 strike calls. Paid an average debit of about $11.60 on those.
All right, we're trying to push a higher.
Where they start to profit is above 286.60 over the next 2 months. That's only about 5% above the current share price. So maybe a little bit of more reassurance here from this options trader. But I think the key is they gave themselves plenty of time. You got over 2 months in this position for the stock to move back higher.
All right, good stuff. Thank you, Tom. That is Tom White, co-host of Fast Market. I'll catch you again tomorrow, Tom. Coming up, we'll look at a couple stocks making big gains. Among those, investors are for tuning in to Spotify today. Plus, we'll talk about the tech rally. Is it over? Is there more upside ahead? We'll have more watch lists after this. Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation.
Trying to push higher.
And geopolitical risk.
Still running into some resistance here.
Always live from Wall Street to your screen. Morning Trade Live, where
VWAP overhead. Looking for dealers to close positions. We don't know if that's going to result in prices moving higher or lower at this point. Watching for that. Hedge flows.
Charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, how it's going to impact the markets. Watch live on Schwab Network, schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. Welcome back to the Watchers on Banking Hall Live from the 4th of New York Stock Exchange. Let's take a look at some movers in the market right now. Investors wrapping up Spotify today. That stock rallying double digits off the
Boeing moving back off the low. Boeing. Hedge flows trying to turn. It's just very slow process. Very slow day today. Okay, we're mixed on up volume too. Up volume on the NYSE and the SPY and the IWM. Down volume leading on the NASDAQ, the Qs, and the Diamonds. NASDAQ and the Qs 1-to-1 down. New York Stock Exchange, SPY, and IWM 1-to-1 up volume. So it's really not much going on. You could expect to see dojis whenever you have this kind of condition. Trying to rise up through this resistance level right now. VWAP overhead. VWAP is overhead.
When you think about the tech sector, we've had such an extraordinary rally, obviously. And so what we're starting to see, though, are a few different things starting to line up. As you mentioned, NASDAQ has not quite been able to quite get back to that October.
Starting to rise up towards VWAP now.
And so we're watching that. And as you also mentioned, we've also seen this leadership shift. And historically, in the past, when you see the leadership shift, it could be an indication that the NASDAQ rally could be running out of steam. One other interesting factor that we look at a lot is Bitcoin, and just the fact that it has taken a big hit here. And it often is a leading indicator of action in the tech stocks. It's also a very good measure of investor exuberance. And so when those things start to falter, again, that's another indicator that maybe we're starting to see the NASDAQ rally get tired here. And the last thing is, these employment numbers that are coming out this week, if they're really disappointing, you would say, well, what's the connection there with technology? But it's so dependent on the advertising business that could also weigh negatively on the NASDAQ.
So let me ask you about that indicator that you
Boeing headed higher. Boeing.
Bitcoin as an indicator, because I was under the impression for a while that there was a correlation, but now experts I talk to say that correlation is broken, and there is not a correlation anymore between Bitcoin and the tech sector. Why do you think we should still look at it as a proxy or an indicator for the tech sector?
Right, because the way I'm going to look at that is to say, okay, you have all these people now who have had to unwind these Bitcoin positions. And what that could trigger is almost something equivalent to a credit contraction, where you start to see liquidity get extracted from the market as Bitcoin has come down. That could put pressure on the NASDAQ.
Okay, so that
Robinhood earnings tonight. I have a long iron condor on Riot. If you're interested, I have July 115, 120 calls, and I have Friday's put credit spread credits for protection 80.75 in case it does pull back in the short term. Robinhood.
The thing that's hard to do about that is to say, well, when is this going to happen to these software companies? I think they are very much at risk. I'm just not sure if now is exactly when they really get whacked. They obviously got hit back as the thinking about this change, but I'm not quite sure we're at the point where they're actually going to be disrupted quite yet. So I think the timing of it is very difficult.
Let me ask you this. I want to talk more about the Mag 7 now. You had members of the Mag 7 who actually had strong numbers, and then some were still dinged hard, like, for instance, Microsoft. And Microsoft was actually up more earlier in today's session, but now it's got just a slim gain. Is the party over for the Mag 7, or do you expect to see this bifurcation between the group?
Well, I think a lot of people have scars on their back from saying that the rally in the Mag 7 is over, but it has come so far, so fast. Not all of these companies can be winners. And so at least for us, it feels like this rally is very tired. And it's not a time when you really want to pile into these stocks. I would leave it at that. These are very good companies. They're very strong companies.
Okay, we're trying to rally up towards VWAP. That's as far as I think we're going to go, but looking better, coming off the low.
Well, some have the view that you have to spend big to operate in a big fashion, right? To make it big. And listen, trend followers, when you think about momentum, have been conditioned to buy every dip when you think about the tech rally. If it is actually truly losing momentum, what confirms that for you? What patterns are you looking for?
Well, first and foremost, as I said at the outset, if it can't break through that October 29th high, if that lasts over time, that is exactly what turns the trend followers and the momentum investors. Eventually, their patience starts to run out, and
they could exit the trade. And so I think that's the confirmation that we would be looking for. If there is an extended period of time where the Nasdaq just can't push through that late October high, what you tend to see with trend followers and momentum investors is they lose their patience and then they start to bail out, and then that can feed on itself.
Okay. What do you think are the best position, or what do you think are the best position or worst position companies within tech for this year?
I mean, well, it's hard for us. It's hard to say. We're not necessarily picking individual stocks or asset allocators, looking at broader sectors. And so, even if the Mag 7 is still suffering, I'm not sure there are other areas in technology that are jumping out at us as a place to invest. We're actually looking more interestingly at international stocks, and that's the way we've been positioned throughout 24, and so throughout 25, and so far into 2026.
And let me ask you this, because one of the conversations that comes up is about valuation, especially when you think about these major tech companies, right? Some would argue that their growth justifies the valuation. At the same time, some will say, the valuation is stretched for some of these companies. For instance, one of the companies that I think about, not in the Mag 7, but for instance, Palantir, great quarter, but there are many who argue that their valuation is stretched. So you've talked in the past about disciplined risk management. How do you operate with that in mind in volatile markets, especially when looking at the tech sector?
Sure. So valuation is foundational to our analysis. But as we know, it's also a long-term indicator. And the thing about valuation is when you have a rising market and you have a very strong market, well, people don't care about valuation. They'll say, well, it doesn't matter this time is different. It's okay that these valuations are stretched. And you can make that argument because these are strong companies with very strong earnings. The problem happens when the market turns on you and it starts to get some kind of correction or starts to falter. Because when it starts to go down, that's when investors turn to themselves and say, oh, what about valuation? Where is fair value? And that's a problem because fair value is much lower than where we are now. So that's the way we think about valuations in our analysis.
All right, Fritz, great conversation. That is Fritz Foltz, Chief Investment Strategist at 3Edge. Thank you so much for joining us and talking through the tech sector and the shifting sands there. Still ahead, it is Technical Tuesday, so we'll look at levels. First up with the S&P 500 with Kevin Horner, Senior Manager of Trading Services here at Charles Schwab. We'll have Kevin's insight on the other side of his break. Also on his list today, Tidewater and Toll Brothers. We'll be right back.
Trying to make it back. This is a very sluggish price action. Palantir turning. Microsoft at the low of the afternoon session. Tesla trying to push a bit higher. Tesla looks pretty good. The overall market's not really moving that much right now, but Tesla looks good on the daily and the 60-minute. We want to get that above the 20 EMA. So once it clears the 20 EMA, that dotted red line on the daily, we'll look for a follow-through. Looks like a trend break over the last few days. 3 white soldiers after a 3-candle reversal pattern. Morningstar Doji. On candle 3, that starts to count 1, 2, 3 white soldiers. Volume looks good. MACD stochastic. Everything is set up for this to follow through tomorrow. Market willing. Tesla's trying to go here.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch This. I'm Diane King Hall. It is Technical Tuesday, so let's dive into some levels with Kevin Horner, Senior Manager, Trading Services, Charles Schwab. Kevin, I'm chatting with you in the afternoon instead of the morning today. So let's start out broad-based. The S&P 500 has been pretty range-bound today. Let's dive into what you're paying attention to in terms of levels there.
Can't get away from that 7,000 level, Diane. I tell you, we continue to watch this one because it's super important. We've been there again. Intraday today, we were pretty close. I think our high was 86, so we were kind of in the vicinity of it. But the concern, I think, from a trader's perspective as it relates to the trend is that RSI down beneath us here. We have continued sideways. Our RSI continues to make lower highs. Every chance we get into that 7,000, we make a lower high in the RSI. That is uninspiring to say the least. Doesn't mean that the trend has to end, but it lets us know that we are not imminently ready.
Okay, Tesla continues. Looks like it wants to push a bit higher. Tesla.
Consolidation window. We've basically gone sideways since 6,800 to 7,000. I think a break of that range is going to tell us a ton, obviously. Breaking out to the upside, we've got bullishness leading, and if we break to the downside, we've got bearishness
Tesla.
leading, and therefore going to take the directional move one way or the other. Many traders might
Tesla looks good. Like to see it close at the high of the day.
Because, obviously we've had different conversations about that 7,000 level, and it's like, you just can't seem to, kind of cruise through it or get through, bust through it at all, even though we've gotten through 50,000 on the Dow. I know Dow's a different type of index there, so it's interesting to see this. And to your point today, it seems like we're going to remain range-bound, especially in front of the economic data that we get later this week. But let's talk some individual names. You've got Tidewater on your list next. Let's dive into that one and what you noticed there.
Yeah, so essentially I went scouring the market looking for groups that were leading, and what I found here in Tidewater is one that's moved to a 52-week high here, right around 68. It happens to be a level of prior resistance, or I should say prior support, now potential resistance. It would make perfect sense for this one to maybe breathe a little after about a 10% rally above a breakout level that we see at 62. Essentially, though, what you're getting is a nicely developing longer-term pattern shift here with that 200-day moving average down beneath us in light blue. That's at 52. But what you'll take away from this visual is it was ugly for a long run here, and in the last 4, 5, 6 months, you've seen this really change, carve out a nice base, utilizing that 200-day moving average as support, and now we've made moves to the highs. So the short-term highs, I should say. So watching that $62 market level coincident with the 20-day moving average makes a lot of sense here from a short-term standpoint. If you can hold that up on any type of pullback, that becomes a potential zone for entrance for traders who are looking to participate in what could be a new bullish trend.
Yeah, it's interesting to watch this one. I had this one wasn't on
All right. Markets are just taking their time. Microsoft pulling back. Not following through today.
So the thing that might be leading a little to today could be an improving yield story. And of course, you've had any chance you get when you get a breakout, you take that lid of resistance off. Traders tend to think that that's an opportunity for a momentum-based play. And so this on a 2-year chart targeting that maybe that prior high at 168 for the bulls, that stands out as an area for a potential pause in the rally, a potential first layer target. And if you wanted to go higher than that, some bulls would say, if we really like this, let's look at the depth of this cup that we've broken. which was about 15 points or so. And if you take that 15, add it to your, or pardon me, 25, add that to your 150, that gives you about 175 as a potential for a second target if this does continue to run. So it's an interesting development, but what caught my eye more than anything was the action over that last week as we got outside of that handle portion of this cup in hand.
Tesla fading a bit. Microsoft back down to the morning low. Microsoft, no follow through yet.
Well, I'm actually going to throw us right back to leadership discussion quickly, and it's just going to be eyeballing the small caps of the Russell 2000 as it relates to the yield story. We have managed to continue to see Russell outperforming, generally speaking, and it does so in the face of a yield that was unclear as to whether we were going to get any pullback. But we got that consumer confidence number today that may have squashed some of the jobs report opportunity we could be seeing later this week, and that could lead to a discussion on whether rates do in fact need to get cut earlier than is currently anticipated. Which takes us out to the summer right now. So that story could absolutely continue to give a little bit of a push to the small caps. I think that bears watching.
Okay, great points about what to keep our eyes on. Kevin, always a pleasure to talk to you. And Kevin Horner, Senior Manager of Trading Services, Charles Schwab. So, hey, we bring in our panel to dive into Coca-Cola released its latest earnings today. What those numbers tell us about the state of the consumer. We'll be right back.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest.
Tesla, yeah, just sitting here. All right. Datadog having a good day today. Datadog from earlier this morning, that did fade a bit from the high, so profit taking just below the 50 and the 200 day. Marriott also at the highs. Marriott gapping up. Shopify had earnings. Shopify gapping up off the highs of the day, off the best levels of the session. Shopify, if you're interested. Trade Desk. That was up today too. Trade Desk off the low, mean reversion. NXP Semiconductor. NXP Semiconductor up big today. We got Robinhood tonight. Don't forget Robinhood. I currently have a July call spread, 115, 120. I'm protecting it, making it a long iron condor by buying a put spread down below, 80.75. That expires on Friday. So cheap protection, short term, could work both ways. Could drop tomorrow and then bounce into mid-year, which would be fine with me. Prefer it just to jump. I like to see earnings jump. They did start the prediction markets, so that should help bring in income. It's only the 10th of February. They just started rolling this out in February. Lulu also turning up, forming a base at the lows. Lulu may push higher. Watch retail stocks. On semiconductor, also looking strong, breaking out the new highs on semiconductor today. Take Two. These are all most actives. You can find these on your list on Thinkorswim. Just make a list, a watch list of the NASDAQ 100. Very easy to follow. Axon, body cams, etc. And back to the S&P, trying to do something here, S&P.
So consumers seem to be willing to pay up for perceived healthier items or premium beverages, but other areas you saw some pullback. What does that tell you, or what does your data, how does it correlate to the trends that you saw in Coca-Cola's results?
Hi, Diane. So good to see you. Thank you so much for having me. So what I see in the social media data is that there are plenty of discussions about Coca-Cola and all of their products and categories. So over 3.5 million discussions from consumers around the general brand category and not even the specific products themselves show us that this is a very strong signal for Coca-Cola as a brand at a brand high level, signaling a very, very strong sentiment among consumers. But in Q4, what I did see that customers specifically called out are actually issues with the formula. So a lot of companies by the formula were present, and 4% of discussions were primarily coming from long-term drinkers. So about 2% of the same consumers explicitly mentioned that they're noticing a variation in carbonation. And that actually goes back to what you just said, which is that they're moving to different brands across the category of Coca-Cola. And I did also see a recurring trend that I see across pretty much every beverage company, and that is GLP-1. GLP-1 related conversations in the context of
Markets have gone to sleep, not doing much of anything. We just rattled off the top 10, look very strong for today. At the moment, we have 323 stocks advancing on the S&P 500, 323 out of 500. The Qs, 57 out of 100, 57 out of 100, so 57%. And IWM, 750 stocks advancing out of 2,000. 1-to-1 up-down volume, telling you to expect a doji spinning top. If we get any kind of movement, it'll be towards the end of the day when dealers are closing positions over the next hour or so. They generally do that in the last half an hour. Robotic stocks are in play. HSAI, brought to our attention by Mr. Turchini. That's rising back to morning highs. Okay, that looks good. HSAI, Chinese stock, robotics. Okay, making new highs. This is the 60-minute 20 EMA. Pullbacks to the 20 EMA that get bought, put your stop underneath. You notice the 20 EMA is above the 20 EMA on the daily as well. That's for reference. That dotted line is reference for the 20 EMA on the daily. You can see we've changed trends recently. And over the last 3 to 4 days, moving higher.
analysis that I did covered specific GLP-1 transition from basically the carbonated drinks to the healthier drinks. Now, this is also another relation to what consumers see in relation to their health, and it's basically plastic packaging, which emerged, Diane, as a very clear negative. So they see, consumers understand that being healthy not only relates to your weight, but it also relates to the packaging. And around 5% of consumers also criticized plastic and recycled bottles, with many basically claiming that this negatively affects their health. And that's why they're transitioning to the other products that you mentioned earlier, including water and other beverages. Now, despite all of this, I do have to say that I agree with the fellow panelists, and Coca-Cola still continues to be a very, it functions as a very powerful brand. It is very memory-based, related, and nostalgia brand. And from an investor,
Tesla.
the conversation I analyzed, basically
Tesla trying to get above this 20 EMA on the daily.
Coca-Cola is a very much a long-term buy, with, again, some concern very much tied to those macro factors.
Datadog.
Like the weakening dollar and just
Datadog had good earnings this morning, dipped a little bit, but it's above the 20 EMA. So any dip that gets bought, watch for the next bullish candle, put a stop underneath 129 if that happens. Apple was above the 20 EMA, so this is a good condition here. Either this gets back above the 20 EMA. I wouldn't do it now, but next hourly candle close above this. Watch for it tomorrow. Then you can put a stop underneath 271, 272, something like that. Microsoft. Okay, not quite back to the 20 EMA, so we'll look for a bounce. The next bullish candle, I would put a stop underneath that. If you don't have a position in Microsoft, you're thinking about it. Big issue is that the S&P 500 is in a sideways pattern. You can see it on the 20 MA 60 minute, just chop back and forth, back and forth. We're closer to the top of the range than we are to the bottom of the range. We could pull back and be completing the cycle of what we've been doing since late December, all of January, just back and forth. Hopefully we can break out of this and get above 7,000 in the short term. All right, Chevron turning back up. Chevron. Okay, Chevron, a good example of the 20 EMA in action. It dipped briefly at the, in the morning. It dipped briefly, but buyers stepped up, pushed it back above the 20 EMA. A lot of people have difficulty negotiating a stock, buying a stock that's already ripped quite a bit. I wouldn't suggest buying Chevron here. But once you're in it, just keep using the 20 EMA as your stop. I have the 180, 185 call spread. Looking for that to push a bit higher. If it does, makes it the 185, then I'll roll up again, take some of the profits off, and roll up to 185, 190. Again, tonight we have Robinhood earnings. I have the 115, 120 call spread. I chose to make it an iron condor with a shorter expiration on the put side, expiring on Friday. Okay. Robinhood. So let me show you what I'm doing here. Okay. So basically I have 120. I'm long the 115. I'm long the 115. So I bought the 115. I've sold the 120. That defines my max profit. So I'll color that red. Oops, red. Okay. And I also decided, well, let me ensure that I'm expecting this to move higher for earnings, but let me go ahead and buy a put spread I bought the 180 and I sold the 175. All right. So this is a long setup. If it drops, I make money. If it pops, I make money. I have July. I have this position as July. Okay. And then I have this one down below as Friday. So it's much cheaper, as you might expect. Friday expiration. Okay. So this is Friday DTE. Note RSI is trying to rise. Stochastics MACD. It's already pulled back quite a bit. Got a feeling Robinhood is going to do just fine. Earnings. Condor. Okay, so that's for tonight. Hopefully they beat and we jump back here towards the 200 day. Get a nice gap up would be huge. Only have 5 call spreads, 5 put spreads. If it starts to go higher, maybe, I don't know, maybe I take some profits and do something a little closer, 10 call spreads or something like that. Okay, it's 3 o'clock. 3 o'clock. All right.
Hasn't really changed. There's been a lot of churn under the surface and some big churn, obviously, in software. Bitcoin, right? There have been some breakdowns in beta. There's been a lot of give back in the growth trade, but the market broadly has held up.
Okay, S&P is trying to go here. S&P is trying to go. Still trying to move higher here. VWAP is overhead. Dealers will be closing positions in the next half an hour or so. So we'll look for any kind of indication which way they need to close. Okay, we're talking 0 day. All right, 0 day. We're right above this support level. Now we have no resistance overhead in the short term, 0 day. See how far we go with this. Maybe we get a bounce. Maybe we get a bounce. Okay, earlier, you can see what was here earlier. Okay, much more overhead earlier. Gradually through the day, we just faded, and all those positions overhead were taken off. Okay, one of the other chips that are up quite a bit today, well, I just saw a Taiwan Semiconductor out of the corner of my eye. Taiwan Semi. Taiwan Semi breaking out again. That's on the watch list. TSM. Okay, just got rejected again.
mean, obviously, you're not going to hit record highs, and you're not going to go 50K on the Dow and have the equal weight move to a record high. We're not buying America, but to Lauren's point, there is a lot of opportunity elsewhere, and the net flows into
Chevron continues. Chevron.
Yeah, and international equity funds. So back to my earlier point, right? Investors are still looking for risk assets, so I think that's a good sign. Risk appetite is healthy. I actually think emerging markets have the better opportunity this year than developed markets, and that's where I would be putting my money. One of my calls this year was for China again. I think that still becomes an opportunity as this race, the AI race, continues. I think China is a big player in that.
Brazil's been ripping too. It's like blowing everything away.
Yep.
Year to date already. I think Brazil, we were talking about our halftime.
Let's take a look at the ETFs that we like. SCHD, flagging. SPHD, SPHD also flagging. SPHD. That continues. SPHD. Lots of electric generation. We've got pharmaceuticals. Con Edison breaking out. We got very cold weather lately up north. Some of the consumer staples like General Mills. Okay, PFE breaking out. PFE. That was I think I put that on the watch list. I was looking at it anyway. Pfizer. Did I put it on the watch list? I was thinking about it. No. Pitney Bowes, PBI. Yeah, let's go take a look at the watch list. Let's see what the watch list is doing for the week. Watch list for the week. All right, so AAOI grinding higher. Apple, little fade. Boeing, just sitting here with a credit spread, 225, 220. It's doing just fine. Okay, S&P is dropping off here. What are dealers doing? Are they closing positions, pressing this lower at the moment? Okay, back to the watch list. Bank of America, the banks pulled back a little bit today. Caterpillar, new high. Campbell's Soup following through. That's a pretty cheap way to play consumer staples, Campbell's Soup. It doesn't move that much, about 70 cents a day. It's already up 40 cents. Campbell's Soup looking for more follow through. Campbell's Soup. Chevron, as we already talked about, energy's doing well. Dycom Industries, inside day, Diamondback Energy, range bound, FedEx flagging at the highs. JP Morgan pulled back a little bit. Lockheed Martin at the highs. These are all from the watch list. Mondelez is pushing above the 200-day. Monster Beverages trending, but off a little bit today. Same with Northrop Grumman. Pitney Bowes grinding higher. SCHD we just talked about. The maritime shippers, bulk tankers like Scorpio continue higher. TK grinding higher. TK tankers. Taiwan Semiconductor breaking out to new highs. Okay, that looks good. Taiwan Semi. You could sell some put credits on Taiwan Semi. S&P is doing nothing but spinning top right now. Mm-hmm. CCCX, okay. CCCX turning the corner. Churchill Capital. CCCX. CCCX. What do they do? I don't even know what they do.
Moynihan added that if you were to divide consumers into three buckets of low, middle, and high earning people, they're all growing just at different rates. And he reiterated the need to not look at what consumers say they're going to do, but what they are actually doing. He said consumers are
CCCX on the move.
and they are being careful while also preserving the ability to spend money on travel. Wells Fargo's CFO
CCCX, Churchill Capital.
he said consumer spending is up year over year every week, noting consistent spending across debit and credit products there as well. And he said they're not seeing any systemic deterioration across the portfolio, Scott.
All right, Leslie, thank you very much for that. K-shaped economy, strong consumer, part of the Marriott story today as well. Shares are surging after their strong earnings report.
SPHD, we've been in this one since 2014. Back in January, I did take some of this off and put it into SCHD. Both of these looking pretty strong, pretty extended now. Looking good though. If you have investments in SCHD or SPHD, SPHD pays a monthly dividend in the last week. SCHD pays quarterly every 3 months. SPHD, okay. S&P 500 still just sitting here doing nothing.
Lights up these shares or not, we'll have to see, Scott. All right, good stuff. Robert, thank you. Contestant, thanks to you as well. And of course, Leslie Picker. Now we go back to the panel. What, Lauren, is your takeaway from everything that our reporters said versus that retail report? Feels like these are more important than that. Hearing from the CEOs, seeing the earnings reports rather than, as I said earlier, backward-looking holiday read.
Yeah, I think that's right. And one thing that I think is really important to consider about the K-shaped economy is that in this economic cycle, we are seeing the upper income segment of consumer spending a disproportionate amount of the money in this.
Micron, a little lower today, Micron.
The idea that really it's about what folks are doing, not what they are saying.
JP Morgan pulling back, starting to bounce right now. The banks were off today. They've been up as of late. All right, Microsoft making a new low here. Microsoft back to the 20 EMA. Microsoft back to the 20 EMA, so it needs to bounce. Microsoft. Okay, Caterpillar, CAT, Caterpillar, flagging. Okay, materials, XLB, Still looking very strong. Materials. Let's go see what the materials group, what might be lingering there. Materials. Okay, let me do this. Let me edit this group and turn them all to 60-minute charts. Okay, let's look at these now. Okay, all these materials looking good. Air products following through. Allegheny Technologies. This is the materials group. Avery Dennison, not so much. Ball Corp, that's been on the watch list last couple of weeks. Ball Corp continues. Ball Corp. Bemis and Butthead. CF Industries, the fertilizer group has been on a move for the last few weeks. Okay, so that got through the 200-day. We mentioned this a couple of weeks ago. Cleveland Cliffs, DuPont rising, looking pretty good. DuPont breaking out. DuPont, DD, kind of a boring stock. It does move about $1.30 a day currently. DuPont is up 229. DuPont probably follows through tomorrow. DuPont, DD, DuPont, breakout.
Exposure to both Bitcoin and Robinhood, which is why she joins us now. It's good to see you. Let's take Robinhood first. What are your expectations? I mean, the stock's come back to earth. What does that do for your expectations going in?
Yeah, I think Kate summed it up. Just to start with earnings, the street is expecting
Dow Chemical, DuPont, it's DuPont. Eastman Chemical. Okay, these look good. Eastman Chemical breaking out. EMN as well.
Well, go ahead. I mean, if you have three.
So number one, I mean, buckle up. Robinhood is now allowing short selling. So just like more volume, more stickiness. Number two, the Trump accounts or the Gershner
Ecolabs.
Gershner for those, go online.
All these above the 20 EMA. FMC Corp. Freeport McMoran. Freeport McMoran. Okay, that looks okay. Freeport. International Paper. International Paper. Bolting higher. What does Weyerhaeuser look like? Weyerhaeuser. Okay, Boise, Cascade, BCC. Okay, so Weyerhaeuser looks pretty good. Okay, let's look at the 60-minute. Weyerhaeuser. That's trending. Recently above the 20 EMA over the last week. Volume looks good. MACD stochastics looks good. Let me take a look at Weyerhaeuser. Where did my Weyerhaeuser? Wow, all four metrics red. Yikes.
What about on Bitcoin before I let you run? You own the IBIT, right?
Yeah. I mean, yikes.
International Flavors. Lionel Bessel. These are boring stocks, but they are definitely in play right now. LYB, Mosaic, fertilizers, Mosaic.
I'm not sure about a V shape, but I do think you can add to the position here.
All right, being closely watched every single day. Bryn, thank you so much.
Newmont Mining. Okay, Newmont looks pretty good. Newmont Mining, NEM.
Hi, Scott. Well, shares of BP falling almost 6% after the British oil giant suspended its buyback program, instead deciding to use the cash to strengthen its balance sheet. BP's rivals, including Chevron, Exxon, and Shell, have continued their buybacks even as lower oil prices.
Nucor Steel, NUE. Owens, Illinois. I've never traded Owens, Illinois. PPG, Praxair, Sealed Air Corp, Sherwin-Williams. Okay, Sherwin-Williams. Vulcan Materials, VMC. Okay. That looks really good. VMC, Vulcan. Vulcan Materials looks good. Okay, so that's materials. Industrials look good. Industrials also look good. Today, where's my industrials? There we go. Industrials. Okay, let me edit these. Select those all. Change that to 60-minute charts. 60-minute open close. Okay, edit chart list. Okay, so these are trending. You can see, wow, what a trend, huh? Boeing, trending. C.H. Robertson, consolidating. Carlisle Group. Carlisle looks interesting. Carlisle. Okay, breaking out. All these material stocks and industrials breaking out of Bollinger Band squeezes. Okay. Microsoft, profit taking on Microsoft on a push. I got a feeling they're accumulating shares down there in Microsoft. They don't want this to take off too fast. So it's probably going to base down here a little bit longer. Today is day 9 after earnings. Volume is mostly bullish. MACD stochastics turning, so we should see a follow through in Microsoft. And I need a little bit more patience, however. Okay, energy stocks also look good. So Carlisle, CSX, rails, industrials, transports, part of the industrials at one point, and then he spun them off. They decided to segregate the two. Caterpillar looking okay. Centos, okay, Centos, you know how Centos works. If you're a new member, you want to see Centos moving higher. Why is that, Vinny? Well, Centos is a economic barometer of sorts. They have over 1 million customers worldwide and growing. Worldwide, 1 million customers. They sell corporate identity, rent corporate identity programs. You might see their trucks around town from time to time. Cintas, C-I-N-T-A-S. Okay. Okay. You see these trucks around? Okay. Cintas, corporate identity. Why does that matter? Because when this is moving higher, it's giving you improving conditions because these corporations are buying or renting more of what this company offers. So you want to see this turning up. This is closer to a bounce, a low, moving higher above the 10 EMA weekly. This is good for the economy. That should match what we see on industrial production. Industrial production should show a similar chart. It does. It's showing a dip that's turning back up. RSI is rising. Momentum is bullish. Okay. So this is why you watch Centos. Cummins International, they make engines for trucks. Danaher looks good. John Deere is trending. John Deere is trending above the upper Bollinger Band. This is another economic indicator. Okay, if you look at the Dow Jones Composite, DJA, this should be rising. Okay. Dow Jones Composite is another thing to keep an eye on. We look at this every weekend during the weekend video. The reason why we watch this is because these stocks form what's many people call the Dow Composite Dow theory. All right. So when this is rising, these companies are doing well. Okay. You got the industrials that produce products. You got the transports who get it to where it needs to go. And you got the energy companies that fuel the transports in order for this feedback loop to complete. Dow theory, 65 stocks in this particular index. Okay. So there's a lot more stocks that fit into this category. But whenever you see the Dow Jones Composite Average, DJA, moving higher, this is bullish. This is not bearish. Intraday is a different story. Dow Jones Composite. John Deere, Delta Airlines, the transports. They deliver us from city to city. Eaton Corp, Emerson Electric, Equifax, Expeditors, Fastenal, FedEx, that's been on our list. FedEx, looking for that to flag and decide what it's going to do next. RSI showing muscle. Strength of trend is persistent. Okay, so we can see what's working. We can see what's working today. Dark green in the lower right corner. Okay. Materials, real estate, utilities. Okay, Datadog, Mastech, Masco, Marriott, Hasbro, all of these are up today. Hasbro, I don't remember the last time Hasbro was up 7.5%. Hasbro, HAS. Okay, big move on Hasbro. So there's a lot of stocks that are moving. Okay, a lot of stocks are moving. IYT, the transports, those are at highs. So you got to focus on these instead of the sectors that aren't working that well right now. Financials take a break today. They'll probably be back tomorrow. The banks, KBE, KRE. We got 30 minutes to go. KRE taking a break. Regional banks, KBE, the S&P Spider Bank ETF. Okay, that's at the highs. XLK got rejected at the 50-day. Semiconductors above the 50-day, above the 9 and 21-day. Semiconductors look fine. Taiwan Semiconductor, one of my favorites. Been working pretty well. Okay, what's NVIDIA doing? NVIDIA, not much, NVIDIA. But others are doing well. On Semiconductor, NXP Semiconductor, higher. Marvell. Okay, Micron and Marvell, the two M's, those are fading a bit. ARM Holdings, ARM, nice follow through today into the Kirby. Okay, it's not going to go up every single day. We got June options on this one. Okay, Dow, DOW, DOW. Dow Holdings. Okay, that looks good. Large open interest. All right. 35 call. Looks good. Dow. Looking at the 60-minute, Frano. Trending. I wouldn't buy it up here. I would wait for a dip maybe tomorrow. Dow Holdings. Okay, man, I can't believe how we're just sitting here doing absolutely nothing for so long. Just sitting here. Not even seeing the proverbial dealer closing positions. Normally we would see at this time of day, we'd start to see some sort of movement, either up or down as they close positions. Nothing for now. All right, so it looks like Paramount Skydance, Paramount Skydance, they're looking to sweeten the offer for Warner Brothers. They also agreed to pay a $2.5 billion termination fee to Netflix if they get the bid. So I don't know. Netflix is just kind of sitting here doing nothing for the last few weeks. Actually, for the last few months, not doing anything. Eventually, Netflix is going to get going again. One stock I've been paying attention to that I'd like to add to it. I was going to do it today, but I said, you know what? No hurry. This has been in a downtrend for the past 4 months. This is Oracle. Oracle, looking for more upside. Okay, Oracle looks good. Okay. Intel was down this morning, right? Intel? I think Sundog was talking about Intel being lower this morning. INTC. Yeah, so that's just the middle of the Bollinger Bands going nowhere. Okay. Intel, while it's down, if you're long and you bought the high of the day yesterday, you're probably not very happy. But basically, it's in a range like this. Okay, you got this little pop above, you got the little pop below, and we just kind of sitting here doing nothing. If it moves back to the 50-day tomorrow, I might sell put credits if it bounces. Intel, which would be a bullish setup. Intel. Okay, again. Datadog, Marriott, Shopify. Datadog had earnings today. Nice pop. Marriott also popped. Shopify. A lot of stocks are moving. Just got to be careful where you put your money. Okay. Consumer staples fading from the highs. Healthcare, not much of a bid. Utilities catching a bid as the Fed potentially cuts rates again to lower the debt burden for all of our U.S. treasuries that are sold around the world. That needs to be lower than the income that we get from tax receipts, among other places, the Treasury. So lowering the interest rate would help the Fed and keep the U.S. economy from faltering. If the Fed does raise rates, it looks like fixed income investors are looking for yields that they find in the utility sector. All right, so they're getting those fixed income utility yields. You can see the volume coming in. This is probably going to follow through. Consumer discretionary, trying to bounce. Retail, back to the 50-day. Software, okay, a little fade off the high, but software, way oversold. Okay, S&P 500, equal weight, S&P, equal weight. That's at the highs.
Professor of finance, better known, of course, as the Dean of Valuation. He joins us now. Welcome back. It's nice to see you.
Nice to see you too.
So how do you assess the market here with this? You know, the Dow's at 50K. The equal weight, as we said, is at record highs. We always talk mega caps. You know, they're down from their peak valuations, I guess. So what do you see?
I think the most surprising thing is how well the market has held up as the mega caps have given up some of their market cap. When you go back to since last September,
Mega caps, that's what he's talking about right now. Bouncing a little bit. Dow Industrial Diamonds above the upper Bollinger Band. Doji.
So in many ways, I think that's actually a good sign if you're an investor, that the rest of the market seems to be pulling its weight.
Is it remarkable to you in any way that software has had the destruction that it's had, and the market in the same vein is continuing to move higher, as if the biggest pullback we've seen in what feels like 20 to 30 years isn't having a broader impact?
You know, I think software has had a great run. I mean, high margin, high growth, but technology has life in dog years. At some point in time, you start to run out of space. And at least for a segment of software, the B2B software, I think AI is a real investment, perhaps an end game for some of these. Can you make it as a business? Again, it's the fact that the rest of the market has stepped up and filled in the gap that software has left behind is the most surprising news story. It's not that software is down, but that the rest of the market is up enough to cover that shortfall.
Sure. I mean, I think, you know, we've talked to investors who are thinking very much about this, how stocks are being punished before the actual maybe reality has set in for what may lie ahead because of the AI disruption. I want you to listen to what Brad Gerstner told me of Altimeter last week out in California, and we can react to it on the other side.
When the rate of change goes parabolic, and that's what we're seeing today with AI, there's a fog of war. And when there's uncertainty in the markets, discount rates go up and multiples come down. People start questioning terminal values, and that's why valuations change even before numbers change.
Right? I mean, his point is we are not necessarily sure what the real impact is going to be on a lot of the software names that are down a lot, but we don't care because we're so worried. We're willing to sell them enough now, and their valuations have come down as a result. They're paying the price for what may be, what might not be. We just don't know.
No, I think if you live on growth, you die on growth. I mean, we rewarded these companies before they went up, before you saw the revenues go up, on the expectation that not only would they grow 20-30% a year, but the margins would stay high. So I'm not surprised that you see the flip side of that is when those expectations come down. And the one point I disagree, it's nothing to do with discount rates. It's got everything to do with the expectations of growth and margins coming down. And they're going to come down at the same speed that they went up. So I think, you know, it's the other side of the flame. I mean, they benefited from the plus side when things were going well, and now they're seeing the other side.
What do you think of what's happening with Bitcoin?
You know what? Bitcoin can't be valued. It can only be priced. It's demand and supply, mood and momentum. And it's through its entire life. This has been the Bitcoin story. The problem, I think, for Bitcoin is the narrative is broken. Initially, at least, if you're a paranoid person, you say Bitcoin is the place where I want to be. Because when I don't trust authorities, it's going to go up. It's going to be but I think that in 2025, that story broke. Because even as gold and silver,
Doji, Doji's everywhere.
Bitcoin initially went up, but then gave up value for the year. So I think right now the Bitcoin story, even for advocates, is I'm not sure.
S&P, no, doesn't seem to be any concern by the dealers. Closing positions, it's starting to push this lower. S&P is pushing lower at the moment.
And Bitcoin doesn't seem to hold up its side of the bargain when it comes to those. So unless it kind of rediscovers some new property, it's going to continue to lose that appeal it might have had to people who are scared and want to go someplace where they think they're safer.
What do you make of what's happened with silver? Because it's different. I mean, there's some industrial use to it, but it was acting like a meme stock. Were you sitting there in awe like most everyone else, both on the way up and then the rollover?
But both gold and silver.
Well, the rollover in silver had to do with the CME changing the margin requirements. So silver dropped 33% a week ago. So not surprising. All right, what's GE doing? GE just kind of consolidating here. GE, RSI grinding higher, MACD stochastics rising, volume look okay. Looking for GE Aerospace to push a bit higher. Tonight we got Robinhood earnings. Robinhood with earnings tonight. Okay, Robinhood. I'll delete this one. Robinhood. Robinhood with earnings tonight. I already have the calls. I have a call spread for July. I'm looking for this to just grind higher over the next several months. If we drop short term, I have a hedge for now, 80.75 put spread for, I think it was like $100 per. Let me just look here real quick. I bought those for, the puts were $95. $95 with the potential payout, $400 per contract maximum. If we hit 75 tomorrow and we hold near 75, or if we hit 80 or 78 tomorrow and start to head towards 75, volatility will expand even more, and I can make, possibly $500 per contract. So it's $100 to make 500. This is just a hedge. If I didn't have the calls, I probably wouldn't trade this at all because these moves have been so big. Like Datadog was up, 20% this morning? So selling premium right now, the markets are acting very erratic. Doesn't make sense. They're moving beyond the expected move. So that's not when you want to be selling iron condors. So that's why I'm buying an iron condor instead. Okay, this is still up 15%. It was up close to 20% pre-market. Frano was talking about this one. So I don't want to sell. I don't want to sell when the markets are not acting like the Black-Scholes calculations tell you it should. You sell a 20 delta, but in reality, you're selling a 30 or 40 delta because the volatility is so high and the markets are moving outside expectations. I don't want to sell premium in that case. I'd rather sell like with Boeing. I sold put credits. That was listed here in the spreadsheet that we've been keeping. Okay, so going to the positions tab right here. Okay, so I took this one here, Boeing, $860. I'm just waiting. Wait this one out. Boeing is rising now at the 21-day moving average. It starts to move a bit higher. I might roll this up for a little bit more credit. Try to get this to around $1,000. So I'd rather wait until after earnings. Once we have earnings the next morning, early on, we'll see where prices stabilize, and then maybe sell some put credits or some call credits. But iron condors right now haven't worked. This one right here, Microsoft, stung. That was because the software group just got way oversold. And even though Microsoft's bouncing today, I don't like selling iron condors right now. In the future, yes, it's better to just take the day after earnings and sell at that point. Okay, so S&P still sitting here. Oracle. Okay, I want to add to this one eventually. Oracle, the volume starting to look good. MACD, stochastic, RSI rising. So I'm looking for Oracle to get back to the 50-day for starters. I don't think Wapner buys his ties at TJ Maxx. Maybe Bloomies. Maybe Bloomingdale's. Okay, with 13 minutes to go. 13 minutes to go. The markets aren't giving much. They're just sitting here doing nothing. No. Bloomingdale's.
I'll use my standard line. Bye. See you later.
Your standard line with me. Okay, bye.
Oh boy. All right. So yeah, the markets would love to have seen a third day and a follow through. Would have loved to seen a third day. It's okay. Markets are not going to go straight up every single day. We're in a range. You should expect that while we're in this range, we're not going to. we'll get a confirmation on any breakout. I'll put it that way. All right. So we're in this range right now. We're in the top of the range, top half of the range. Okay. The lows have been respected. We got the 50-day right below at about 1.5% from the all-time high. Okay. We've made a 3% pullback recently. And we're just banging back and forth, back and forth. If you look at price action, there's only like 6 or 8 of these candles that had any kind of big move intraday. The rest of them are pretty small ranges, and people are getting chopped up. If you look at the 60-minute time frame, you'll see what I'm talking about. Okay, let me go to the SPY. SPY on the 60-minute. Okay, look at this price action. Okay, there's only been a few days where price action's been pretty bullish or pretty bearish, so you made some really good trades during the day. They just keep trending. Otherwise, most of these trades have mean reverted back into the range and just chopping people up. So until we get a trend going, it's going to be hard to do anything. So a trend, of course, on the weekly, still hanging in there. So what I'm getting at is taking less risk on. You know, don't come in every day and put more on. Here's TRBCX. I took this off a few weeks ago. 3 weeks ago, actually, because we started to lose the 10 EMA. So all I did was take 15% of this off the top. These are gains from back over here in 2022. Okay, the end of the bear market. Okay, this is up over 100 and what, 75%? TRBCX. I think that's what the number was, 175% at the high. So my suggestion is, just take it easy. You don't have to like trade all the time. 175%. Yeah. So when we got into this back in 2022, I don't know how many of you are still in this. Okay, the S&P just dropped down again. I don't know how many of you are still in this, but I have a position in TRBCX that I've been adding to, getting back in, getting out along this move higher. The volatility has been picking up a bit. So I took some of this off. Okay, we're 8.5% off of the all-time high, as you can see. Somewhere around in here, maybe down in this 186 zone, we might bounce. I might buy some more TRBCX and lift this back up. Presently, I'm about 70% across several different ETFs, TRBCX, SPHD, SCHD, RGAFX, VGT, and a few others in my long-term account. I'm about 70% invested still, 30% cash. I'm going to keep the cash for when we finally get a bounce, a higher low. Hopefully it's before we get back to this 185 on this particular ETF. But I'm up quite a bit from the low, over 170%. We're giving back some. That's just part of it. So when on this pullback is when we're going to start to add at some point. You can already see that we bounced on the weekly. All right, so Google is selling bonds globally. They're looking to gather up 30 billion. Google, I guess to help finance the AI going forward. Okay, Palantir turning back up. Palantir.
Intraday high on the Dow, 50,398 was the high set today. What's your take on this market? Yeah, doing just enough.
Okay, we got 7 minutes, 30 seconds to go.
I'm really, I guess, impressed by the way that the S&P manages to hold its ground, considering some of the volatility underneath. I mean, the software ETF is like 1.5% off its high from this morning. Microsoft's down $10 off of its high, and so you see every single day the market has to kind of put together a rescue package, and today it's defensives and rate sensitives doing some of that work. I still think, treading water gets you tired, and that might be what this market is doing, but so far it's actually being translated into a steadiness and a resilience with the majority of stocks working. Equal weight again making a high. So you give it credit, but also be aware of how much it's taken to hold us here.
Bond yields down, probably on retail. We got a jobs report coming. Not great things expected. Be interesting to see how the market reacts to all this.
Yeah, it's just kind of moderated its idea of exactly how fast we were moving in the economy coming into the year. Flattening of the Treasury curve just a little bit out there. Maybe it's tweaking the Fed outlook, but I think it's mostly market investors just kind of repositioning and getting into a neutral state before we get the jobs report, before we get CPI. I think mainly the market wants to get through that and continue to focus on kind of earnings and whether in fact this rotation into the old economy stocks has played out or has a little more to go.
What do you and Mel tackle in overtime?
Not sure exactly. The cable went out. I don't know what happened there. All right, so right at the closing bell. All right, folks. S&P 500, a little short covering, did drop off a little bit. So it's a good thing I didn't. It's a good thing I didn't take any trades at the last minute. Okay, so I'm going to hang out for Robinhood earnings and see how that goes. Okay. Mic check, mic check. All right, so the stream is back. I'm going to wait for Robinhood earnings to come out. Hasn't happened in a while. Okay, so whatever they were doing. Okay, Robinhood. Let's see. It's not Oracle, Robinhood. Robinhood. Okay. Okay, Robinhood. HOD. Robinhood. Okay, Robinhood. Extended hours. Let's see what we do here. Okay, we had a pretty decent day today. All right, if you're just dropping off, I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is 4:02 p.m. The markets did, the internet did crash like within the last 3 minutes before the close, unfortunately. It's a good thing I didn't have any trades on that I needed to close immediately. All right, watching for Robinhood earnings.
February of last year. What does that suggest to us, Joe, about how retail investors are feeling right now?
I think you need to kind of break the retail investor into a couple different cohorts here. So, what it says to me is that they're continuing to buy the dip. It tends to be more on the active side, though. So the traders over investors are feeling a little bit more bullish. They're more active in looking for opportunities. The perfect example would be the number one stock on the list, Josh, and that's Microsoft. So day after earnings come out, stock pulls back 9%. We see about a $1.7 billion kind of net inflow into the stock from clients that are looking for those opportunities. Now, what's interesting, in addition to that, is it's been through some different sectors. So IT has been the biggest lift that we've seen in terms of the stacks, but that hasn't always been the case, right? So October really through November, I saw some heavy selling in IT, and then moving a little bit more towards that rotation trade that you've seen in the market over the last couple of months. But in January, that's when we saw kind of our more active investors come back in, look for some opportunities, maybe some of those beaten up tech names. And I think that is what you're going to see kind of going forward. And it's been a little bit of the history of the stacks. Is they look to buy the dips and kind of sell the risk.
And these popular names, and you mentioned Microsoft, the most popular ones, though, Joe, to your point there, I see Microsoft there, I see Netflix, Tesla, Amazon, Nvidia makes the cut. How would you break down the common theme, or maybe themes joining those?
Sure. Let's go back with Microsoft, 9% pullback off earnings. Amazon pullback off its earnings. These were names that have been kind of heavily bought and sold. Tesla's, I think, the perfect example. That really is something that our clients love to trade. When it gets to the top of the range, gets closer to the 52-week highs, it's usually number one or number two on the sell list, right? But then once it starts to kind of pull back a little bit and They recognize an opportunity to buy in shares 10-15% lower than where they were trading the previous month. They're buying those in. So there's a lot more activity that's going on than maybe what we've seen in the last couple of years, at least in the last few months on the sell list. AMD, here's what was interesting about that. So AMD came out with earnings post stacks, right? So stacks for January ended on the 30th. At that time, AMD was really close to a 52-week high. So that was right before earnings came out. They sold it. They sold it into strength. I would not be surprised as we start to look over the weekly stacks, if that starts showing up on the buy list once that stock pulled back a bit. So that's kind of a common theme, right? They're looking for opportunities when some of the more popular stocks pull back.
Yeah, I see net selling here, the list. So AMD, you got Lisa Su's company there. I see Costco, Boeing, CoreWeave, and Alibaba. Talk about the Fed just for a minute, because I just get your take there, Joe. They did obviously, of course, they decided to pause last month. Do you think that decision, how, if at all, do you think might have impacted retail investor behavior, investing?
So I'm gonna hit that from two angles, if you don't mind, Josh. So I think right now the Fed's in a little bit of a difficult situation, with the retail sales number that came out today, showing that there's some weakness with the consumer, and it really comes down to jobs, right? This idea that if I'm not feeling as comfortable that I can move or find something where I can get a higher paying job or even maintain my job, I'm probably not going to go out and spend on the discretionary items that I might have in the past. And so I think that they're at this inflection point where they have to decide, do we really want to kind of slow down the growth in order to preserve this burgeoning job market, or the job market that's pulling back a little bit. So I think that's interesting. Where I think that leads over into investor decisions is once again, I think it kind of goes back to the cohorts. We look at generational trading and investing as well, in terms of versus traders and versus investors, active versus non-active. And what we've seen is on the generational side, Gen X continues to kind of pull away from Gen Z in terms of how much they're buying and their bullish sentiment. I think a lot of that has to do with the fact that they're probably in the top 10% in terms of the consumers. And I think that they feel a little bit more comfortable in the fact that they have that discretionary income to spend and to invest in the market. I think if you were to look at Gen Z, there's probably a little bit more concern in terms of their discretionary income and whether or not they're going to have jobs in the push of AI. That's kind of what we hear, at least when we ask for the attitude from the survey as well.
As a longtime market watcher at Jar Jar, I'm interested to get your thoughts on another thing. We live in this world now where every morning you can wake up and you hear, hey, good news, AI is coming after your industry. It's coming after your vertical. You're saying, happened in wealth management today, right? I'm not asking you to comment on that headline, Joe, that news, but more broadly, just your thoughts about how, as an investor, Joe, you're just supposed to navigate that.
Really interesting question, Josh, and I think that you have to look at it in terms of maybe what inning are we in. I think a couple of years ago it was really just determining, okay, who are the chip makers that are going to benefit, and where as an investor do I want to kind of plant my flag and say these are the people that are going to do really well? Because here's the thing, they've done well. The stock has done well. Those stocks have split. You know what they are. You know those names, the AMDs, NVIDIAs. So now I think investors are looking to see, and they're saying, okay, where's the inference model? Or, what's the next leg in this trade, and where can we find some value? A couple months ago, it was looking for energy providers for AI trading. And, there'll always be another step, and there'll always be another sector or industry that investors are going to kind of look towards. It's just a matter of identifying that early enough.
Joe, as always, great to have you on the show. Thank you.
Thanks.
Let's turn now to some earnings. As Ford's fourth quarter results, they are just hitting the wire, and y'all find some surprise, some rain. Join now to look at the numbers. Surprise, what do you think?
Yeah, fourth quarter results are here. Missed expectations on profit and a lot of losses coming from the EV business, right? So Ford reported Q4 automotive revenue $42.4 billion that matched estimates, but adjusted EPS came in at 13 cents versus 18 cents expected, or 19 cents, or 18 cents expected. This EBIT of $1 billion versus $1.16 billion estimate. Now, For the fourth quarter of the full year, it reported a net loss of $11.1 billion and $8.2 billion respectively, which reflects the special items like those EV charges it took back in December. Ford's full-year adjusted EBIT of 6.8 billion came in the forecast of 7 billion, and this estimates of 8.86 billion. Now, that Ford Model E EV unit reported a $4.8 billion EBIT loss for the year. It's an improvement compared to 2024, but still nonetheless.
All right, we're down to $80.
Looking at it, 2026, Ford projects.
Okay, so depending on if we hold down here or not, those puts will protect. All right, so we see what we got going on a hood. All right, folks, have a great evening. Take care. We'll see you tomorrow. Ciao.